Good morning. Monday, March 20th. We get set up here. A lot of news on BBBY on Friday. Very interesting what's going down. Credit Suisse maybe going down. Might be the next contestant on The Price is Right. Get a little Yaz going here. Good morning, big hugs. We get set up here a bit. You get to look at that deep discount on BBBY. Hit right at the 75 cents. What do you know? Morning, Barnstormer. Good morning, Jim. Level 2 order book. Yeah, I can do it. There we go. Even sticky it. Morning, my next pair. Just sharing here on Twitter and then Discord, and we'll get into what's happened. Okay, what do you guys What do you mean they haven't other common shares? Isn't the float 335 million? It's outstanding shares. Are we counting on forward to be less shares as well? Oh no for the first split. Registration date. Greek central bank governor. Uh-oh. Greece is getting back into it. Governor sees no danger of new banking crisis in his country. Uh-huh. Not good. Greece is still... Yeah, they're still having effects from many years ago, I think. GME CEO Terry Duff has said the fears over crime in Chicago are preventing employees from returning to the workspace. Wow. Too much crime to even go to work. UBS shares erases losses after falling. Sam Alton of OpenAPI said a little bit scared of OpenAPI's chat GPT creation. US Treasury yields reverse course. 10-year yield up 4.5 basis points at 3.4%. Nearly 60% of institutional investors said they have used Reddit for investment decisions. Oh my goodness, you see that? That's terrific. Terrific. 60% of institutional investors have said they use Reddit for investment decisions. Let's shake hands on that tweet. Oil futures turned positive. Yeah, how's my natty gas? I know it's kind of grinding up a bit. sold off. A little concerned with the demand destruction hitting nat gas too, so I might not. And the fundamentals conflict with the TA. It's kind of I don't like that. But we still do have that inverted head and shoulders, and it's still at a super cheap price. But just like oil coming down because of energy, loss of demand for energy might be hitting that gas as well. Yeah. Morgan Stanley's Michael Wilson said the stress in the banking system marks what's likely to be the beginning of a painful and vicious end to the bear market in U.S. stocks. Pretty positive looking. Down a touch. Let me get locked in over here. Morning access, morning AC. AC, I heard you getting banned on BP show like within the first 10 minutes. That was great. Are you selling out? I mean, this isn't normally when you'd sell something, but it's your call. Morning, Jason. Okay, my chart's up. Dang, that gas flushed those gains. I've got about 7 minutes. Here's your L2 on BBBY. BY's had quite a roller coaster since Sunday. Sunday was up like 0.4%, and then it dropped to like 0.5%. Now it's back up 0.2%. Maybe we go to 5 today. I don't think it'll go 5 without news at this point. 5 is pretty long ways. I mean, maybe. Not in one day. One day would have to be from news, I would think. Over the course of a few weeks, a month or two, yeah, it could make its way back up without news. I think, let's see, we're at 86 cents. We're down here. So if we open below 88, we're at all-time lows. Not sure we will or not, but so you think like $5 and move now to $5 is that's almost 500%, right? Because we're like $1. So that's now becoming a more and more significant move. Pretty ambitious. The likes, yeah. Thanks, guys. Seven thumbs up. I appreciate it. 7 likes. US is up 4%. Nice. 75 cents was a real all-time low. Yeah, I guess if you're counting pre-market. Usually when you count all-time lows, all-time highs, it's not extended hours. I mean, I don't at least. Credit Suisse and UBS could benefit from more than 260 billion Swiss francs in state and central bank support, a third of the country's gross domestic product. Wow. No one knows how they'll go. Best feeling right now at the 9. See, I even thought about opening up puts on Credit Suisse. I'm like, the IV was insane. It's already so low. Could have made something on it, but you probably wouldn't even made as much as you wanted to on that move. GME is up 0.5%. Probably get another leap or two today on GME. Then maybe wait till tomorrow after earnings to get any shorter term stuff. Your shorts would have to cover if reverse split happens, which causes a mini ramp up, causes small hedges you're going to cover it slow period. Nothing's for certain, Jan. They're, you know, it's possible with a reverse split if they change the QSIP. Yeah, possible. I mean, the most evidence we have is just price action from other reverse splits, and we have seen other reverse splits squeeze that were most likely heavily shorted. So, yeah, if they want to vote, then any lent shares you have to call back. You have to recall. So basically, take them out of margin, take them off lending, and recall them. So that could cause somewhat of a price action. People lending their shares want to vote. I don't know. Definitely a lot of people lending shares, institutions, whatever. Since the borrow rate's insane. That's like easy, safe money. However, holding the asset of Bed Bath & Beyond seems very risky if you're reading mainstream media. So that's where it keeps me bullish, is like all these institutions that have bought it and haven't been selling. I haven't been seeing any selling. I'm just seeing buying. And then insiders. What insiders have been selling? You know what I mean? Like, no insiders have sold anything. So when you look at that, it makes me think this is just fake, basically. The price to scare. Like, they see the value and insiders are holding or buying. Dang, that cash is flush there. Yikes. Your all-time low every week. No, this 88 was the all-time low. So yeah, if we don't hold above 88 and we just kind of keep grinding down, then yeah, we'll keep making, and it keeps going lower. That's going to be all-time lows every time it goes lower than the last low, of course. But this is the first time we've hit in the pre-market at 75 cents, which that was the price. What was 75? Oh, they have to have it above that for the obligation of the credit facility, I believe, for the loan, or the yeah. I don't know if that includes extended hours or not. Powerball numbers? Powerball? You know these things. Yes. Earnings on tomorrow. Yep, we'll stream GME earnings tomorrow. What the hell? Higher problems? No, Ace wanted to go in heavy a couple days ago, and I think he exercised some patience, so that played out good in his favor, because now he's got a lot better price. If you did want to like go in heavy, I would wait for the momentum to shift, like fully shift. You know, it's gonna be you're gonna know it's gonna be ripping, and there's gonna be FOMO, and that's when you can jump in. But by the time you catch that, you know, by the time you're like, okay, this is it, you know, it could already be at $1.50 to $3. You know, it's gonna keep just grinding up. You're not sure if it's real, so that's where kind of the scale in at different price points and supports makes sense. But yeah, each one of our reversals have not become a real reversal yet. So, and then even on Friday, that got an engulfing candle. Ding ding. All right, we're open. I'm curious on today. I feel like BBY is probably just gonna go up today. I don't imagine it breaking the 75-cent low, but we'll find out. Surprised I'm not margin called on this account. Probably am, I just didn't pick up the phone. Yikes, that's a big down 3,200 on those shares there, just in one account. Yeah. Yeah, they haven't started liquidating me, so double my shares. That is neat. Let's see if that lasts. Okay, let me shut off the Yaz for a bit. It's kind of moving up here a little bit. So wild ride in the morning on the futures. Yeah, all that's done. Third day quitting. Nice. GME took a flush out of the open. SPY kind of wicked down. Tesla's coming down pretty heavy. Foxy up 50%? Can't tell. People say buy in now from 5. Yes, they do, because it's at a really good price. Only gotten better. The price has only gotten better. The fundamentals haven't gotten worse. I think they've gotten better in a sense. I mean, them paying off the bond, the interest on the bonds. Yeah, no one's sold. I mean, I don't know. I haven't seen anything that's made me want to sell at this point. Other than margin calls. Thanks for your thumbs up, guys. We got 13 of them. Pretty good for open. Hello, Julian. Welcome. We had a good weekend. GM. GME calls are down a bit. I guess I did get some, yeah, I already got some short-term ones. I actually have 8 of them. Okay. Those are going to get squashed tomorrow after earnings. Is Boxy up 46? Hard to tell. Everything's still sleeping. Kodak's still in pre-market. Wake up. Cashback schemes maybe 40, but well done, Furs. So BY just holding up at that low. We'll see if we barcode today. We might be in the range where there's enough volume and buying support that we're not going to even barcode. I don't know. There's a pretty good bounce there on it on Bed Bath. Yeah, it wouldn't be good if it just kind of barcoded down here. That would make me think we probably are gonna potentially break this low. But yeah, news of reverse split. Algo's caught it and sold it off, so it's making it back now. We're down 9% on it, so that's a basically normal day on BBY at this point, down 9%. It's just it's coming from the bottom up, which is good. You want that? That's good. Gap down, and the momentum is up now. Yeah, good weekend for sure. This week, $1. Yeah, I don't think we want. Yeah, I think we'll see $1 maybe in a couple minutes. SPY's pumping up here. There's not a lower level. It's literally this 75. I mean, 88 was all-time low. And look, where did we open actually? We opened at an all-time low. Wow. Okay, so it opened at 86. And we've just been green shooting out of there so far. Morning, Daisy. Good morning, Rally. Morning, everyone. Thanks for joining, guys. We had a good weekend. SPY just wicking down. GME coming down with it, down 1%. GNS really down 8%. This thing has just been selling off the last week. Okay, back down there. Oh, all right. Beachbody's up 8%. Up is up 3. XXII, I like how it's holding up. Yeah, 7.9 million in the first 4 or 5 minutes. First 5 minutes. Heck yeah. There you go, Ace. Yeah, glad you waited. Did you get any pre-market? Might have another chance. I mean, it could come back here. But yeah, even here is better. It's 94 cents. Is great. Gotta go with the scale in. When I'd like ramp up the scale in is once momentum has shifted and, you know, like I said, once you see huge volume and huge price action and you still have more you want to put into it. You know, that might not be till it's at $1.50 and ripping, or $2 even. But averaging into something that's $2, it's you think it's gonna go to 4 or 5, like it's still a good buy. Thanks for your likes, guys. Got 19 of them. Well done. Good morning, Christopher. Yeah, you can buy pre-market, man. Oh no, Ace, you gotta have that enabled, dude. If it's not, GME is coming down a lot. SPY's also getting wrecked here. Draw any levels. I don't really have margin, I don't think, to even play SPY right now. Jeez, UNG. This is moving with the market too much. I don't like it. Dang it. Okay. Tech's getting smacks, banks are ripping. Yeah, I mean, Tech's had that crazy rally last week. You might have to enable on your brokerage. I don't know what you're using, you can ace, but just on your order you have to specify extended hours and you can buy it. A bullish on their plan. What plan? We haven't even had earnings yet. I'm still thinking we're double bottoming here on GME. So even if earnings aren't miss expectations, which they very likely could, because expectations are usually pretty lofty, I still think we're probably gonna rally. Yeah, I haven't opened up any more cash secured puts on BBBY. Closed those ones last week. I rolled my 1.5s. Get that open. Snails up 5%. There's SPY wicking. Maybe even a morning purchase on GME. Leaps. Let me look here. Wait a minute. Oh. Wow. Okay. Great companies for squeezes. Sounds good, BX. Thank you. And a crucial moment for BAB. I don't think it's so cut or dry like that, Julian. I mean, if it's not going bankrupt, I think this is tremendous value for a company that does over $1 billion in revenue in a quarter. Given this number's going to come down with all they closed, but even with their debt, you know, this, you should be able to turn this around, and just the name value of Bed Bath & Beyond is still huge. So to be trading at a market cap of 107 million, oh my gosh. Yeah, I mean, it's basically priced for bankruptcy right now. So yeah, the reverse split thing, it doesn't seem like they're doing it for compliance, because they haven't even been under $1, and then even after you go under $1, you have to be under there for like 90 days, and then they'll send you a notice, and you have to be under there for so many consecutive days after it even starts. And then if you come above $1, even just for one day, it resets another 90 days. And then if you are below it for, I think it's a 90 days, maybe it's 180 even, then they'll send you a notice, and then you have like 180 days to get it above $1. Then if you do it, then it resets. I mean, stocks trade under $1 for literally years. Like, and then after all that, you can file an extension. They'll almost always give you an extension. So them to do the reverse split, thinking, oh, we got to do it for compliance before they've even been under $1, and they've it seems like there's something else, some other reason for the reverse split. BY calls are barely red. Interesting. Thanks for your thumbs up, guys. You hope GME rallies into earnings? We've got, like, what, 48 hours, I guess, for that to happen. Maybe a little bit. Same BBY helps GME. Yeah, I only see them move the correlation happen during high volatility times. Yeah, sorry, I'm trained there. Oh yeah, so volatility. Fundamentally, I don't think they all have to succeed or do well. I mean, I think AMC can go bankrupt. I think BY can go bankrupt, and GME can still flourish, or any one of the number. But when it's actually trading the swaps, I think we see the correlation just during the volatility. So I don't think BY needs to be saved in that sense for GME to succeed, or vice versa. But could be wrong. IV and options. IV is basically your premium. So if you've had a car insurance or home insurance and you kind of health insurance, you're paying a premium for that insurance, and depending on your liability risk, you're going to pay a higher premium. If you're 90 years old and diabetes and heart problems, you're going to pay a higher premium from health insurance than if you're in your 20s and super healthy and active. So higher IV, higher premium. A little bounce there on everything. BY hanging out. Yeah, BoxD is up 50%. Good for you, BoxD. Yeah, BY holding up. It's down 10%. Just another walk in the park, I suppose. The risks are as favorable to people holding shares before their eyes. And just on the surface, yeah, typically reverse splits are are seen as bad and are because it's usually because the stock needs to get up from $1 and out of non-compliance. That's almost the only time that stocks reverse split. BY was not out of compliance, hasn't even touched out of compliance until just today. Now they announced it. So this is a little different factor. Reverse splits do other things, and it's the reason why it's on the checklist for basically squeezing illegal naked shorts. The checklist that the GNS CEO has come up with based on his experience with Wes, I can't remember his last name, but the attorney that goes after all this illegal naked shorting, and as well as they've had experience with the I can't remember the name of the company they hired to basically look into their stock and just basically see what's going on with it, just examine it. So this is GNS, the CEO of this. This is one of the things on this checklist was reverse split. And I think it's probably because of QSIP change. Also because you could get a recall of shares, whereas a forward split, you don't get a QSIP change. I don't think there would be even a time when you recall shares. And with reverse splits, yeah, normally just the need to do them is again to get out of $1, get above $1. But lately we've seen quite a bit of squeezes around reverse splits. Before reverse splits, on the day of the reverse split, even 2-3 weeks after the reverse split. Pretty big moves. There's been 3 or 4 use cases, I think, in the last 6 months, not even less than that. So one of them's COSM. That one was kind of an anomaly though, because I think that was from a brokerage failure. But there's 2 or 3 others you could look at that are kind of interesting. And that's all to say they're not necessarily going to reverse split. We haven't even voted on it. They just said we're going to vote on it. That's all they've announced, is that we're going to have a shareholder meeting. We're going to vote on a reverse split sometime in the future for some amount of shares. They didn't say the amount of the reverse split or when it would even be. So and they even they specified that they want the right to not do it, and that they just want the option to. So it seems like it's either they're being very proactive about being ready to reverse split if they're below the threshold for too long, or there's a bigger game plan with the reverse split. in what they're trying to do, which would decrease liquidity, which helps cause a squeeze. Once you start getting price action, it can rip because there's less shares being traded out there. It puts it at a higher price, which is more attractive to investors. If you have a carve out or some kind of carve out of a company, you need to have the share price has to be at a certain amount. You can't do that when you're down here at these prices. So there's lots of speculation on or other reasons why potentially they would be doing a reverse split. Overcharge you? Oh, because gringo. Gotta quick go to those Mexican pharmacies. That's hilarious. $30 fee for restructuring reverse splits in each share. I've added up. $30 fee for restructuring. I don't even know what that fee is. Is that like just for one reverse split? It's pretty funny. Thanks for your likes, guys. We're at 22. We can do it. We can do it. It's 9:45. We're getting there. Board members are down big. I'd assume they'd work to get this turned around. Yeah, absolutely, absolutely. And they haven't sold. I mean, institutions have been buying. BlackRock, like, wasn't BlackRock took a bigger stake last week? I mean, the big money, the smart money sees value. Like, just follow that. NVIDIA has AI day tomorrow. Is that a new thing for them? Attack them on all fronts. Yeah, I hear you, AC. I hear you, man. Yeah, no, it's different, but probably most of the stocks you're looking at are considered high IV. West Christian, that's it, yeah. It doesn't necessarily lead to more dilution. Reverse split for those points I said. Every reverse split on each trade, $30. I mean, that's not that much money, I guess. If that's a big fee, probably shouldn't be trading such risky assets, or at least have a very small portion allocated. You gotta pump those numbers up. So percent IV, if just look at SPY, or like, you know, this is more normal. This is actually pretty high right now because the volatility has been insane. But this is 45%. That's on a daily too. If you look at like a monthly, at the money, 26%. So under 100% is much more normal or low or normal. Over 100% is high, I would say. And if you look at like stocks that aren't volatile, you can really get a sense of low IV, what low IV really looks like. So here's AT&T, it's 26%, 24%. So that's a good way to make good money though. If you think there's going to be a big move on a stock that doesn't normally make big moves, that's how you have huge percentage gainers. Like this huge move on AT&T. If the market maker wasn't pricing this move, you could have made huge on that. Anytime you're buying options, you're basically trying to tell the market maker he's wrong and you're right, and that's how you can make money. Everything had a bounce there. GME is now positive. SPY is positive. Big reversal on GME. Right, I was going to buy leaps. Let me just see what the price is at on these. I've been scaling into January leaps, 20 price, or 20 strike. Another one today. I've been doing like 1 or 2 a day, basically. Morning, Dawn. All these members. Members don't hit the like button. I know, I don't. NVIDIA doing an AI day, I've never heard of that. Or is it getting a kind of a pre-pump on that? Pre-dump on that. No, these have had such a crazy rally. Makes sense they're gonna sell off some. SPY's moving up here. SPY's moving up. Get rid of these drawings here. We're breaking. Yeah, that broke pre-market high right there. As far as futures, I'm not sure if that's up to look. Kind of a level down here. Need nat gas to rally. It was up like 2% pre-market. SPY's moving up. Is this from banking pressure probably? Okay. Hold this high over here. GME with a pretty big green candle there. It's up 1.5 now. Morning, Grunt. Marnin. Gas is down. San Francisco officials are weighing giving Black residents $1 homes and $97,000 a year as part of its possible reparations plan. The recent 9% pullback in the S&P 500 has pushed the spread between bulls and bears down to negative 29%, the most negative since last October. At the same time, active managers have quickly reduced their liquidity exposure from 85% down to 42%. Xi Jinping arrives at Kremlin for informal meeting with Putin. Huh. Wonder how informal that is. BBBY setting up a little 5-minute bull flag. Still haven't seen it come down at all to the lows that we had pre-market. On March 8th, the spread between the 10-year and 2-year Treasury yields hit negative 1%, the most inverted yield curve since September 1981. 7 trading days later, the spread narrowed to negative 0.42%, a 65 basis point increase. This was the biggest 7-day steepening we've seen since the 2001 recession. We're not in a recession, guys, don't worry. When the puppet masters say we are, that's when we are. And that's probably when we're about to be out of it, if not already out of it. Yeah, I saw that box D's up 58%. Big gap up in the morning. Yep. BBBY coming down a little bit. It's at 90 cents, 12.5% down today still. Rescue funding at risk. Is this because of the price? Why are they saying this? Oh, yeah. Alpha wants my money. We're not in recession for sure. For surely.
A lot of customer flows both ways on banks, particularly the side of the too big to fail. I think a lot of these institutions are also getting new accounts opening. The information that we're lacking is just the interim updates from companies. We've had very few give those. And so I think as we see information in early to mid-April, it's going to really clarify that this was less traumatic other than the feeling and the stock price plunges, but I think the actual movement of deposits has been less than folks realize. And I think also there were changes intra-week.
Kind of holding out up here.
Friday, the the 10th and
It
Monday,
wants to break the
the
high
13th.
again.
We're starting to come back by Wednesday, Thursday. I
See where
think there's
BBBY
new accounts
bounces.
being opened as customers decide to split up their activity
Opened
among
at
2 or 3 banks. All of that is in flux right now, but it's not all a bad thing. There's actually a lot more positive out there. That's where I think we just don't have the full information. But there definitely are going to be changes. There's no question. We're going to rethink liquidity, and I think to some extent we're going to rethink capital, because some of the held to maturity losses that we were all kind of ignoring because the accounting rules let us do that, we're now going to flush those out and be thinking about where bank portfolios and values are going.
Yeah, is that confusing?
Chris,
I just scheduled tomorrow's earnings call stream for GME.
My pleasure.
Appreciate it. Chris Marinac joining us from Janney Montgomery Scott, the
I guess
Director
that
of
could
Research.
be confusing.
Really good context there from Chris. So, Tom, let's do some trading, Mr. White. Good morning. Looking at options here. You're looking at JP
lower,
Morgan.
but yeah.
You're looking at Goldman. JPM is up 2.5% this morning. Goldman's up 2.5%.
But yeah, scaling in again.
Well, I think you still
or
have
just
to
waiting for momentum and then jumping on it then and being fine that you didn't get the bottom.
In the near term anyway. Problems like this in the financial industry don't go away quickly. So you've got to keep that in mind. So I came up with a couple different strategies here in these names. And the one that I want to look at first is JP Morgan. Pays about a 3.15% dividend yield on it. Pretty solid balance sheet as far as the big money center banks. They've got a bunch of inflows over the last couple of weeks here due to the crisis that we're going through in some of the regional banks. So looked at a relatively conservative strategy here where I'm going to take advantage of that dividend yield if you want to own the shares. Buying for every 100 shares of stock you buy in JP Morgan, sell one of the April monthlies, the 130 strike calls on these. You're paying roughly a debit of about 122.80 on this one. So you're buying the shares, you're buying them at a discount because you're selling that upside call against them. And that call is basically at the money now. So you're capturing a lot of option premium on that. Your break even is going to be what you pay on this, about 122.80 over the next 32 days. That's about 3.5% below the current share price. Now, the stock has moved higher, so maybe you're paying over 123. But the whole concept of this type of strategy is if you want to own the shares, you want to collect that dividend, get paid to wait by selling that upside or at the money call against it. Now you're capped out on some of your gains, but then you do have that ability to roll that short option as you get closer to expiration, collecting more credits, lowering that break even, almost paying yourself to hold the shares.
Okay, got it. All right. So this is a way to be a patient trader.
Right.
Collect a little income.
Paid to wait.
Similar situation for Goldman, or you got another example?
Yeah, another example. It's same neutral to bullish type strategy, but you're giving yourself that cushion to the downside on a strategy like this. So I looked at selling an out-of-the-money put vertical. Now they have got earnings on the 18th of April, so I kind of want to avoid that event risk, right? We could get some pretty scary conference calls on those reports. JP Morgan does report just before Goldman Sachs also. So I looked at out of the money put vertical going out to that April 14th weekly series, so you'll avoid the earnings event in Goldman Sachs. Selling the 295 put and then buying the 285 strike put. So you're creating this $10 wide neutral to bullish put vertical. You're collecting roughly about a 260 credit on that, maybe a little bit less. So that takes your break even all the way down to 292.40. That's nearly $20 below the current share price. So while your gains are capped out on what you sell this vertical for, at the same time, you're giving yourself a better probability of success because that short 295 put is so far out of the money from the current share price, which is over $310 a share.
Okay, all right. So a little bit different here with the put vertical, selling some downside, looking for the stock to hold firm.
Yeah.
Okay, well, it's doing that this morning as Goldman got pretty close to those lows from the fall last year, but JP Morgan stayed quite a bit elevated. Both stocks up today as we've got strength in 3 out of the 4 indexes. A change of pace here with the Russell up and the NASDAQ down.
SPY's ripping up there.
As interest rates are pushing back higher a bit.
GME moving up a bit. Nothing on BBBY yet. Nothing
Market
crazy.
Very specific, rewarding certain banks, punishing others. Maybe
big buy order.
Move past the worst of this.
That's GME? No, that's
Maybe
BBY.
that gives Powell the clearance to hike 25 bips.
It's actually weird. Yeah, look
Trade
at
some
the
tech when we come
look at
back.
the L2. It looks totally
Morning trades
different.
in
Totally not
Micron
barcoding today.
shares taking a breather after a
Look at the
big
orders.
close to last week.
Buy's ripping there. What's going on here actually? Is this way fewer? Is that GME or is that BBY? No, that's BBY. Yeah.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
That leg. Eyes ripping up there. Yeah, I don't. Isn't this weird?
When traders tell us how to make
This seems
thinkorswim
strange to
even
me.
better.
Wasn't it before like a ton on the bid and the ask? Yeah, we were having orders for like 500,000 shares. That's really weird. I don't understand that. I don't know if that's good or bad. Yeah, BBY is back at basically where it opened. The L2 is very peculiar though this morning. It's not barcoding at all. Look, now there's nothing on there. What the heck? What in the world? Whatever was going on the last 3 weeks is not there right now. And my put options if a merger happens? I mean, if they expire in the money and you have auto exercise on, you're going to be short those shares. Financials ripping SPY. Which cat is out of which bag, Furs? You saw 3 to 4 orders. Look, now they just appeared. But look, the amount, the size is so much smaller. We had an order for 500,000 shares last week at $1, I think. And then a lot of the bigger orders were, maybe it's just because it's still early, I'm not sure. But then even with our smaller orders, we didn't see any 45 share orders, I don't think, or 1 or 3. Is this thing now like trading legit and not all dark pools? No, I think it still is. TRF. There's NASDAQ, I think, NAS. So that's legit. Huh. All-time low is 88. Well, now it's this low that we made today. 86. Today it made the all-time low. Yeah, we're at it. We did it. We succeeded. I think maybe we actually should have gone short instead of long.
Too far away from than 3.5%, it seems like.
Yeah, I think this probably for me more of a indices rallying back kind of story. I think for me, treasuries have been more a byproduct of what we're seeing here in terms of safe haven type tendencies amidst some of the concerns we saw. Treasuries get bought up, so yields have come off significantly. Now, don't get me wrong, I'm not discounting what we've seen in terms of the shorter end of the curve, the 2-year expectations for the Fed, the shift from 50 to now, 25 basis points for Wednesday. But I think a big part of this, again, you can chalk up to investors looking for a safe haven. We saw that with the VIX. We've seen that with Bitcoin in many ways, one could argue, kind of that shift and ultimately yields coming off. Now, I also am not making too much of this US dollar activity here either, Oliver. This is a market that's waiting for more information. You've got yields, which have been in a bit of a range, and you've got the dollar, which has been in a bit of a range. Basically going back to, well, we're talking mid-February, we were trading 100 to 106. I don't want to get overdone to the downside, but we'll call it 101 to 106. We're hanging out right around 103, right in the middle of the range. And then as I look at the dollar, it's been kind of teetering around the 50-day moving average. It's not providing a lot of conviction. If you look at a daily chart of the US dollar, you'll see not only is it holding the 50-day moving average, but last year's range, 94 up to 114, and here we are right back in the middle around 103. You can see, again, there's just not a lot of conviction after the move up we saw and then the move back down. We're just kind of hanging out right around this level. So waiting for more information. We'll get some this week from the Fed.
All right, Wednesday. The potential dollar mover. Thanks, Ben, for the look, host of the Futures Show. Let's talk some stock specifics as tech is kind of dragging its heels this morning, Kev. Microsoft's got an interesting note out.
A lot of
trying
inflows.
to buck some of the downside. And,
Yeah, the L2
Amazon's
does look,
down,
it definitely looks
Alphabet,
different.
Netflix,
I'm not sure if it's good or
Apple's
not.
down this morning.
You
If
mentioned
it was
an
ripping, I
interesting
think it'd
day
be
when
good.
you got the Russell up so
It
strong
seems
and the NASDAQ
like it might be
soft
good, but
up
we're
today,
not seeing any price
pretty good
action
news
that
for
would
Microsoft today. Evercore
confirm that.
came out, raises their price target from 280
The
to
orders are much
295,
smaller.
keeps outperforming. It's
And there's
why
also a
they
lot of
talk-
small
why they
orders
did it
themselves.
is really interesting. They talked about Microsoft.
So maybe they're
introduced
not
this,
grouping. I don't know. I don't know what's going on.
Copilot that basically takes their suite
Billy
of
Suss is
products
back. Nice.
and injects AI into all of them to kind of supercharge
Billy Suss can stick around.
their products. And so you
can't
think, if you think about their suite
spew
of products
worthless
and you
drab
put
and not
AI
respond to my
into them,
questions
they all
or,
get a little more interesting, like Windows and
you know,
gaming and cloud and server
bearish, just
products. Search,
be
how about
reasonable.
search with AI, obviously.
Slides coming down there.
Consumer Office, commercial office, LinkedIn.
Very
You put
curious
AI inject that
on
into all
BBBY's
of those,
L2
and
today.
they all get a lot
That is,
stronger, a lot more interesting. Then they came
I don't know,
out with
Donaro, do
news
you have
that
any insight on
once
what's going on the time and
they're
sales?
already making plans for the takeover of Activision.
A lot of
And what they're
NAS,
gonna
isn't that?
do
I thought that was
right now,
NASDAQ.
you have to admit, there's a duopoly right now with Apple and Google in terms of the App Store. Well, they're going to come out with their own App Store with all the Activision games on that App Store. So enhancing the Xbox experience and basically taking on Apple and Google in terms of an app store. So it's not showing up because the overall macro picture in the
Microsoft's
NASDAQ is
getting
soft
an
today.
app store? What are they saying?
Fairly positive
XD's
news
up
out of Microsoft and
76%.
a boost to 295.
That's what's kind of interesting, that it's so soft this morning.
Yeah.
Quite a bit softer than the NASDAQ. And it kind of makes me wonder if this AI narrative has started to get kind of well priced in here, because people have been going nuts over this narrative for the
They've all
last
had pretty good runs.
2
Look
months.
at the stock. They've had pretty good runs.
Right, so the highest since last fall, almost late summer for Microsoft's high last year. The stock's come back a good bit, and this is such an AI-specific note that you'd think if that were still the hot topic that the stock would be up this morning, but it's not.
Well, you certainly think that, you know, a microeconomic story on Microsoft like this, can it overtake the macro of the soft NASDAQ? It looks like, at least so far, and the fact that it's already run quite a ways, not so much.
You think that's telling us maybe if we're seeing the worst of the bank situation past, maybe the market's starting to think Powell's good to do 25? Got bonds selling off this morning.
Well, I told you this morning, I think he's going to do 25. And so I think, I think the overall calm in banking and what you're seeing in not only the big banks, but in the Russell as well, is taking some of the panic out of this market. It was already off its highs, but I think this is even more in terms of an easing of tensions. You know, I've always said uncertainty becomes less uncertain over time, and I think the overall banking picture is getting a little more clear.
Yeah,
I think the UBS news on Credit Suisse is another calming force.
Credit
It might
Suisse.
not be pretty, but it's resolving.
ECB's Lagarde says inflation is projected to remain too high for too long. This might be why the SPY is getting a red candle in there.
Over here.
Yeah, someone's got to do the wet work.
ECB's
it's ugly jobs, but
Extraordinaris. Don't see problems in Europe banking system. Rate hikes are mostly a story of the past.
It's messy. It's messy business.
All right, thanks for the look at the Microsoft note and the broad market. Kevin Hanks and Ben Lichtenstein. Let's bring in Alan Nuckman joining us from bullseyeoption.com. Alan, we got banks firm this morning. The NASDAQ slowing down a bit. Is this the market telling us it's feeling more comfortable about the situation?
Oh, I definitely think so. We've got the markets. If you look at the S&P, we're still holding above that low that we had on that Thursday when this all started. So
what are you doing,
it's been up and away. Positive week last week as we figure this all out. And look at the VIX. The VIX is down here at 25. So there's some positives.
But not to break through that.
Very few people are paying attention to is you can see a flag
just coming down with oil
breakout in technology here. That's kind of leading the way. Let's see if the S&P can follow.
Right now, it's trying to. S&P trying to follow the Russell. Up right now about 0.5%.
All right, BBY.
Some tech this morning. You got eyes on.
Kind of at the low here, getting close to it. It's down 14%.
Well, like I just said, the flag breakout in its continuation pattern is in tech. If you look at the NDX, it's a great setup and a great breakout. Let's see how it follows through. But there's a lot of upside potential there. So in the last recent weeks, we've talked Cisco, we've talked Intel, and they're up here near their highs, attempting to break out as well. So now I'm going back into the pile. We did the same trade in Micron in November and got a 50-60% gain and a nice move in this stock. So if you look at Micron, it's 20% off its 2022 top. And its PE is still 10. So we've talked about how
not really. It has relative strength.
A very cheap stock.
You know, it's kind of holding up, but it is still red candling. Yeah, it's a nice little pop. Yeah, it has good relative strength.
Is a super
might have a little bit of a pre-earnings rally
so looking
today, tomorrow. We'll see.
Latest low.
But yeah, this so far is looking like a
Thursday,
like back here now.
Finish the week,
just starting to get these kind of support being built before earnings.
6 to 9 month chart feels like it's stuck here.
We're double bottoming this time instead of RSI divergence.
But look at that same pattern.
But still same type of deal where it's even RSI divergence is kind of like a double bottom, but the second low is lower.
Flag is flying for sure. And now if it can break out of this flag, you have the same setup that you have in tech. So what I'm looking for
I'm going to be patient because there's going to be some IV crush from earnings.
Again, 50's at
but
super
we always
level.
Always could gap up with
money.
it.
Options trade for about 9 and a quarter, somewhere in there. It's got 3 months of time. A
Ulrich
75 delta.
von Lichtenstein.
Back, again, we're stuck in this range between 50 and 70. You pointed out. If we just get back to the top end of the range at 70, this option gains 100%.
How did Cisco survive as soon as such?
All right, so
Cisco does a lot
to make that move.
Do a ton of stuff.
You don't necessarily, of course, need it to break past that range to make money. Just need
to
get to $60, but it sure would be nice if it trades past 65.
BBY's getting kind of
low
here.
Positioning. So you can see the smile on my face because I'm happy to be back at work after watching all those games. That's not trading. That's not probability. That's gambling. This is probability. This is what we can control. We can control our risk. We understand our timing. We understand our probability of success. So this is a whole different game. I'm glad not to be watching games anymore for a couple of days.
Sounds like maybe it was a rough start to your bracket, Alan Nuckman.
Let's not talk about it.
It's casual Monday, huh?
Appreciate the
in front of your fireplace.
Okay. With the in the money call, Micron, Alan Nuckman.
Button up.
With the bullish trade here on the semiconductor. He's the chief market strategist.
Snails up 9%. MMAT's up 9.
All right, let's talk some ETFs.
NatGas is hopefully bouncing here. It looks kind of like it is. XXI is holding up.
Some of the main macro themes for this year.
Like to see this pattern repeat here.
In the ETF world that folks are looking for.
Got a bullish MACD crossover. Need a green over that 9.
Another way to play.
RSI divergence still there. Looks nice.
But as far as ETFs go, what kind of options you got?
BBY is up 1.5. sorry, GME. BBY's down 14.5 still. Basically back to where it was consolidating pre-market. Block order of 14,000 sales. Order being hidden by front running? I really don't know. I don't remember seeing orders of 3 on the L2 at all in the last like month or so. GME March 2023 2-year swap theory. Not sure about that specific theory. Yeah, I think TRF is like dark pool. Yeah, that's off exchange. So all these TRF is off exchange. But what's weird is the size on the bid and ask. Volume this morning was amazing. Yeah, look, we're at 19 million volume already. And it's not even been an hour. It's definitely tapered off. Well, not necessarily. There's some good volume in there. It remained too high, too long. More than 40% of all U.S. mortgages were originated in 2020 or 2021. That's insane. 40%. The pandemic drove borrowing costs to historic lows and triggered a refinancing boom. That's crazy. Yeah, I refied in 2021. So TRF. Oh, what line is this I have? Oh, this all-time lows here, the 88 cents. So it just broke through that low from IPO. Not gonna give up easy here. The new all-time low is this morning though. 86.01. See without extended. Yeah, 86.09. Yikes! This is crazy. Really, Jay Scott? All right, that would be neat. Believe it or not, buy the dip. SPY's coming down here. Open interest drop in XRT, similar to what we saw last March. It possibly led to the run on GME. Puts are dropping off on XRT with the actual chart of GME, which looks identical to last March, has me checked. Yeah, I mean the chart, it looks like last March for sure. I'm kind of slowly scaling in. Kind of waiting for earnings crush to get more options and shorter dated, but have been getting some leaps. Yeah, I can pull up the chart though that you've shared. That's XRT open interest versus GME price. This is put open interest. See. Yeah, so put open interest is the red line. And I think what XRT is red, and GME is yellow. Yeah, I see that put open interest dropping off crazy, just like it did here last March. Same with GME, I think that the yellow line here. All open interest? Oh, that's not good. Yeah. Could be getting it. I don't know why it'd be 2-year swap there. That's just 1 year, but oh, that was a different person saying that. Let's have a week. We're gonna have a week. You refinance your truck. There you go. Timer has no ending. They always have an ending. Call up open interest last March. A crick in my neck looking over there. Put it over here. All open interest. Yeah, that's true. It dropped off then also. What is it? They get to once you get a lot of like debit spreads opening up on GME, that's when it's gonna rally. Always when it's debit spreads is a play, the trigger to go long.
Risk manager for a year. Even the Fed failed in oversight. Now there's an investigation. Really high average account size, something like 16 times the FDIC insured limit. And so, you know, these banks had unique things that maybe the interest rate volatility helped to expose or bring out, you know, a little faster. But the economies the economy's fundamentals are a lot different than they were at the last Fed meeting. So there's plenty of leeway for the Fed to pause.
Okay.
Later this week.
All right. So running with that kind of framework here, that we've narrowed down the options into two likely macro frameworks for the Fed, where either they do pause or they just over tighten and break things further, as history tells us. Let's maybe go with the latter one first here. Let's say they over tighten and they break things, Robert. Do you see people preparing for that outcome, and how in your guys' product suite and looking at the ETF world do you track which of these frameworks is attracting money right now?
So whether or not they've broken something, it's clear that there'll be less credit creation this year.
Okay.
Banks are just not going to be aggressive lenders at this point. So that makes a case for a soft landing. But if they do break something, you know, the Fed completely stepping off the rate hike cycle, what's happened in the past? In 2000, the Fed paused, gold rose 55%. In 2006, the Fed paused, gold rose 230%. In 2018, the Fed paused and gold rose just under 70%. So these are prime spots for gold. Now, in a couple of those cases, initially during the crisis, gold dropped, you know, 5, 6, 7%. So we have to be aware that sometimes there are very, very short-term reactions that
I've known who's planning to buy, so they just de-hedge while also unwinding puts.
Yeah, go ahead.
In that
Bought
case,
shares.
you know, we do have an ETF, a gold ETF. It's a physical gold ETF. The gold's in a vault. You can go to our website. You can see the serial numbers.
My
It's
gold.
audited.
BBY's
attractive
kind
expense
of.
ratio, 17 basis
They might be
points,
bouncing on this low. We'll
2.6
see.
billion in assets,
Down
not a
15%
small
at
fund.
87 cents.
And so
Wow,
that's,
GME's just
an idea
holding up good.
for,
So yeah,
if the Fed
it's looking good
pauses.
for
SGOL.
for double bottom
maybe that's
happening.
Solid gold.
a big volume coming in the next.
Yep.
I don't know,
You've got
15
another
trading
one,
days.
That's
Big volumes,
also
big
in
moves.
Other commodities too. How do you see the non-gold precious metals trade related to this? Palladium, platinum. We had a guest on the other day saying silver is the best trade in the market right now because it's been sluggish. What do those knock-on precious metal trades look like to you?
So if we do get if the lack of credit expansion does some of the work for the Fed, and the Fed can step off the hiking cycle and still have a shot at a soft landing, there's some commodity fundamentals that really are getting masked with all of the bullhorn shouting about macro, and that is spare capacity in most commodities is actually very low right now. CapEx spending in most commodities has been low for 5 years. It's getting harder to open a mine, even if you had the capital. It's getting harder to drill a well, even if you had the capital. And so with China reopening, and I'm not sure why everyone expected China to reopen unusually quickly this year. It typically takes 2 months after the end of the Lunar New Year for activity to rise, and that would be the end of this month. You would expect to start to see some of that activity pickup come through, and China accounts for more than 50% of the demand for almost all commodities outside of energy. So, raising demand at a time where supply is kind of constrained is really not being talked about a lot, and so we just want to make sure that's on people's list of things to take a look at, because some of these commodities have tremendous supply problems. Palladium, 80% of palladium globally comes from 2 countries, Russia and South Africa, and it's not hard to see a scenario where we could see some sanctions on Russian platinum and palladium, and South Africa just has a tremendous electricity problem.
Very interesting.
200 days last year.
Look at that L2 is a one order we're seeing on here.
And
the time and sales doesn't look like it's different exchanges. It still looks like it's the off exchange.
Electricity generators that are over 80.
But the L2 is
years old, so
very odd looking.
What do you think happened to palladium over the last year here, Robert? How come it's done so poorly, even with
maybe since it's below $1 now?
Russia-centric
I don't
supply issue, and then now precious metals looking pretty firm overall. This thing's been left like way behind.
It has, and some of that story is around auto demand, and
got it.
Chip shortages, auto demand, but the recent data on auto demand is actually surprised to the upside.
You mean it's just been grinding up, man? Not going to spy at all. I mean, it's
sold,
not like squeezing or anything.
That's the annual rate based off of what was sold in January.
Still very subdued, but
people.
It's still fixed. Still looks fixed. I want to see it broken.
More expensive.
I want to see that this month.
And they put electric vehicles a little further out of.
But that said,
some of the
I guess volume this morning is on pace for basically the same as yesterday.
The increase in interest rates for auto loans adds $5,000.
So not bad. It has been increasing volume, as you see the last 3 days.
EVs.
Yeah, this is all supporting this repeat of March of last year, basically.
The next car I purchase.
You look back here, I mean, it's the same type of deal.
Interesting detail, because then it kind of fits
here it is. See, increasing
to
volume.
Why palladium is maybe
increase
more of a
and kind
Fed
of
pausing trade.
Slowed down, but it was still higher than it was back here.
Fed breaking something
kind
trade.
Kept increasing, and then
kind of got that economic connection to it, right? You don't want something to necessarily break. So
we're starting to see that increasing.
Robert, thanks for the walkthrough here, the framework, and we'll definitely continue the
looking
conversation.
good.
Thanks for being here.
Great. Thank you.
Absolutely.
It's been so long since it's looked broken, though. It'll be weird. It'll be weird if it just comes out of nowhere.
Stored gold. PAL.
Can happen. That's how it works.
If you're feeling of interest and want to buy the dip in a pretty ugly palladium chart, but a strong case made for it. Chartmaster standing by. We're going to talk about one of the big tech winners of the last 2 weeks. It's NVIDIA. This morning it's taking a little bit of a breather, though. We'll talk about an analyst note there. And then we're going to take a look at Kroger, which is having a nice morning after an upgrade to a buy in phase, doing the best of the
that gas
though,
hasn't
the energy stock.
really bounced. It's just kind of consolidating at the low there. Ahmed El Arian says unlimited deposit guarantee will be hard to reverse after SVB fallout. We're now in a different world. JP Morgan decision to write down Credit Suisse at 1 could lead to contagion for wholesale funding costs around the sector, across the sector. Most banks were paying 8 to 10% coupon costs in recent AT1 issuance. We expect credit investors are now likely to demand a higher risk premium across the spectrum. Cost of at-1 issuance could move up materially, potentially rise into double digits. I don't know what this at-1 issuance is. Decision to write down Credit Suisse at 1 could lead to contagion for wholesale funding costs across the sector. Trafigura says our traders in China are seeing strong demand pull. UBS mulls sweeteners to keep Credit Suisse wealth bankers. UBS Credit Suisse held town hall for wealth management staff. BBY's flushing down here a bit. Is that an all-time low again? No, we haven't. We haven't made an all-time low yet. 8609. Let's see. Kroger's like a grocery store. There it is. 86 even. All-time low on BBBY. Wow. Well, I mean, next support, if you want to call it that, is just these levels from pre-market. 85, then 80, and then 75. So seems like these might start getting tested. 85's next. This L2 is very interesting. I'm wondering if anybody has insight on that. Maybe it hit 75 cents. Maybe. Probably not today. If it does, I might be double topping here. Have anything to do? Oh, whoops. Dang it. Okay. Rise, City Market. GME's, oh, that's General Motors. Yeah, GME's up 1.3. See if this order for another leap gets filled today. 20 strike for January. They don't move very fast since they're leaps. I have April calls that I might sell out some of tomorrow before close if they're up a significant amount.
Now it's AI. Yeah, I could definitely see AI as being a
I don't know if Fry's still around.
Me again with this is that like it's what's new here. NVIDIA has been the leader in artificial intelligence, computing, and the power we need to create this stuff for a long, long time. So it seems like the development of the chat bots and the DALL-E stuff has really like gotten people hyped about the imminence of the products that could come from AI, but like NVIDIA's always been the leader. So, okay, that being said, I mean, you want to go to what is it, GTU Day?
GTU conference.
GTU conference, Rick. You want to go? I feel like we could have some fun there. We could nerd out.
SPY is rocketing.
Maybe.
3.5%.
We'll see about that.
We could fit in.
Are you calling me a nerd?
Yes.
No.
And throwing myself in the loop as well.
All right, all right. Well, the chart was interesting to me today for NVIDIA here because on the day we had this
Tesla's
big
building
green
an
candle,
engulfing candle to the upside.
+2
Wow.
standard deviation line, but we stopped short at a point that stood out to me because it was right where we had this gap right here. So this 260 level was a pretty logical
close the
point
shorts
to
on that
maybe
thing.
start looking for some resistance.
You can only
and
hold those
price to
for
back
a
off
very
and
short while.
consolidate a little bit here. So
GME high of the day,
cruising upward though. We've been up about
2%.
80% or so since we had these lows right here, and it's been pretty much just
80% up on the
we
video.
had a bit of a back off here, but we never really went too far below the yellow 21-day exponential moving average here. But you know, the move we had on Thursday looked significant here. So where do we start looking for some resistance then? Well, we've got this 275 price target that was mentioned in the note. They just reiterated it's not new. That's about 8% to the upside. But the real area that I thought looked interesting was 289, because not only is that near the old yearly highs, as you can see all the way over there with this light red dashed line here, that's about the site of the +3 standard deviation channel as well. They're right on top of each other. So that seems like a point where we could see
spot
some
like it's double
strong
topping here.
resistance, or at least
I don't have margin
stall
to
in
do
any upward
futures on
move
right now. I'm
right around that area there.
tied up with that gas,
RSI
but
momentum looking good here.
would
We
maybe
broke
take a
through
little
this
short
downward
here.
sloping trend line. At the same time, price was
Especially if
breaking
it's
out
in golfs.
above its old range here.
Doesn't look like it
we
is,
did
but
stop short of the overbought area. That would really be the next shoe to drop here for the bulls to really take control.
Interesting, we had this sort of bearish RSI divergence that didn't lead into any big sell-off. It actually went the other way.
True.
And the breakout here, you've got this level highlighted at 240.
Arizona has
I was
rise.
hoping you could elaborate on this section right here, because it kind of looks like we consolidated and then
Evitol's up
bounced
7%.
Yep, it's looking like perhaps we had a bit of a bull flag type pattern here, and then we broke above the old highs, and then it looked like we started to form a bit of a top near the 241 level. So we had a bit of a range that was established here, and then, you know,
Okay,
sure
annoying.
enough, like a soda bottle being shaken up, it burst above that area in question.
Okay, pretty good looking chart. Have to admit, a little bit of softness last couple days, maybe expected after that huge candle we got last week on the breakout. But at the same time, you know, a little bit of a lack of follow through here. We'll see what happens at the GTU conference. All right, a bunch of folks looking at some gaming rigs and boxes with the cool lights and stuff. All right. So what's next, Alex? We got some positive notes
Boxes
out
with the
on
cool
these other
lights.
companies that are actually responding. We got Enphase up big. You got Kroger up. Let's start with Kroger here. It's a little bit of a smaller move, but it's still an upgrade.
Yeah,
Stocks
it's a nice
did
day to
well this
just
morning.
shut it
It's an
off
interesting
and
take too.
sleep.
North Coast upgrading it to buy. This
For
is
sure.
from the analyst Chuck Sorenkowski.
Wait it out.
Price
Flies
target
coming
is
down a little
$60,
bit there.
and
Looks like it might actually be
couple
doing a double
caveats
top.
around this. So it is optimistic. Obviously, the price target is a lofty one relative to the current share price, but they talked about how the Albertsons acquisition is weighed on this company. It's taken value out, no doubt. They're spending a bunch of money to do this. But all that being said, it's the only thing it seems that people have been talking about. And this analyst at least highlights that, hey, Kroger's doing quite well. They have a lot of things to focus on
coming
that
down
are
a bit.
positive outside of this. Balance sheet
There's the
seems
red
pretty
candle
healthy
on GME
ahead
and
of the
Tesla.
anticipation of this merger. Thinks
Neo's
that
up 7.5%.
the value of Kroger should be looked at on its own merits, and that says that the company demonstrated this just recently in its latest
Fox
earnings
D,
a couple weeks ago.
64%.
And it also said that while they're seeing pressure on some of their discretionary categories, Oliver, particularly at its Fred Meyer stores, they acknowledge that there's a lot of offsets that customers appreciate at what Kroger is doing from a brand standpoint. One of which is that they have an extremely well-developed kind of own brands program, so the stuff under their private label is done quite well. And they talk about the discounted fuel for loyal members, but you know, as crude oil has come down, maybe that aspect of it's going to be less of the story. But certainly a chance you could see gasoline prices spike back up.
There's a lot of DD I shared over the weekend on what's going on with this reverse split.
On
I shared some of it this morning just when I was talking, but
that's weighed on the stock,
maybe we'll look
but
through
that doesn't
some of it.
necessarily mean that the stock's
And
struggling. There's still a lot of value here.
And it seems like the government at least believes
speculation.
that this will give them too much power afterwards as they're coming down and investigating this. So the market right now has kind of an interesting trade happening because it is pretty soft. But to the point of the analyst here, it seems like Kroger was pretty solid before this. The chart that we're looking at on the past year doesn't, of course, show the previous couple years where Kroger actually did quite well. This is all happening pretty close to its longer-term highs.
Dude, the dip buys I'm seeing on BBY Reddit, that's crazy.
Pretty strong
People going in heavy.
contender to Amazon and Walmart after this deal, if it goes through. Chart-wise, though, Rick, you know, to the analyst's point, it's been kind of soft.
It's gotten a bit beaten up for sure. You can take a look at this longer-term downward trend line here going across the highs. That's still in play. We haven't broken above that at all. We did also break through this shorter-term downward trend line, though, this blue dashed line. We broke through that pretty nicely on earnings. We pushed above all three of our exponential moving averages. After that, we bounced around our volume profile point of control, this thick red line right here that denotes the area of heaviest trading. It's looking like we're making our way above that point today here, though. So upward channel is the new
I'm seeing on GME and BBY.
in terms of a price.
I knew finally last week on March
really
14th, was Ryan Cohen, Larry Chang, Blake Day have all left the board of directors at Dragonfly Group.
That we've been seeing here
have been replaced.
RSI momentum was kind of interesting here. We saw that it looked fairly positive for bulls when we had that big green candle. We made new relative highs with price. We also pushed into the overbought area, but we backed out a little bit here, and now price is still in bullish territory, or excuse me, RSI is still in bullish territory.
BBBY coming down more, man.
Another push really for things to look more encouraging.
They're shaking the tree for sure. 85 cents.
Starting to trend upward. You know, if we can break above that longer-term trend line, the 50 level looked important to me next. That's around the site of the next highs. To the downside, the confluence right here of our purple 252 EMA and our yellow 21-day EMA right around the 46 level could provide some footing here. And that $60 price target is still a good ways away here. It's still about 25% to the upside. So
BBY at 85 cents here.
Very bullish note.
Pre-market.
Good context.
Yeah, this is one of the supports I would say.
The 1-year high.
The soft levels is 85 cents area.
Right now,
then 80 and then 75.
The market's paying attention to the note.
It's crazy.
Ways to go. It's going to get back up to 60. The big winner among the three here is In-Phase. Take us there. Let's talk some energy, Alex. How bullish is this note? Because the stock is ripping.
Yeah, it's pretty bullish, Oliver. Price target is 225, outperformed from market performance, upgraded. This is all at Raymond James. A couple things that I would do to set this up is we compare this.
They're going online eventually, more brick and mortar.
Obviously, struggling.
BBY is already online.
Doing well.
I think they're trying to increase their presence there, but really trimming a lot of the retail fat. It's not like there's not a place for retail.
Aspect of the market. If you look at what Nvidia is doing,
yeah, I mean their BuyBuy Baby does really well.
Has been,
people with kids, they like to see the clothes, try them on, feel them.
Same for In-Phase within the solar space,
and I think that's probably why that one does well. And there's not really a big kind of baby store like BuyBuy Baby if you think about it. There was like Babies R Us, which I never went into, and I'm assuming it was similar to that, but that's not around anymore. And then there's like baby clothing stores, but not just like all things for babies, including clothes, you know, strollers and bottles and stuff for your house and for your cars. And
these shares are down 31% year to date. If you look
they might have a pretty big
index, which is sort of that broad
market share in that space.
Compilation of several firms within this alternative energy space and more ESG space. They're down only 5%.
Them leaving,
so
I'm not sure. There's speculation on.
See that underperformance.
I don't even know what the speculation is.
Those buy low opportunities from this analyst standpoint. They talk about.
I'm seeing on both GME and BBY, so they're both claiming it is good. Maybe I'm not sure.
Of which In-Phase falls into that camp. But they do
hit 84, hit 83.50. I feel like today, I don't know, I'll speak too soon, but
ramped up, and that's one thing to be on the lookout for, and that they're being mindful of.
Okay. All right.
Yeah, we'll wait and see. I'm not gonna throw any ideas out there.
Up 5%, actually second to Jinko Solar this morning, but a good
Jinko Solar
business as being somewhat of a more of a supplier side on the
yes, the good old oversized solar panels.
Rick, the strength from last year has faded pretty consistently now for a couple months.
ever since we hit these all-time highs and then failed to break above them in our
end
next
phase.
rally
Here's a
upward,
50,000
that's where things started to
share
go
buy this
wrong
morning
for
on
this company.
Bed
Maybe
Bath.
not wrong, maybe that's too strong.
I filled
a
at
word, but
92
that's where the
cents.
price started to really slide. We're down about 43%
That ain't
since that
bad.
point, 43, 44%. We've taken out all of our moving averages to the downside. All three of them are starting to switch their slope from up to down. We broke
see,
through
GME
our
has the
volume
same
profile
post.
point of control. There's a lot to worry about in this chart if you're a bull here. That price target is about 18% to the upside as well. And one thing that I thought looked perhaps a little encouraging was that
I mean,
looks
that's
like
I guess
we're
that's
on
only
pace to
speculation
form a
that they're going to
Harambe
be
candle. That would
doing
mean
something with
we've got a
BBBY.
candle yesterday. This is the difference
Maybe
between the
narrative
open and
to
the
go
close,
somewhere
the
else.
real body. That
I'm
would
not
mean
sure.
today the difference from the open to
So
close
explain why
is
this.
completely
All
contained
right, I'll
within
read
the
this
previous
little.
day's candle.
This
That's
is
a
from
bullish reversal candle.
Ding-a-ling-a-ding-a-dong.
Obviously, wait until the close.
I would explain
Don't
why
jump
this
the
might be
gun on
significant,
any
but we
stuff
need
like this.
to
You gotta wait
recognize
and
the
see
full
if it
plan and
actually
how
completes and
TAL
fills
stock
that.
is likely to be
But,
involved
you
in
know,
what we're
that
seeing
could be
here.
a sign that
Oh,
we're
wow.
maybe bottoming out here after this.
So
this
even the
big
post
flush
on
out we had
Superstock,
Friday. Another thing that looked
it's not
somewhat
about
encouraging
GME.
to me for the bulls
It's
is
talking
that
about
RSI
BBBY.
only stayed in the oversold territory
Dude, if that
for
was
that
the
one
case.
day. We're coming back out of it
Come
today
on.
here. So that's
Come on.
another potentially bright point.
I don't
Momentum looks
know.
like it's improving a little
Seems
bit.
too good to
The
be true.
point
We'll
to
see.
watch,
Let's see.
though,
Let's see.
is
Let me read
around
it.
the 208 level. That's the confluence of our yellow 21-day
meet this guy.
exponential moving
Think M&A, antitrust, and the interlocking directorate rules. A somewhat little known and obscure provision of U.S. antitrust law. Section 8 of the Clayton Act makes it illegal in certain circumstances for the same person to serve as a director of competing corporations. If certain conditions exist, that circumstance is known as an interlocking directorate or interlock. And it is per se violation of the antitrust laws. For purposes of Section 8, corporations are competitors when, based on their business and location of operation, an agreement between them to eliminate competition would constitute an antitrust violation. Section 8 applies both when one individual serves on the boards of competing corporations and when one firm has appointed two different individuals to sit as its agents on the boards or as officers of competing companies. The latter situation is referred to as the agency theory of Section 8. And it is particularly relevant for private equity firms and other investors who have competing corporations in their portfolio companies and appoint different individuals to sit on those boards or hold officer positions. I'll share this DD on our Discord. Okay. Okay, the interlock rule addresses the concern that an interlock between two competitors provides an opportunity for anti-competitive conduct by, for example, providing a forum for the sharing of competitively sensitive information which can be used for anti-competitive purposes by those competitors, allowing them to collude on matters such as pricing and customer and market allocation. Section 8's goals is to remove the opportunity or temptation to engage in such anti-competitive conduct in violation of antitrust laws, and that goal fits squarely with the overarching goal of the antitrust laws, to prevent harm to the economy and consumers as a result of anti-competitive conduct. It's a long way of saying, yeah, you can't have same people on different boards that are competitive or in the same space, I believe. So yeah, that's why I would maybe be bullish that they're off of Dragonfly now. That's Ryan Cohen, Larry Chang, and Blake Day. Blake Day, I guess, is from Chewy. Or it means nothing. But that is interesting. I'm seeing the posts about it even on Superstock. So BBY is kind of wicking up here. 83.50 was the low on that candle. At 85 cents now. GME is at 17. Grinding up. Whoa, big pop on GME. Oh, okay. Yeah, that's significant. With some volume. Huh. It's with the SPY, but it's definitely more stronger strength than the SPY. Pretty good amount of volume there too. I wanted to wait until after earnings to get more calls, so I'm gonna stick with that plan. I've got the leaps, the red candle on it. Yeah, it's just must have been a bit of a sell wall that broke there. It's still looking like it's fixed, but there probably was some sort of sell wall that broke. Let's see. So I've got these leaps are still down 10%. But have made a good way up. They were down 30, so come up 20% in the last couple days. Oh, AMC also had the same pop. Huh. Little squeezy here. I shouldn't wait as long for after. Actually, I guess I do have some on here also. Got 17 calls for beginning of April. A pretty good amount. I'll just stick with that for now. Don't be worried what has changed. Yeah, basically. Let's see. Heard a lot of stuff over the weekend, guys. SPY kind of rejecting that new high.
Russell's up big. The Nasdaq's playing catch up actually this time around. What do you make of that shift?
I don't know how long it's going to hold. I guess we'll see. I mean, one of the things that I found interesting when you looked at the news over the weekend, I mean, just take a look what the futures did, that range just last night, right? I mean, basically a 70-point range from kind of the lows that we hit, to where we're at right now, and then pulled back a tiny bit. But, that just shows you that even amidst news that you would think would be positive for the market, there's still volatility, and there will be volatility heading into the Fed announcement, and more than likely some afterwards. So, I
BBBY below that 85 cents now again.
Clear, because I think that
put a line down here for these candles, and then the pre-market low. I wonder if we should get like an explosive bounce off of one of these levels today.
One of the things that I found very
or whenever it hits
was the writing down of the debt.
L2 is still looking strange.
Before the equity holders were made, or the equity holders were made whole before the writing down of the debt, which I found fascinating, because usually that's not the case. And so, one of the things that's really pushed liquidity in kind of the global financial system.
There you go, guys.
Is the debt.
A little more hype. Just before selling Chewy to PetSmarts. This is Ryan Cohen selling Chewy to PetSmart.
Take a little different look as we're moving forward to see, hey, do we want to take some of this debt on our books? If equity holders are going to be made whole before debt holders, that is
the company's stock, or RC diluted the company's stock to raise cash and improve his bargaining position in the sale negotiations.
Absolutely.
I didn't know that. So he actually diluted
separation of some of these
the stock.
companies.
Raise cash to improve his bargaining position in sale negotiations. So,
the
recent events do not look confusing to most of us, mainly because we do not have all the facts.
Preferring the buyer.
Do not have all of the facts or the game plan. Do look confusing to us. The recent M&A info leak from Arlene Hong's LinkedIn resume proves that there is an M&A in the works. Be patient, my friends. Trust the process. I haven't actually looked at that leak from Arlene Hong's. Have any of you guys seen that?
A little bit. I mean, I think it's big vol and companies that don't usually have big vol, I think is the absolute takeaway here, right? So you're not normally seeing, regional banks with this level of volatility.
Yep.
I think what's interesting about what Joe said and kind of tying it all together, this is not an asset quality issue. This is a duration issue, right? And I think that's pretty well known. The regulations have changed so much since the 2008 financial crisis and any crisis before that. Banks in general just aren't able to hold the same level of risk assets that they were before. So this is really a yield thing. I think it's more of
$7
an earnings
average.
thing.
You got it down though
personally,
some with cover
because,
calls, right? Or is
you
that with
switch
cover
stuff
calls?
to held to maturity, you hold it there, and you're what that's doing is ultimately just capping how much you are able to invest.
Let me just read through some of the stuff I shared here on Discord over the weekend and Friday. They're giving me a date of March 27th to own shares to have a vote. So I kind of talked about this morning. Is that okay? So that's next Monday. They don't specify when the vote will even be or for what ratio. Yeah, it's all just kind of up in the air. It's just they wanted to announce that they're going to have this meeting to have a vote to reverse split. And the main point of it to me was that the only date they gave in it was the recall date. So not the recall date, but the date you have to hold your shares to have a vote. Seems like they just want the option at some point if in the case the price gets too low or is to get a share recall before their deadline. Not sure. So initially I thought it's to get too low, but I'm thinking that less and less because I've never seen a stock call for reverse split this early. I mean, it just doesn't seem very likely that that's the case anymore. So seems like there's another reason for it.
Issue. I think this
Could
is
be
a
any number of
duration
reasons.
issue and a yield curve issue.
Okay. The potential for the Fed this week obviously is on our minds.
Here it says holders of the company's common stock as of the close of business on March 27th will be allowed to vote on a proposal at a special shareholder meeting later this year. No idea when. They just said later. The time, location, other details regarding the special meeting will be communicated at a later date. So yeah, they just want the option to reverse split.
From the CME for the
If it becomes like, oh, that's the best choice, then they'll do it. I don't know. They'd have to be on board as yet to determine the ratio of the proposed split, but it'll be arranged between a 1-for-5 ratio to a 1-for-8. The company said the reverse stock split would not have any effect on the actual or intrinsic value of the business or shareholders' proportional ownership in the company. It would also have no impact on the company's business operations or outstanding debts.
Oliver, I think what's really going to be important, and I think this is where this is where Fed Chair Powell
moving up
basically
here a bit.
earns his paycheck is what he says afterwards, right? What is the path going forward? Has this changed the dynamic? What does he need
holding
to
up.
say?
Kind of wishy-washy.
Keep some calm amongst
There's
the
too much
markets?
risk. No, I know what you mean. I know what you mean.
We're not
gonna, no, it is risky for sure. The ape thing, so that's where like for me, I'm looking at insider sells and buys, and I was way out of AMC long before the ape thing. Like I thought that company was going bankrupt long ago for a lot of reasons. So the ape thing to me was pretty clear that it was Adam Aaron was trying to go around shareholders to dilute the stock more. And so that it was basically as simple as that. But the mechanics of it were very, very complex and confusing for me too. I'm like, I don't even understand how this works. I just know that he's trying to shaft retail and force a dilution, even though shareholders have already declined more dilution. And he's actually being sued for it right now. I think there's a lawsuit against him, or SEC is going after him for it because it's basically what I just said, which technically I guess could be illegal. So this is different though. BY insiders are holding, they didn't all sell out all their shares first chance they got. Institutions are buying in somewhat. I mean, we had BlackRock increased, a couple different institutions increased. So yeah, that's the difference from what I'm seeing here. But that said, yeah, once AMC got to the point of ape, I was long before that I was thinking it's not a good investment as far as fundamentally. So this was my initial thought with the new QSIP. It's what we wanted all those years with GME for a share recall. I don't know if you guys have been GME for a long time. SPY new high there. We wanted a new QSIP for the share recall. Makes sense why the recent seemingly super shorted stocks that had reverse split have squeezed before the split, same day or even a couple weeks after. If you guys have examples that you can think of, I know of a couple, but you guys probably have more. We could look at those tickers and see which ones kind of reverse splitted, that ripped before, during, or after, like sometimes weeks after even. SPY's rallying up here. So we might get a little kind of bear market rally short squeeze on the whole market. Similar to that last March. No. Yeah, it was right here. See this? So the same way GME is repeating March potentially, last March, the overall market might also, which this was, this was same time frame that GME ripped. This big bear market rally right here. TA wise, it's not. We got like an inverted head and shoulders, which is bullish. Now it's actually building this kind of bull flag here. So it's starting to look more bullish for sure. Okay. So yes, the post reverse stock split, shares of common stock would have a new CUSIP number. That means each share of stock must go back to the company and be reissued. If you have no share to send back, you're out of luck. You don't get the new share with the new number. So it actually has to go back. So that could be a massive share recall, even if you're not lending your shares out, I would assume. BBBY ripping up here. BBBY is bouncing a bit. GME kind of holding up. There must have been, I don't know, some kind of volatility that hit GME and AMC right there with some volume. So not squeezy yet, but pretty solid price action. Pretty good. Yep. So hopefully that pulls up nat gas. Maybe could that be a thing? Can we make that a thing? I'd like to get out of those so I can trade ES again. Cash is a good position, absolutely. Look, there's no big bids or asks on the L2. This is so strange. AMC exists in 5 years. I don't know. I have thoughts gonna go bankrupt, but I suppose it could be acquired by someone or bought on pennies on the dollar. Maybe before bankruptcy, maybe after, I don't know. QSIP, right? I don't know how do people say CUSIP? Is that right? I don't know. It's just I've heard it both ways. Isn't it an acronym for something? Yeah, it's an acronym, so you can pronounce it however you want. Post reverse stock split, shares of common stock would have a new CUSIP number. Change the stock CUSIP number results in each share with the old CUSIP number having to be exchanged for a share with the new CUSIP number, which causes each short position to have to prove the borrow. Naked short positions would be unable to comply in these positions. Those positions could have to be covered by purchasing shares with the new CUSIP on the open market. Knight Capital was a market maker that was naked shorting penny stocks into oblivion. They could continue to carry the losses over the years as securities sold but not yet purchased. They got deleted. They called it a market glitch, but it was just them unable to weather the storm. Citadel sold but not yet purchased. SPY's rallying up. Tesla's consolidating at the high. BBBY is actually showing a little bit of a bounce here. We'll see if that MACD flips over and flips bullish. I was kind of expecting more of a explosive bounce off the bottom for a bat this morning, but get it. Cuss up all the time. See what these girls are talking about.
Right, more layoffs for Amazon, although Amazon was one of these companies, Nicole, that really employed a ton of people at the start of the pandemic in particular. So now we are seeing that ease, as well as now we're seeing them actually clearly trim their workforce. They did announce the layoff of about 9,000 more employees in the coming weeks. CEO Andy Jassy did release this in a memo to the employees. The cuts do follow an earlier round of layoffs that began back in November and extended into January, which affected more than 18,000 staffers. The latest round is expected to impact their cloud computing, advertising, HR, and Twitch units per the company's memo. But we are seeing shares down just over 1% on the news. This is a name that's still up about 16% year to date, still up about 3% for this month, actually, although down 43% from its high, and continuing to see, obviously restructuring measures that are affecting its employees. But this name was operating in such a bloated work environment. It doesn't seem unusual to now see a company as large as Amazon trying to operate more leanly, Nicole.
Thank you for all of that. Jenny Horn, great to see you on this Monday. Jenny Horn, markets correspondent. Appreciate it. Let's get some insights on the news shaping the markets, and for that, we welcome in Kevin Gordon, Senior Investment Strategist at Charles Schwab. Thank you for being with us. We spoke a week ago. Now what? We have more financial pressures. While we each time see a Band-Aid, there is still a lot of concern. And how much weight does that put on the Fed for this week?
Well, I think it's the primary focus, and now the Fed has to, they're put in the unenviable, if not nearly impossible position of trying to balance financial stability, which is the so-called, third mandate that they have to focus on, but also now still having to deal with what is an inflation problem that hasn't left us and has not left them. But I think that, we're probably going to get more clarity and hopefully get a lot more clarity as to how much, if at all, financial stability for them sort of trumps the inflation and, increasingly tight labor market issue. And I think it'll definitely, be a factor in their decision-making moving forward. But I think the key between either now and the presser or maybe now and the next couple of weeks is, how many more ripple effects are there from anything related to the fallout from SVB and some of the other banks? If it's relatively contained and not an 08-style contagion effect, which for many reasons, this is not 2008, not least being the underlying asset that we're talking about here. But if there isn't broader contagion and you still have an inflation issue, I think that there's, at least near-term precedent for the Fed to maybe keep 1 foot on the brake, 1 foot on the gas, like the Bank of England did back in September, like the ECB just did last week. Maybe it's a little bit more of a dovish hike this week if they do hike by 25 basis points and they drop the forward guidance, around trying to combat inflation solely. I think that, there'd probably be maybe the right decision to focus a lot more on financial stability, but all comes down to what Powell says, of course, during the press conference.
Yeah, no doubt. And, I'm glad you referenced the ECB because, 1 foot on the gas, 1 foot on the brake. The ECB kept online and kept with their raising of rates up 50 basis points with a dovish statement, right? So that's the brake. Why can't the Fed, I know we're 70% likelihood of 25 basis points this week. Why can't the Fed do it the other way around? Have the brake now, but keep a foot on the gas and say, look, in light of what we've seen with the financials and obviously one of our really big responsibilities, one of our mandates is really keeping financial stability here. We will take a pause on this round and we will likely continue raising rates in our next meeting to continue to battle inflation. I mean, is 25 basis points going to make or break the Fed's credibility or whatever? What it could do is just add to problematic environment.
Yeah, and I think it could be any combination of raising rates and or the language component. So the jury's still out as to what they're ultimately going to decide. I mean, we haven't really gotten any specificity. Certainly, we haven't heard from Powell, other than some of the statements that came out in joint with Treasury and FDIC, about a week ago. But I do think that is probably going to be the focus is how much they're willing to, really not go back on their promise of not doing this stop-and-go policy, because as Powell's mentioned many times before, that was sort of the mistake in the 60s and the 70s that kind of let inflation get out of the bag and really run rampant. Obviously, back then, there were different circumstances around the viability of certain parts of the financial system. And, history is mixed when you go back and you look at, different financial crises. You could go back to continental Illinois in 1984. The Fed did not stop raising rates right away. You could go back to long-term capital management in 1998. The Fed cut rates right away. Obviously, there were different, there was differences in liquidity facilities being set up today versus back then. But even when you go back in history, the results are mixed as to what the Fed has responded with. So I don't even think we can go back and use any of that as a guidebook. I think we really just have to go day by day here and, recognize that the Fed is dealing with different circumstances today from an inflationary aspect.
And you're right, because we haven't had the same set of pieces to put together in the puzzle, right, in the way that we do now. Let's turn your attention over to some of the big news that we got. Obviously, we had UBS.
Buy kind of inverted hammer there.
Getting Credit Suisse. Is the worst
That's
of this
getting a little
over?
flushy
I know
there.
FRC has been poking around, trying to look for some backers there. And this one is under pressure again. But some of the other regionals are showing strength today.
BWAP.
And after last week, where tech was soaring, but financials had, I think last week when you look at the sectors, tech and utilities did very well, and oil and gas were lower.
Okay,
the
there's BWAP.
financials obviously got hit so
MACD on
hard.
BBBY
So now
is
what?
bullish on the 5 minute.
It's over?
See if this
Depends on which sector.
5
I mean,
minute
if we're
candle here
talking
is
about
green over the 9.
Smaller regional banking sector. Boy, I wish I knew. I wish I had a crystal ball to be able to tell if that was over. But to that, we just don't know. I think the contagion for the broader economy, jury's still out in the sense that this definitely, the whole crisis evolving within the banking sector definitely acts as an accelerant on the tightening of lending standards that was already in place before this happened. I mean, we've been pointing out for quite a few months that when you look at some of the senior loan officer surveys put out by the
RC
Fed,
hasn't ripped
it was
yet.
already the case that lending
We'll get
standards
some
were
puts on
tightening.
this thing on a big
We
up
were
day.
just kind of missing the credit crunch component, and now we've definitely gotten that. So on the one hand,
Body's up
pulling
5%.
forward, I think
Root.
maybe more
I am
formal
root.
recession. And that's definitely being reflected in the market with the flight to high quality growth and
Here's a
and to some
typical
extent traditional
reverse split,
defensive. So if
where
that
yeah, it doesn't
continues, then
help.
I think it's probably more of a definitive signal.
This was
that
because they
we're
were below
entering more
$1 for so
formal
long.
recession. But on the other hand, if you want to kind of take the glass half full approach, some of the bigger credit crunches we've seen in the past have happened well into bear markets, and then
Got some
it
energy
wasn't
movers,
long
25%.
thereafter, that you started to see some
CI
accommodation
is
from the
ripping.
Fed, and then eventual resumption of a new bull market. I'm not saying that's happening tomorrow.
Someone there
but,
for returning
you
shares?
Think about Lehman, September 2008. The stock market bottomed in March of 2009. The recession ended June of 2009. So. This doesn't last forever.
Like when you
go back
recall
in
your
history,
shares?
So if that is a silver
How
lining,
much
I see
time?
that out. But on the other hand, within the small and regional sector, I think that we still
Not
have
sure.
to wait until we see some
I
more
guess
ripple effects there.
brokers probably give themselves lots of
Kevin, it's
leniency
great to have you on the show.
on when they
Great
can
to
get
see
your
you
shares
by telephone. Appreciate
back.
it. Kevin Gordon, Senior Investment Strategist.
Imagine
Charles
whenever
Schwab. Thanks for being here.
they feel like it.
Plenty more to come right here on Trading 360. We'll continue our focus on the
There might be
financial
some
sector, our 360
some time frame they have to do it by, but
trading opportunities that may be here
yeah, I
for
don't think
you
it's
and this
I don't think it's
volatility
strict like
in
T
these
plus
banks.
2, but
Enphase Energy
could be wrong. I'm not
is
sure.
today's disruptor, moving higher after a Raymond James upgrade. George Sillis takes us through the news and a way to trade it. Our 360 round focusing on Chewy. Now, Chewy has rallied off its low. That what you'll be watching for this week's earnings. And up next, it's the big three.
I know, Barnstormer. I was gonna get puts literally on Friday. I was talking about getting puts on Credit Suisse. I was like, I mean the IV was so high, and it can only come down so much. And I looked at it, I'm like, it's maybe not even worth it. So I don't know if it would have been worth it or not. I guess I could look at the options, but a win's a win. But yeah, the market maker was pricing in basically a move like this almost. So yeah. It's not going down, Ace. It's bouncing. Look, it bounced. Bounced to 8350. Which was an all-time low. All the stop losses that people had from the 90s got triggered. good until my grandchildren are dead. That was the order they put in. Or this needs to pop by Wednesday instead of Friday. Oh yeah, we broke the low, the low from the day. So yeah, there's that. Red bet short. Yeah. Next one on my list would probably be FRC. There was a list on Wall Street Bets though of the banks that hold the most. What was the stat? I don't know. It was basically a kill list for banks and the most risky banks and the best ones most likely to short. Stocks like kind of hit a top here. Got that inverted hammer. Set up this engulfing candle, which we'll see if it leads to just consolidation up in this range or if we actually come down and maybe hit BWAP.
Points matter, you know, because there's a big battle whether or not they should do anything.
Yeah, and I think it was so much data that came in last week, and what an interesting week to have an FOMC blackout period. I really want to hear Powell's interpretations of all of the data because we had CPI. It's
might have been on the banks for sure. I know I've
been lazy playing them. Related sector, but then beyond
the upside
that,
too, just the bounces are massive.
That painted a picture of a rather improving inflationary picture.
I want to do some cash secured puts because that IV is so high, but
of course to the banking
I don't want to pick a loser.
I do expect the 25 basis points, but then a pause from there. Perhaps because of the way the market's pricing it in, anything less than that may spark some contagion of some sort. So that's something that I'm watching, but interesting to see how it plays out. Certainly volatility ahead.
Yeah, and you make a good point. You make a good point because there are some who say if he takes a pause that it may mean things are worse than they seem, and maybe the Fed knows something that we don't know, and that it might be interpreted differently.
Hey, David.
Let's get to Procter & Gamble. It's trading around 144 today. Why is this one on your radar, Jessica?
Yeah, so wanted to give you a defensive play and something that was a high quality and dividend yield producing security. So that's where Procter & Gamble came up. It's one of those traditional defensive plays. From the high quality aspect, we look at the fundamentals. It has a 22% profit margin. It's trading 22 times next year. It still has a positive EPS growth and a positive EPS growth. So that's important. And in addition, it has a 2.56 annual dividend yield, which is slightly above its industry average. So from a high quality, let's just get defensive, add a defensive play to our longer term portfolio that also give us dividends.
All right. Ben, what are you thinking
kind of
here?
double bottoming here,
Nicole,
maybe.
Jessica, good morning. Nicole, this is a stock that spiked up last week on Monday to 140. We've seen some follow through since to 144-ish, and definitely what the bulls are looking for. Back to a key area right now that's going to be pivotal on the bigger picture. Let's begin first and foremost with the hourly candles. Here's that spike up I mentioned that was last week on Monday, rallied up to 140, and then you can see we've had some pretty consistent follow through on the way up to 144.70. I went ahead and identified a couple of the areas of just brief pauses of consolidation where the market likes to kind of regain composure, that horizontal development, and then you get that vertical phase.
What do you think about it? I think it's cheaper than it was yesterday.
139, you can see 142.50, and then again right now, kind of hypothetical. I left some question
I don't think
marks
differently
there,
about a
few of
stock
them actually,
based on its
because
price.
We'll see if we actually hold
try not
this
to, at
area,
least.
but it does look like we're seeing a little bit more overlapping rotational.
I don't see anything
to
that's
higher highs,
changed
high
necessarily,
conviction,
like big insider sells or
up. So again, this is just a look at the hourly time frame. Stepping away from the more intermediate time frame shows the bigger picture daily, and here a similar pattern.
The reverse split, if there's not some, if that's not part of a carve out or merger type deal, and it's just
hanging out around this 145 level for a while. So we've got
just slowly get the price up. That's maybe not as good,
range,
but
right? 147 is what we're kind of teetering
around.
though.
They would have to do that
165 to the upper extreme. We'll
some
call it
point potentially
120
if it kept
to
going
the lower
down.
extreme. So this is why
I'm not sure how it works
This is
with
a big
their
area right
deal
now. Let's
though.
keep an
Does
eye on
the
147, especially if
does
this
the dollar
bid
floor
continues
that they
to
had
trend. We look
before,
at
does
on the
that
hourly. Let's take another
does
step
that move
back
up
here and just
with the
I'm gonna
reverse
show you
splitters?
where
That
things
say
stand in terms
$1
of
even
50
with
to
this
200-day
if we
moving
split
average because
up
we're
to like
just now
$10.
kind of
So maybe
peaking our
it's
head above those closely watched
maybe
levels,
it's
which have been sort of
that
flatlining,
too.
which is kind of a reflection of this sideways
I'm
consolidation
not
we've
thinking
been
it's
for a
those
long
quite
time
yet, just
now.
because
But
of
again,
how
122,
quickly they
pretty
did it,
well-defined
or
bottom.
proposing
We're
at
coming
least,
off of most
getting it
recently
ready.
155. If we get through 147-ish,
Weeze,
as I
that's
mentioned,
right.
that pivotal
You
area, there's going to be a
talked
next
about
hurdle
Weeze
to
a
the
lot.
upside. Looking at the RSI,
Is
we're
this
seeing some
a rally
conviction
one
to the
or just a
upside. So this
normal?
one's got legs right now through
Not
the
a little
50
rally
through the
into it,
200,
which is kind of
and
interesting.
while trying to get back to unchanged on the year right now, it's down around 4%.
A rally the day after.
Yeah, and I do see some
this
buys and
this
good
is
price targets. You know,
probably
Ben,
more typical for a
you
reverse
don't put
split for it to be
question
a
marks
bearish thing.
Is that new? Did you find the question mark key?
Maybe there's
I
some
mean,
shorts
I don't
closing in here. I'm not
Well,
sure.
it looks like that's being answered for us. That was prepared a couple hours ago, keep in mind, so an hour ago. So we're getting a little rotation there.
yeah.
The market price is king. It's telling us the story.
Right. Yeah, yeah. Thank you for that, Ben. Always amazing with the charts. Jessica,
Liechtenstein.
you said that Procter & Gamble really was your defensive dividend player, so not too much risk in your mind.
That's right. Looking for something high quality, which is verified by the fundamentals, still has a healthy profit margin, but that dividend as well.
Yeah, GE has been running up, actually hit a recent high of over $94. It's just off that level of late. So
we got our green over the 9 here
volatility.
on
What are you
BBBY.
thinking here, Jessica?
Not a whole lot of upside
So
yet,
this
but
one is where GE has some of those macro headwinds
it
that
moves
we're
up to
facing
VWAP
that could
for now.
become tailwinds, and some also resolutions that we need to see resolved. GE has a very diverse revenue exposure, some of which is also with an alternative energy, not only a source with their wind, but also for the gridlocks and storing renewable energy, which is going to be new and needed as that's trending upwards. Additionally, they have a huge exposure to aviation, specifically military, and there has been an influx of orders that are needed for military since the Russia-Ukraine conflict has started. So that's certainly a piece of the puzzle that will translate over to earnings, especially as we're talking about budgets from the fiscal policy perspective. And then if you look at their military spending, it makes up about 17% of their aerospace revenue. So thinking about the overall narrative and the growth of that trend, that's going to translate over positive if there's some positive resolutions as we're talking about budgetary concerns.
Yeah. Okay. What are you thinking here, Ben?
Mentioned the move up to 94, just shy of 95. This comes after we bottomed out around 59.60 back in the middle of December. So you can see a well-defined trend up here, bottom left to top right. And in this instance, again, as I decided to show you the areas again that the market kind of paused. You can see hanging out around 65 into the beginning of January prior to the run-up. We get this again, high conviction where this pattern repeats itself multiple times throughout, but we sort of lose some of that momentum around 80.
If you could get a broker error like Cosm
consolidation around
BBY reverse
82.
split,
You can see these areas
that
of
would
value
be
moving
neat.
higher again, and not once do we really retrace.
Oh, so no, actually, look. So this actually had it.
The area prior to the one we're currently forming. So you get this value moving to the upside, migration of, and let's take
this chart's probably not quite showing it right.
Candles, actually, these
but
are
the air caused
30-minute
this move
candles.
in
I
this
don't wanna
day.
get too married to the intermediate
But look how this had
time
actually
frame.
the so this wasn't from the air.
The left side of the screen.
This had this pre-split rally.
It was of last year, if you remember, where, well, take a look. We formed a bit of a double bottom down there, and it's been off to the races since.
Oh, it could have been
Here
shorts
you can
closing
see it came
or
into play right around this, well, we'll call
whatever.
it 45.50 level. And then
It's a 1100% move,
low,
actually. That's
you can see
insane.
the areas of consolidation that formed at higher and higher levels. Again, this is a daily
just the
time
9
frame,
moving
so a little
average.
more
Green
credence, a
candlestick
little
over the
more
9
weight to
moving
this
average.
one. But similar pattern, right? Areas of
That
consolidation.
was
on the way up,
1100%, and that
56,
happened
66, 80, and currently hanging out
25
right around
days
90.
before.
Very well
It started
strong
25 days
pattern here.
before
Not
the
a lot of
split.
charts look like this. The bull's definitely in charge in this instance. Still,
All
I want
right,
to step
so
away from this chart to
1100%, 25 days before the split. Let's just
look here
at
at
this.
GE relative to the 50 to 200-day moving
We don't have a
average,
split
taking
date
off,
or
right?
even an
Really
amount
strong
yet,
right
so
now. Also, RSI a little bit
don't know that, but I
limited
wanna
to
look
the
at
upside.
percentages.
You can see we didn't get a higher high relative to what we saw in the beginning of the year and the
Who knows
run up
where
into
we'll
the
be at that
$80
point,
level,
but,
still
yeah.
holding its own up here. But again, above the 50, above the
around
200-day moving average. And look at the stock up 39% year to date.
1100 would
Yeah,
put us
and
in
you
the
know
double
what's
digits from
interesting is
here.
you see that bullish trend that you're showing us, Ben. Thank you for that. We've
Oh.
also had Larry Culp agree to $10 million cut in compensation. That was something that we found out just recently. So canceling some stock awards for CEOs and others. So that's an interesting development too for General Electric. Jessica, final thoughts?
I don't know if I got the bottom there, but yeah, 1100% put us up into double digits.
It's a focus on efficiency, just like you stated with that news headline. Recent spinoffs as well. Definitely
and that was
support
without
that narrative,
any of
and
the
that's something that is
brokerage
extremely
errors.
important when we're in a restrictive Fed policy environment.
And then last but not least, we're looking here at Microsoft, and we've seen tech have
Yeah, that was crazy. I remember you talking about that when it happened on. I was like, what's going on?
Yeah, tech is certainly having a run up, and I think that's a lot to do with the restrictive Fed policy and the lag effects and how it hits tech first. Nonetheless, we've talked about artificial intelligence all too often, I think, Nicole, but it's certainly
moving up
needs
here.
to pay attention. I think it's an opportunity there.
Looks like it's just
Microsoft
consolidating
is
here
down
for
quite a bit
another
today, and if you
another
look
rip.
at the suite of products
Same with
that
Tesla,
are
it's holding
being
up
offered within
the highs
Microsoft
and GME.
Azure, there are so many things that we haven't even seen filter through revenue. For example, it's ChatGPT has been integrated into Outlook and a lot of Microsoft products. So you
What's
can
the price target on
lots of efficiencies,
on
and
the
the
Elliott
young
Wave
crowd is
3 or
really
whatever it's
excited
on?
about that. Additionally, today they released a tool where it goes into clinical documentation and will automatically write clinical documents. And if you think about how long you normally wait at a doctor's office, that will certainly help with productivity and efficiency. And another macro headwind that we don't talk about too often is we have an aging population, which paints that overall narrative window. So Microsoft, for those reasons, having now exposure to healthcare, which is a little newer, in addition to having a solution to a tight labor market, this down day is certainly an opportunity to buy.
Oh, okay. A down day that presents an opportunity. Ben, your thoughts?
Day after getting a little bit ahead of itself relative to what we've seen in terms of the NASDAQ, which keep in mind has been strong all alone, right, relative to the broader market. But let's begin with Microsoft MSFT and the rally we've seen from 219 beginning of January all the way up to 283. Jessica mentioned some of the selling we're seeing here today, down by, well, about 2.5% right now, but a similar pattern, right? Trend up right now. Last time we looked at Microsoft,
it came up.
you guys, it was, well, I think middle of February.
1790 to
March,
1867.
we were talking about this area consolidation around 267.
That's an awful price target.
Since then,
I was
you
hoping
can
for
see
like
we
a crazy
dipped
rally
back
from
down
it.
to around 242, but look, never took out that key area of consolidation prior to the one that we were
So we're almost
talking
at the
about
top of it
forming
then.
again around 267. So 242 held. So you can see all I did in this instance was just kind of elongated this balance area out. So it's still sort
that's
of
the next
just
wave, and then it's going to come
pivoting
back
around
down
this 267
before
area.
a rip.
Here you can see an attempt to break out to the upside, which at this point seems to have failed. We're kind of rolling over, but a well-defined range here at this point. 283 to the upside, 245 to the downside, with the kind of turnaround point being 242. Let's look at the daily time frame here, because a different picture here, right? This one you can see a trend environment to the downside, and I do want to point out here, though, that this recent move up kind of invalidates what we've been seeing in terms of that migration of value to the downside. 266 was the key areas we were forming, 232. So now we're trying to take that area out. This is an interesting kind of reversal of the trend that we've been seeing to the downside. Could be the start of something big to the upside. I'm going to be keeping my eye on the NASDAQ as well, which I, again, remind you, said was very strong. But again, trend here lower, that's starting to get negated at this point, or at the very least invalidated. Taking a quick look here at Microsoft, holding above the 50, holding above the 200-day moving average. You can see here, though, look, RSI a little bit limited to the upside. They matched the high that we saw back in February earlier this year, but you can see how price got a little bit of overextended there possibly. So I'm not surprised to see the pullback. Keep an eye on the broader market here, the recovery, the bank situation, everything that's been going on with rates, the Fed and all of that. But yeah, Microsoft pulling back after getting a little bit ahead of itself relative to the NASDAQ, which again has been strong as well.
Right, understood. Okay, final thoughts, Jessica and Skip.
Absolutely.
Tesla, GME,
I
they
want to
both
hear what
want
Powell
it.
has to say. That's, I think, the most important part of this week, and we're going to be range bound until we get more information from him.
New high on the day there on SPY.
Right together.
Yeah, this is setting up for a March rally like last year on SPY and GME.
Floors, everybody's shushing and waiting, and so there's a lot of anticipation. I agree. Jessica and Ben, thank you both. Jessica and Skip from Options Play, and our
Oh, it's a
Ben
bearish
Lichtenstein
one.
on those charts. Thanks for being here. Coming up next, we're going to spotlight the financial sector and what the UBS deal for Credit Suisse really means for banking stocks. Next on Trading 360.
Oh, that's a bummer. I'm more optimistic than that at this point. Until we have some resistance on GME. I guess if it rejects that 1940 again, can't break that. That's pretty bad. After this rally, I'll look for there. Maybe to exit. If we get that high. I'm still hopeful for a big move this month. Not to the downside. Okay. Here's some more reverse split propaganda. The new QSIP, how that affects the naked shorts. Reverse splits put a dagger through Kenny's balance sheet. Post split, naked shorts cannot be closed on the new QSIP and are permanently cemented as a liability on the holder's balance sheet. Kenny can rack up his securities sold, not yet purchased, but small hedge funds will eat each other alive. Reverse mergers and reverse splits typically result in a change in the QSIP, the 9-digit identification symbol assigned to a public stock. Once that QSIP changes, the naked shorter has no apparent way to close out the naked short position. No stock on the old QSIP number exists anymore at all. Automatically converts to the new QSIP. BBBY is coming down a little bit here. Those trades can sit in the obligation warehouse forever in theory, which isn't good, but it could be good because if they don't want it there and they don't want it on their balance sheet, as he said in his title here, they would close before then. Sold, not yet purchased. It's a hiding place for a billowing structural liability. Oh yeah, this Knight story. Knight sold, not yet purchased liability jumped from 385 million at the beginning of 2008 to 1.9 billion by mid 2011. Delorio had no such doubts. He saw the fact that Knight was blowing a hole in his own balance sheet as undeniable evidence of the naked shorting play. Oh, last battle for 120. Yeah, you forgot the part where we go to 35. That's right. Don't like to see this weakness on BBY here.
They, unlike some of these regional banks, they have a very large derivatives book, and many of the major financial institutions around the world are the counterparty on those things. So if suddenly if Credit Suisse goes under, the counterparty risk becomes a big issue. Suddenly all these other firms are exposed.
I am very curious on Credit Suisse and if it has any kind of effect on GME.
This was something that had to be done. I think we
I'm
kind of
closing
knew
a
it had to be
position.
done. The question
pretty
is,
exciting.
there are still some losses out there, and not so much that we're worried about the banking industry, crashing like it did in 2008 or anything like that. But we do worry that, what are their earnings going to be like? What's their ability to lend going to be like? They're tightening up on credit, their credit issues. So. I guess my point is it raises the risk of a recession, and that still has some people a little bit nervous.
Right, we're watching that inversion of the yield curve very closely. A lot of folks saying, obviously, when we see it the way we do, that it means recession. Credit Suisse did write down $17 billion of bonds down to zero, leaving some people very upset. You also have over $5 billion that UBS has to now take on in debt. So there's in losses, basically. Your thoughts?
Yeah, again, this goes back to the thought, the issues that all these banks are looking at. I mean, first of all, this was obviously kind of a forced marriage. For a long time, Deutsche Bank had looked at them, but UBS had been looking at them for a while and said no. And finally, the authorities came in and said, no, we need you to do this. And it was kind of the same thing with not First Republic, but with Silicon Valley Bank. A lot of people were trying to shy away from it, and then they got a consortium of banks together to kind of take the risks collectively. And so that again, it goes back to the thought that the losses that these banks had are still out there. People still have them. They just don't have to mark them like Silicon Valley Bank did. And again, that this is not going to create the kind of big crisis we had in 2008, but it does leave the economy vulnerable to a recession. And right now, the bond market's starting to price that in with lower interest rates, but the stock market is still expensive, so it really hasn't priced that in yet.
Yeah. Look, Goldman Sachs is still pressing the Fed to just take a pause and resume hikes in May. While you do have Fed funds futures, 70% likelihood of a 25 basis point hike. We don't know the answer. What we do know is your advice to investors at this point. What are you telling them? You said investors should raise more cash on bounces. What does that mean?
Well, to be honest with you, it's something I've been saying since December.
I sold some covered calls on my GME leaps. I'll probably close them out tomorrow or the next day after earnings. We'll see. Just catch some of that earnings crush.
That means the stock market isn't trading at 17.5, 18 times earnings. It's really trading at about 20 times earnings. Therefore, it's too expensive and it has to come down. And so I think if people raise a little bit of cash, and of course cash is now paying you something, which it didn't a year ago, and get into some more defensive plays as well, and in some stocks that play a good dividend, a good solid dividend.
XXII, yeah, I'm hoping for it to go up before I sell it.
And those types of things that because at some point
just look for
the
where
market,
it
I think, will get washed out, and the problem
signs
is
of
when that
reversal, I
happens,
guess.
a lot of
No?
people are panicking and selling
So,
at the exact worst time.
look at some
But if you have a little cash on the
lines,
sidelines,
it'd be
and you're
something
in
like
some
this.
defensive sectors, not only do you have the money to
So
buy
looking
when the
for
baby's being thrown out with
here,
the bathwater,
or
but you also have
breaks
the
through that, then
confidence,
probably
which
this
is
for the next
just as
resistance.
important, which a lot of people are.
But
Again,
hasn't had its move
you're
yet.
keeping your head while others
But
around
everything
you
there
are
that
losing
being
theirs,
bullish on
and
it,
that's
as far as the
really
chart
what
goes, is
higher
still
cash
there.
levels enable you to do.
Yeah, I'm so glad. Anything?
Everything's coming down here a little bit. Kind of started to see. Yeah, that's why I wanted to sell covered calls. I'm not going to day trade them though. I can't really do that anymore.
Yeah,
Yeah, the VWAP on
but
GME
I
is
would
quite
say
high,
that
so
first of all,
might not come
I
down
do
much
think
before
that
it
the
keeps
energy
rallying.
sector is getting kind of washed out a little bit here, and again, especially ones that pay some good dividends here, and the bigger names are in that area. But also the defense industry. The world is not getting any safer, I'm afraid to say. Sorry to say. And don't just be afraid. Don't just look at the big ones like Lockheed Martin or Raytheon. Look at a stock like Textron, which is much cheaper than some of those bigger names. But there are some names out there. Again, defense spending isn't going down. If anything, it's going to go up, and I think these names can provide some a good place to hide for right now.
All right, Matt Malley, great to see you. Managing Director, Chief Market Strategist, Miller Tabak and Company, and founder of the Malley Report. Thanks, Matt. All right, I want to turn your attention straight over to Bitcoin. This is a developing story. Kevin Green is with us, senior markets correspondent on the TD Ameritrade Network, taking a look. Bitcoin has been running hot. In fact, a 28 handle. Kevin Green.
Yeah, definitely. Yeah, Nicole, definitely. We are seeing a move to the upside here in Bitcoin, which is actually very interesting, as the beginning of this whole financial debacle actually was related to a bank that focused mainly on crypto. So this is actually kind of interesting here, but it did break through the critical 27,400 level. That was a significant resistance point. Today it traded over $28,700. That's the highest level in 9 months. And at this point in time, it's actually having a really strong correlation to some of these hard assets like gold and silver. Right now, it's trading at around an 88% correlation to gold and a 91% correlation to silver. And that's something that rarely does happen, but when we have some of these risk off the market type of events, we do see a little bit of a flow into those hard assets. And now Bitcoin is also taking on that type of personality as well. We'll continue to see if we can break through that 30,000 level. That's going to be another key psychological area for a lot of traders here. And this does look at this point in time like a flight to safety, quote unquote, if you will, for some traders that are in the marketplace that are concerned about the financial system in itself and are looking at other opportunities, decentralized.
Ace, I'm not averaging down.
As a
we got too much exposure already. Potentially,
Really
once
appreciate
it's
it. Good to see
confirmed
you.
and it's the move is starting, or we have
Kevin Green, senior markets
momentum basically on our side, then I might put a little bit more in, but yeah, at this point I don't need a dip buy anymore. I've got enough exposure on the dip buys. Two of them have basically failed with this engulfing, RSI divergence. So yeah. When I average, if I do, like I said, it'll be on a big move up with volume. Waiting for that momentum, and then I'm not sure I will, but yeah, even so. And I would imagine be at a higher price than this, which isn't a good thing, but that's kind of what you have to do if you're just waiting for momentum anyways. If we go much lower, then yeah, maybe it won't even be at a higher price. But no, I mean, I'm running my cash cleared put, so that's bringing my average down on those. Just my shares I've been doing covered calls. I didn't open up any yet this week. I'm just kind of hoping for a rally to do that. And we haven't had it, so I don't think I will today. Like this day, it's like, oh, this is it, we're going to start rallying. But I think I did cover calls that day. Which can definitely burn you if it starts to go, but I'm trying to do cover calls when I can. It seems like this is going to probably need, I don't know. We might not get any big move to the upside until that shareholder meeting on Monday. And then, let's see, I guess that's not even a shareholder meeting. That's the day of record. So I'm assuming the shareholder meeting to vote, will be next week, sometime after that day of record, probably pretty soon. And then we'll have to wait for that vote. And then if it's approved, and if it's approved, we might get some price action from that. If they set a date and an actual ratio, then we might get price action up until that date. That's all just reverse split. That's nothing to do with merger and acquisition or, earnings that are going to come out next month. I think it's next month. Yeah. Or, any of the hype dates, basically. What's really interesting is this L2 today on BY is totally different. I'm not sure what happened, but And we're not barcoding. Look, guys, it's literally the barcode algo is off. It's totally off, and that's reflected in the L2. They're both totally different. That's so crazy. I didn't even think about the barcoding is not there. Something snapped on it. I don't know if it's good or bad. I mean, so far it's bad with the price going down, but maybe it's gonna end up being good. Yeah, because yesterday in the last like month or two, the L2 has been loaded with bids and asks, huge orders on both sides, and now there's like nothing. 84,000 wouldn't even hardly shown up last week. You know, we're getting $250,000, $500,000, and then the ask side, you know, you'd get the smaller ones, but they were there too. These are tiny. You have 2 orders, 1 order, 200. These weren't showing up at all. So now we have all this, and we're not barcoding. So something's different. I don't know if you guys know, but I don't know if it's just a different algorithm. Maybe, I don't know. Buy's coming down here. Maybe one of the funds that were in, maybe they close out. That was causing this back and forth barcoding. No, that's when we had that bounce last BY earnings. So they dumped it into earnings, talking about how BY is going to go bankrupt. They're trying to file for, you know, preparing for bankruptcy. All those headlines, preparing for bankruptcy. So dumped on those days into it, and then earnings came out, and that's when it had that rally. $14 million, yeah. I don't know though. Is that what was causing the barcoding and the stacked L2? Because yeah, we're not barcoding, and this looks much more normal.
Countries. It's not just China or Southeast Asian countries. It's actually Canada. They're a major producer of solar panels. The U.S. as well. But I think what it comes down to is the aspects of microgrid controlling and management software that Enphase produces, energy management, storage, load management, anything that has to do with the smart, intelligent platforms associated with alternative energy. These are the companies that seem to be performing better than the panel companies.
Yeah. And, you know, your trade, just any final thoughts here?
Yeah, so looking at the volatility index, you have to consider that since we're at a volatility level that's above 20, we want to sell some premium to call. The other thing is, despite this nice upgrade by Raymond James, the stock has certainly been in a intermediate downtrend the last few months or so. So we have to consider potentially if it continues to the downside, but we can actually sell some nice volatility premium. In this case, what we'll do is sell under the current price by looking at selling an April put vertical. In other words, we'll go out and sell the 180 put, and then simultaneously we'll buy the 175 put. Now, altogether, you could sell this for a credit because the premium is rather robust right now with volatility higher, and that premium built into the
bearish MACD. You got red under the 9 now.
Sell for about $1.75 a share, $175 a contract. So, ideally speaking, the sweet spot is if the stock stays above 180 between now and expiration in April. But break even, just in case it does fall below that, is 178.25. What's nice about this too is that you're earning $1.75. That's your reward, and your risk is about $3.25. So you're getting a reward on risk over 53%, but at the same time, there's a 70% probability that the stock will stay above 180 between
bond
now and
auctions
expiration.
today.
All right, thank you for that. So neutral to bearish makes sense. George Tillis, great to see you. Appreciate it. Thanks, George.
That's about it. Not
Coming
much
up next,
on the news.
Our 360 round focuses on Chewy, which is up about 2% today. For this year, it is up about 2%. So not a big, it's down 2% today, and year to date it's up 2%. So it hasn't done much of late. What should we be watching when it comes to the report on earnings? Our panel is ready.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting drawings, drawing tools, and then type of drawing.
That gas super plentiful, get out. Super plentiful, but still plenty of demand. It's an ugly chart on BBBY today, really. We could. It's crazy because this RSI was this RSI was so low that this one is still. We still could get an RSI divergence. A more legit one. We had that little one back here. It failed. Like a big proper one could still be in the works. It'd probably come. It'd come with a gap fill, probably. So it'll be moved back up to $1 or so, or higher. This barcoding and L2 thing is really interesting. Yeah, I know what you mean, AC John. That's kind of what I was hopeful for. Yeah, kind of hanging out at the lows down here is not what I wanted either. As far as just chart and price action go, nothing's changed. Missed you by 1 foot? What?
Purchases for pet products to the online channel, and Chewy is one of the largest players there. So that's a big benefit for them long term. We also see the prospects for them to improve their net ads. So customers adding to the platform should continue to grow going forward from here. And then lastly, we like the fact that their margins are starting to inflect higher. We're looking for 3% plus EBITDA margin guidance for 2023, which would be a strong positive showing.
It's amazing that any company can sort of raise margins at this point. We know that so many companies have been struggling. In the meantime, Arun Sundaram, you have a $45 price target, right? What are you thinking here?
Yeah, I mean, I agree with Seth here. I think it's going to be another solid quarter. This is their Q4, typically the quarter with the strongest sales growth. And you know, this specific quarter they'll be lapping.
Yeah.
What I think will be.
Yeah, I agree for the most part, John.
Because last year they had the Omicron impact, and that resulted in some out of stock issues for Chewy. So some favorable comps on the top line. The company is profitable. You know, they do generate a positive free cash flow. Which is great in this environment. It's something that even Amazon hasn't been able to do over the past year. So it's something that Chewy is doing right. You know, we do also believe that Chewy's margins will expand over the long term.
Regardless of that, though, AC, what we had on BBY was different.
Like pet healthcare,
here comes Spy on the way down.
They're also
you know, we don't have what we had
these
back
are much
here.
higher margin businesses than
I'm just curious
selling
on it.
products online. So I think that's really where the growth potential is for Chewy's story. You know, to kind of play devil's advocate here, you know, I think the bear thesis is, you know, margins are still relatively low. It's a low margin business where, you know, Chewy is competing with the big players like Amazon, Costco, Walmart. They don't necessarily have a subscription-like business model that some other players have, like Amazon and Costco. That could result in some lost customer loyalty there. And I think another big headwind for 2023 is increased promotional activity. You know, I think we'll start to see a lot more promotions, especially as inflation moderates and more these in-stock issues or these out-of-stock issues are not really a problem anymore. I think we'll start to see
Look for
more promotional activity, and that could
That
also
could
have
be.
an impact on at least near-term margins.
Yeah, I mean, all good points there. And we do see some price targets above $50,
mean,
which is closer to the more
try
recent
not
highs.
to.
This used to be $100 stock
BBY looks bearish to
after
me.
the pandemic. I mean, this was $120 in February of 2021. That being said, the landscape is tough. Competition is tough.
Yeah, eVTOL's had some pretty good rips, Tree. We've traded that before.
As you noted, Seth, you talked about people doing things online. Is this going to continue to just evolve on its own?
A good TA trader is
I think
not
the
going
answer is
to
yes. I don't see them
have
being
too
a
much
big
bias.
takeover target. And they're a leading
Hopefully,
player online.
hopefully hardly any at all,
I see the
and
potential for them
hopefully
to double
never.
their market share over time. Probably next
But
5 to 7
at times,
years,
yes, you might have
as they
emotional
start to
bias on your TA.
grow more
But the better you
rapidly.
are, the less you'll
So
let that happen.
it's really a standalone play here. They're expanding to other areas, and they also have an opportunity to expand to other geographies in terms of other countries. So there's a lot of greenfield opportunity for them to grow their business.
Yeah, understood. And what names do you like, Arun, other than this one? You have a hold on this.
I mean, in the internet retail space, our only buy rating right now is on Amazon.
Oh yeah, CPI's tomorrow. No, sorry.
Chewy, we have a hold on eBay, we have a hold on Wayfair, and also hold on Etsy.
This chart's so confusing.
Oh, what did you think
Existing
about the
home
Amazon
sales
layoffs that were announced today?
Oh, shouldn't have a crazy move.
Yeah,
that is tomorrow.
The Amazon layoffs. Yeah, 9,000 layoffs were reportedly announced today.
You've
bringing
got
the
PAL
total
on
count
Wednesday.
of layoffs to about 27K. I think this round of layoffs is a little bit more significant because they did call out that AWS will be impacted and the advertising business will be impacted, which are historically two of the faster.
What do you think is going to happen to BBY?
Of Amazon.
What I think is going to happen to it?
I think will be viewed positively by investors. Amazon is continuing to tighten their belt, try to trim costs everywhere.
Or is it price?
And this will just
their
add
stock
to
or
that
their company in the
multi-year
stores?
turnaround for profits and margins that we've been kind of calling for some time now.
All right, good. I'm glad I got that in. Seth, quickly, what do you like?
Beyond this stock, which I think has a lot of upside potential here in this environment in a shaky macroeconomic scene, we like Wayfair. Wayfair is another e-commerce name that we're recommending right now.
I mean,
we see them
it's
turning
looking
to positive free
pretty
cash
bearish.
flow next
Broke all-time
year
lows
and
today.
with EBITDA
Don't see any
margins
signs of
moving
reversal
positive
yet.
by the middle of this
Basically,
year,
so
and sales likely being positive for this year despite
seems
the
like
choppy
it's
macro. So that one
it's not bottomed yet. You'll probably know when it hits a hard bottom because it'll probably bounce pretty hard, very hard,
So glad you were
with volume.
Here. Important day and time.
Everyone will be FOMOing in.
Of Wedbush,
There'll be a lot that won't because they'll been hurt so bad already.
All right, let's do a quick check
They'll
here
just
of the
leave it
markets
alone.
after somewhat of a mixed bag.
That's what this is all designed to do, to
You know, when we
shake
look
you out
only
and make you not want to come back.
is the group in the red. Everything else is in the green today. Energy, financials, materials leading the way. Names like Caterpillar, Goldman, Dow, Honeywell, Verizon leading the Dow Jones Industrial Average, which is up 3.
Today we broke all-time lows. Pre-market,
like this in stocks?
there's still some lower lows. 80 cents.
Well, we'll be talking about that all week long.
0.806, and then 75 cents is the low low.
Keep it right here.
I think it I think 75 cents is where they can retract their obligations as a lender, or the debt restructuring deal. He has the numbers, just ask him. All you have to do is just ask, just be polite. Dilute more after the reverse split. I didn't see it touch 75 last week on Friday. No, we haven't seen it down here. Maybe you saw a glitch wick or something. To me, there's not been any confirmation of dilution of the common shares. So I'm a skeptic. That BBY and call. Not sure what that means.
always ready.
What trade I make today? I sold some calls on GME today. That's all I've done. Sold the calls against my long calls here. I sold some weekly 18 calls, which I'll probably close tomorrow. Since these are below the strike of my long calls, I could always roll them up. But yeah, that's all I've done today. I'm working its way back down to VWAP. It looks halted. You know what's different about it today though is there's no barcoding and the L2 is way thinner. Not sure if it's good or bad yet. But the volume today is good. Look at this. Actually really good volume. That's maybe why we're not seeing the barcoding. That was yesterday. Yeah, even the 11:30 hour is good. Yeah, good volume. BBBY dropped on the news of them having a meeting to have a vote on reverse split at some point in the near future, potentially. They also don't have to go through with it, and at an undecided ratio at this point. So, news algos flushed it. Not even a reverse split announcement. It's not even an announcement. It's an announcement on a vote
about 13% so far
for
this
reverse
month.
split.
And Coinbase, which was upgraded today on the back of gains in Bitcoin, and like Folio will break down consumer sentiment data on PepsiCo, which was upgraded today. Now 2.5 hours into the trading day, stocks are moving higher after the Swiss government engineered a forced takeover of Credit Suisse by UBS, marking the latest effort by governments around the world to stifle a crisis threatening the banking sector. Rising yields have helped the bank stocks, but tech is lagging after rallying substantially last week. Now let's take a look at the four major indices, which are off a session highs, but three of them
21
still
cents
positive.
for those.
We got the S&P 500 up 0.6%, Dow Jones Industrial Average up over 300 points on the day, nearly 1%.
Nice, well done, Saul.
100 down 0.2% today, lagging a little bit, and the Russell 2000 small caps trying to rebound from monthly losses of about 9%, up 1.43% on the day. To help me break down this market action, let's bring in my co-host Kevin Hinks. Kevin, pretty choppy session today, overnight, and this morning. We're seeing some weakness in tech, but this is one of those markets. It feels like that. If you've got an opinion on this market, it's going to be a tough one to trade because it's like a roller coaster.
Yeah, exactly. I mean, volatility is here to stay. People are trying to explain ups and downs. Don't try to do that. It's just volatile. You know, rallies are getting sold and sell-offs are getting bought, and things are moving all over the place. And sometimes that's the idea. It's not a bull market, it's a bear market. It's a volatile market, and they're moving all over. And you know, I thought some of the comments over the weekend, I thought just the fact that the Russell led the indices higher today was a bit of relief when you look at the regional banks. I thought that put a fair amount of relief through the market, right? And so that news that came out Sunday about UBS and Credit Suisse was a bit of relief. Now we get to our markets. I thought it was interesting. Their CEO, Credit Suisse's CEO, did you see his statement? He said, the latest developments that emanated from the banks in the U.S. hit us at the most unfavorable moment. Like it's our fault.
Yeah.
Yeah, exactly. Okay, well, easy there. It's not our fault that your bank failed.
Yeah. And Credit Suisse had been under pressure for months and like nearly a year.
Oliver and I went over that on Morning Trade Live. Look at a chart. Now it's our fault.
Right.
Yeah. So I think that's interesting. But like I said, I think it's a messy business to clean up banks and get them in line and get a weaker bank with a stronger bank. And I think you're going through that. But really good price action out of the Russell today, which is making everyone feel a little better.
Yeah, definitely Russell's been under pressure, lagging over the last several weeks. But we mentioned, regional banks. Let's bring in Jenny Horn, markets correspondent here on the network. The FRC story, S&P Global Ratings cut FRC once again here. Jenny, the stock remains under pressure.
I haven't seen it. Walk me.
The major banks last week put in about $30 billion of liquidity.
Yeah, and it seems like it's not enough, at least based on First Republic's price activity today. I mean, pacing for a new 52-week low in today's session. It has recovered a little bit off of its intra-day low, but I mean, this is a name that's fallen about 84% now month to date. Its losses, I mean, this chart looks absolutely brutal. But on news, like you mentioned, Tom, the S&P did trim its rating just 4 days after it initially trimmed it to junk, now with a B+ rating. They said the $30 billion in deposits that First Republic reported it will receive from 11 large U.S. banks should ease near-term liquidity pressures, but it may not be enough to solve the substantial business liquidity, funding, and profitability challenges that they believe the bank is still facing. The B rating at S&P means the entity is more vulnerable to adverse business, financial, and economic conditions, but currently, they said, does have the capacity to still meet some of their financial commitments. So it's not necessarily doom and gloom, but definitely not positive if you are looking at First Republic and looking at the price activity today. Shares are now down 4 sessions in a row, and it's shed about, over 80% in just, the last week and a half at this point. Now, First Republic is planning to raise money from other banks through private equity firms by selling new shares, per the New York Times on Friday, but this was a name that did close Friday significantly lower. And like you can see, banks today collectively are not experiencing the same degree of weakness as First Republic, which is now the focus of so many investors after SVB, Signature Bank, Credit Suisse. This does feel like the next card to sort of follow here. But momentum should pick up now as the FOMC meeting is set to convene tomorrow for their 2-day meeting. So now it does seem like what was expected to be a pretty non-complicated Fed discussion now seems like there will be so much more focus on, of course, what Jerome Powell has to say,
for this month?
If you're looking at a name like First Republic.
Yeah, Jenny, I mean, what's going on in the Russell today with the relief rally in some of the banks isn't carrying over into FRC. But Jenny, figuring this out is a messy business, and you're even seeing
Jamie's holding up way better than
some
Russell.
of SVB's
pretty interesting.
Assets. Once these banks start to look at some of the assets, they're starting to fight over the good ones versus the bad ones. This takes a while, and it's a little bumpy and a little messy, but eventually,
still coming down.
The fact that our big banks are putting money into this means this bank,
if it
doesn't make it, is probably just going to be absorbed anyway. So again, more relief may not be for FRC individually, but overall, the banking sector looks pretty firm.
Yeah, and Kevin, I was actually reading a note over the weekend that highlighted exactly that. The relief we've already gotten from so many other banks, and this analyst was highlighting the fact that they've never seen such collective strength with so many banks coming together to then bail out others. I think that is something that's commendable. I think right now it does seem like a bit of a doomsday rhetoric overall, but none of these issues are going to be fixed overnight. We're not going to see necessarily First Republic just bounce back.
Not bailing them out, they're buying them up.
To sort of be patient with some of these banks. This is going to be an
gutting
ongoing
them,
narrative and a story that I'm sure will be
buying them for pennies
for the next several months. As you can't expect
SPY broke through VWAP.
As complicated as the banks, like you said, Kevin, just instantly. This is a narrative that does feel somewhat here to stay, but all in all, important to separate, I think, the regional banks like First Republic from these mega banks, as they do not trade the same, and their balance sheets frequently just are not the same.
Yeah, no quick fixes here, I think, for this liquidity issue in some of these banks. All right, thanks to Jenny Horn, markets correspondent here on the network, helping us break down the FRC news. But now let's bring in Alex Coffey, senior equities contributor here on the network, to help us look at the markets here. Alex, NASDAQ definitely underperforming today. We've got yields rising. I think that's putting a little bit of a dent here. But if you look at this sector as a whole, it's still up 14% so far this year. Amazon announced another 9,000 people getting cut possibly over the next week or two, on top of the 18,000 they already cut. But you know, it had a good, firm week last week, the NASDAQ, despite all the roller coaster ride that we had in equities.
Yeah, I think it's a combo of those last two factors. If you actually look at the performance today of the NASDAQ 100, just about 2/3 of the names are actually higher. It's just the ones that are red.
Look at GME holding to that SPY candle. Wow.
Alphabet,
Pretty big flush there on SPY.
Microsoft's having a really tough day.
Microsoft on an upgrade, Alex. They got upgraded today.
Down over 3%. And so you guys were talking a lot about the Russell 2000. The Russell 2000 from a market cap standpoint is only like 10% of the Russell 3000, which is like 98% of the stock market. So I haven't looked at the most recent numbers, but let's call it somewhere around a $4 or $5 trillion mark for the entire Russell 2000. You're looking at, you know, Apple and Microsoft together are basically that size.
Yeah, 2 or 3 of the big tech companies.
And so you start thinking about it, it's like, yeah, it's collective, maybe a lot of carnage going on. Obviously, the regional banking sector in particular. But the big players are just so much bigger than even the collective of all the small. And so it's really, really important when you have days like today where Microsoft, Amazon, and Alphabet are all struggling. It's hard to overcome that, particularly in the NASDAQ 100, where those names are just such a heavy component.
Imagine the move on BBBY is going to probably start in extended hours.
We're settling in right now, it seems like, for a 25 basis point hike. You see significant equity market volatility, big bond buying in the next couple of days, it may flip back. But if this is the script leading into that meeting, I think we're only going to see those odds solidify even stronger for that 25 basis points.
Yeah, Kev, earlier this morning, the CME FedWatch tool.
I've got it up live right now.
Bitcoin of
yeah,
cash
I was just going to say, I was just bringing it up now.
It just jumped.
It continues to move higher.
SPY is kind of getting
with
flushy
the
here.
anticipation of a quarter hike. Now, Goldman Sachs put out a note over the weekend. They're
Seems
not
like
going
news
to they're
going
not
on.
going to hike at all.
Oh, FRC
Citigroup
halted?
came out with a note and said they're going to do 25 basis points. But then I hear pundits coming out and saying this is really
trying to get
going
puts on this
to
thing. Give me a green
hurt
day.
if they do this quarter basis point hike, because the market's already pricing in cuts by the middle of summer. So why hike now?
Well,
The Pentagon has announced another $350 million in military aid
The
for
Fed Watch
Ukraine.
tool, I noticed this morning it was 71, 72.
56.
FRC resumes.
I did not see that.
Yeah, early.
I mean, but now it's 80.
Yeah.
80%. So it keeps creeping toward that 25 basis point rise. So now that's like the tools we have on the Thinkorswim platform. It's not the answer, right? It's part of the question. So don't think that's Bible. It doesn't mean anything other than that's where the order flow is determining and speculating. So that's what to take from there, but it looks like it's drifting. I still think Christine Lagarde, her movement last week tipped
Market's
off
selling off, I
investors
think.
what they should
Maybe
be
from
looking at on
FRC.
Fed. If Jerome Powell was
Might have
going
been
to
news on
pause
here.
and go backwards from what he said, Christine Lagarde would do the same thing.
Yeah, and think
Can you
about
imagine?
her commentary after they hiked 50 basis points.
It's halted
which
again,
was
FRC.
Basically, what they
She said earlier in
saw.
the month.
The
and then
ego
it
on
didn't
you.
waver.
And then was dovish on her commentary, Alex. So does
Thanks.
that set up
Ace,
the rhetoric that we're going to hear from Powell? Where
Thank you, Ace.
they
I
hiked a
appreciate it,
quarter
man.
basis point,
Ace
like
just gifted you
everybody's
guys subs if
expecting
you
at
want
this
them,
point.
or
But then
memberships.
he's got more of a dovish tone, and he starts bringing in
A
the
mix of
that,
banking,
hey, we want to create
alt.
financial stability. We're going to back off now and kind of see how the lag effects start to catch up to the overall market.
Yeah, I think so. I'm not going to try to put the words that he ultimately will say in his mouth, because
SPY is flushing here.
About Jerome Powell, we've noticed
This
over
is
his
you,
last
Ace,
few
and you see
years
people
is
in here that
he
aren't
doesn't want to
members.
pigeonhole himself. He doesn't want to lock himself into anything. But he's going to have to say something that's perceived as dovish, because
Just
there
appalled.
is such a strong disconnect right now between the last things we heard from the Fed and what the market's now pricing in. The 2-year just plunged, okay? That's basically saying it's over. Gold and Bitcoin, those type
All right,
of
I think
assets
this is from
rallying the way they
FRC
have,
News.
They're saying the same thing. The NASDAQ outperformance of last week, it's all saying the Fed is basically done. But in terms of, why hike the 25 basis points if you're basically done?
Wonder if it-
the
maybe
Fed's
just
shown
grabbing
that
puts on it
it's
now,
going to
maybe it's not too
slowly but
late.
surely move its path unless it actually
You
has
don't
to
need a
just,
green day.
shock respond like it did during COVID.
I have no buying power on this trading account, though.
In response to
Yikes.
some of the financial stuff there. They were buying bonds up until the last second that they started this rate hike cycle. They're still letting bonds roll off while they're injecting liquidity through their new facilities. So they'll talk out of one side of the mouth while doing something else at the same time, as long as it's to kind of not shock the system and over stimulate things. So we haven't heard from him. I think this is a chance for him to settle the score here, but I think we're working towards an off ramp.
So cynical for a young man. You've got Tom White level cynicism here at a very young age, Alex.
Good out of you, Alex. Good out of you. Now, that brings up my next question, Kev. Would a pause instill confidence as compared to maybe undermining it? Because a lot of people said if they don't hike, then there might be something in
You guys can thank Papa Ace for the gifted
like
memberships.
The sheets where maybe we don't realize.
Yeah, I think this has got to be from FRC.
I like the way Alex put it, and I agree with the way Alex put it. You go up by 25 basis points and you come out dovish. Just like Christine Lagarde did. And then the movement is right, and then the rhetoric is the other way. And I think that negates. I think the wording here will be critical. Remember, we went through a whole banking crisis.
Oh, well, GME's holding up
without
there,
any
though.
Fed members talking. They were all in their quiet period.
Yeah.
So it was kind of
Better than
interesting.
Tesla,
We heard
even.
from Janet Yellen. We heard from the president. but we didn't
BBBY
hear from
at a
Jerome
new
Powell.
low there.
So I think that's key. And another thing we're going to get, guys, that we
So now that's not barcoding, and
That's right.
L2 looks
and
different.
The Fed whisperer, Nick Timmermans.
This might move with the
Wall
SPY
Street
more.
Journal,
I thought I read it. I was watching all weekend. He didn't say anything.
But he's got a presser today, or an interview today, and he did say that what comes out of this banking crisis over the weekend is going to play into whether they do a quarter of a basis point or not. Who knows?
So maybe it's real time. The fact that the Russell is so quiet here today and rallying.
Thanks for your
maybe
thumbs up
that's
today,
good for the
guys.
Fed.
Yeah. Now,
Exciting Monday so far.
This is the first time in years where there actually seems to be a bit
We've
of a
got
point. It's been
FRC is
weighted
halted to the
right now.
downside. I'm not sure the news. I don't know if they're filing Chapter 11 or what, but
basically every single one of these meetings. It's just
definitely
what is
caused
gonna
a SPY to
happen next,
flush
that's the
there.
question mark. There actually is a case
Go
to
back
be
to
made for
barcoding.
both actions.
Yeah,
I think
seriously.
That action or that probability is going to shift back and forth based off market activity up until this last minute.
Yeah, and I think what investors and traders want is some semblance of knowing, getting it out there, right, Kev, as far as the decision goes.
This is the most transparent Fed we've ever had in your and my career, right? So the fact that they're worried about their transparency.
I don't know if there's any news. It might just be
kind of goes
halting
to
going
the
down.
impatience of the overall markets. But like I said, you're going to get a real good picture Wednesday about 2:30 Eastern.
Yeah, and I think some people want to know, and that's going to be the question. All right, guys, let's take a quick break, but when we come back, we're going to have a discussion on Tesla, which is struggling this month, but up basically about 45% so far this year. It's had a good run and bounced back from
FRC
those
resumed.
lows that we saw at the
Dude,
end of 2022.
this thing is just
Fast
it's
markets
crashing.
right back.
46%. It's going to halt again. Yep, halted. Woo. Pulling down the sector. Yeah.
Where's the parent?
Who thinks he's Civ Bank thinks I'm fall more than him. Yeah, go click on the free the green box. Ace Ventura gifted 5 memberships. If you guys aren't a member yet, it's free. Click on it. Scroll up a bit, click on the green box, click enable gifting. It pains Ace to see all these non-members in the chat.
Teacher. Again.
Volume today is pretty legit on BBBY. Get more XXII.
Can't say that.
Nice. Pablo, you got the gift from Ace. Oh, it's not FRS. What is it? What is FRS? FRC, that's right. Alright, FRC is still halted. Yeah, you could buy now or you could wait for momentum to shift. In case it keeps going lower, but yeah. I'm not seeing a sign of a floor yet. And that won't probably happen until a pretty big bounce, so another risk.
The
take.
ego on you.
There you go. Yeah, Alvaro, scroll up, hit the green box, and become a member. You too, meet. And Saul, if you're still around. Right, you're already a member. No. Oh, yeah. Okay, GME. Literally just a little consolidation out of VWAP, and SPY just did a big flush. RC halted still to downside. Crazy, man. Oh yeah, we're way below all-time lows on FRC. Ooh.
There, it's right above there. Your thoughts here on Tesla?
Yeah, a couple things. I mean, the point about gas prices and that influence on it. Look, if you're buying a Tesla because you think it's cool, because you like the luxury aspect of it. This is not going to be saving you money long term versus buying a cheaper car. They're expensive still. I know that they've gotten cheaper and they're making more mass production vehicles that are a lower price point, and ultimately that's the goal. But they're not there yet. Let's be honest. Kevin is telling you about his experience in Ubers that were Teslas because they're cool cars. They're nice and they're really, really fast. So you can see why people flock to those kind of cars. But if you look at the competition, it is something that's more accessible. It is something like Ford that you see more commonly on the road.
That
The
gas is
F-150
just
being one of the most popular
awful
vehicles.
today.
However,
Also,
it seems a lot like putting Beyond Meat
no more
in
BBY for you.
KFC or Beyond Meat in
Yeah,
McDonald's.
it's a good idea to
which
kind
is
of
like,
just
yeah,
wait
it
now.
makes sense,
I think
but do the
for
consumer
now.
at McDonald's or the consumer at KFC, the average consumer, do they eat non-meat
see when the momentum
alternatives?
starts going the other
On
way.
average, I would say no. They're going to McDonald's.
Scroll
they're
up.
going to KFC.
Scroll up. I don't know if it's still there.
Does the F-150
But yeah, if there's
truck driver
people that gift
buy
memberships, you just have to
electric
click on the
vehicles?
membership and click
Maybe,
receive
but
gift.
probably not the majority
And
of
become
them.
a member
So
for
what
free.
Tesla's done really well is they've carved out
FRC
their
now
niche
halted to
as
the
the
upside.
leader in this
Dip,
space,
dip by this thing.
and their perception of brand quality is so high. They're not trying to reinvent the wheel, if you will, or try to resell their vehicles in terms of making them cool again. They just are cool, and that's why people want them. So when I think of Tesla, obviously the long-term story is that they're going to have way greater impacts than just revolutionizing the auto industry.
Picked up 1,000 shares.
You know, their
Nice.
competition's got to figure out how to make their brands cool before that
Well
they
done.
really worry about mass production of electric vehicles.
Yep.
Because there's enough issues with electric vehicles. Materials are short in terms of battery. The batteries are lighting on
Getting a
fire. The range
big
isn't as
discount,
long. And now crude oil is coming down in
think.
price. That story starts becoming a little bit more difficult to sell.
Yeah, for sure.
And you can see the trucks on the screen there. The truck.
Yeah.
That
It's
is
come down
not a good
50%
looking car.
from
Well,
$1.50.
it's going to be a niche type of item. I don't think it's going to be
Just,
like a big seller.
I'm an SUV driver.
Just a couple weeks
I
ago.
cannot buy one of those.
That looks like something out of a video game.
I know it really does.
Yeah.
I'm like,
Military grade.
First time I saw that, I'm like, what? What is that?
The DeLorean was pretty cool when it came out,
Yes,
too.
it
That went
was.
away quickly. Alex, you got an example of trade boards. They've got earnings on the 19th of April, so you've got some event risk coming up in this one.
Yeah, and so what I looked at is I think at this moment in
Go
time,
for a
we're
monster?
describing the Fed commentary sort of is at this tension
What
right now.
MSTR
You have
was
arguments
that?
on both sides. Markets feel to be the same.
MicroStrategy,
You have
okay.
people who are very, very concerned about the banking situation, others who think it's very overstated and overreactions are happening. Tesla has this on a daily basis. No stock is more polarized in the sense that bears have an opinion and bulls have an opinion, and they are on the exact opposite lines of spectrums in terms of price targets. So
There you go.
what does
Click that
usually
one,
mean
banker.
for a stock on a day-to-day basis? Maybe some choppy
The free
trades,
float still hasn't
a lot of
increased.
sideways trade action. And so I looked at a trade
Shares
that
outstanding.
takes
It's not
advantage of that
increasing here on
heightened
Webull. I'm not
volatility
sure though.
and that market tension, and
I
it
know that
sells both
filing
sides
for the reverse
surrounding this
split showed
particular
that the
stock,
outstanding shares
and just
were
looking for
more.
that tension to continue. We
I'm
want
not
a choppy
too.
back and forth trade for this type of a trade illustration. Selling an iron
I don't
condor
know. I don't know
going
what
out to
that
April,
was. Honestly,
and
that wasn't a
pretty wide
statement
net being cast around this one,
regarding
Tom.
them
Right now, the
increasing
stock
outstanding
currently
shares.
trades at 182. Looking at selling the 150, 145 put vertical alongside the 225, 230 call vertical. Stock typically trades with call skew. That upside risk is seen as a real velocity.
You have to accept the gift or receive gift, or click three dots.
So I gave it a little bit more room to the upside.
And do it that way.
Stock's also been kind of back and forth this year. Obviously, it had a tremendous start to the year, going from about 100 to well over 200. But most recently sliding back. So maybe a little bit of a buy of this recent dip mentality being applied here too, as it's only about 30 or so dollars out of the money on the put side, where it's closer to 50 bucks on the upside.
Yeah, Kev, this is a pretty wide iron condor here out in the April monthly cycle. So you've got 32 days till expiration. You got probabilities on that short 150 strike, nearly 80%, and then on the 225 call, you got about an 89% probability of finishing out of the money. That's why you're collecting a little bit less credit, but then you're giving yourself a better probability of success. You got $375
You did try. It was a valiant effort, Ace.
Per spread on this one,
valiant
compared to the 125 or the 125 that you're.
You have to have your.
So
I think your YouTube account has to be linked with
but
the
that's
Google
what you get
account.
when you go further away from the current share price.
Extreme high probability.
Eyes coming back down here.
The trade-off is that you
FRC
don't
still halted to
collect
the
as much
upside.
money in credit, but you've got less risk, right? And there's a theory out there in trading, Tom. I don't want to beat everybody. I just want to win, right? And this, widening out those parameters, brings up the probabilities that you'll be successful. So, you know, it's great to sell a $5 iron condor for $3, but you got to tighten those strikes up enough where almost there's a high probability you'll get violated. This, collect a little less money, but the trade-off is you've got extremely high probabilities.
Yeah, and those break-evens
must be his
between
account.
148.75 and 226.25 to the upside. So you got that nice big range for the stock to trade in over the next month to remain profitable. You do have some assignment risk on those short options going into expiration here over the next 30
GME getting a little
days,
flushy
but a
through
good look
VWAP
at
here.
A neutral strategy,
It's interesting.
but widening it out, taking in less credit on that iron
AMC's been
condor.
getting dumped
The
on.
idea is you want it to remain between those two break-evens, and time decay or theta works in your favor on that also as the price decreases on a daily basis, as long as it stays in between those break-evens, and all other Greeks remain unchanged. All right, guys, we got to take another quick break here, but when we come back, Like Folio is going to join us for a discussion on Pepsi, which was upgraded today and has been pretty stable so far this year. Fast Market's coming right back.
Well, they're done with you too, banker. Arrival looks at a nice Nice double bottom here.
And that's going to be Megan Brantley, Vice President of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Monday.
Happy Monday to you. We're talking Pepsi. You know, everybody thinks it's a beverage company, but I always think of it as a Frito-Lay company because that seems
halted
to
the upside
where
again.
Growth is at this point.
Nice little dip by maybe.
What kind of data are you guys seeing out of here? We've got an upgrade
Actually
today.
crazy. That's
the
that's
analyst basically said he missed.
Yeah, that's
the call
100%
on it
from this
before,
back to where it
but
was today.
He said it remains resilient as far as sales
What
growth
the heck?
goes.
Close.
Yeah, you know, whenever we look at Pepsi, there are so many brands that we can break down here.
Definitely should have
You've
bought
got
that.
your classic Pepsi, but you've also got all of the Eatos. You've got some cereals like my personal favorite, Captain Crunch.
Oh,
you know, we've
word?
got a
All right,
lot
I'll
of
check it
these
out, Ace.
Smaller brands. You've got like Sabra Hummus. You've got, you know, Lay's.
What's the frame rate?
There's just a lot to cover that
What's
fall
it at?
underneath Pepsi's umbrella. You know, if you're stopping at the grocery store, you're stopping at a gas station, chances are you're probably grabbing a Pepsi product as either a snack or a beverage. And when we look at this, one thing that we see historically is it's interesting because one of the things that's really been lifting Pepsi of late is its ability to pass prices along to consumers. So on our end, we actually see a bit of a demand slide, a bit of an overall buzz slide, especially among Pepsi snacking products in terms of overall
I can
volume.
send you
So in
send
terms
you
of overall
mine.
mentions of people who are talking about consuming a product. However, we know according to its results that
I mean, you
it's
can
been
just
able
make
to
it PNG
increase
pretty
sales
easily, right?
and increase revenue,
It's not too
and
difficult.
because it's able to raise
I can
those
send you one I
prices
use, though.
because it has this perceived pricing power because of the power of its brands that they're such a namesake that
find
they're brands that consumers want to turn to. So it's interesting because it's a bit of a mixed bag. Whenever we look at this on the macro perspective, you can see food price concerns are about 200% higher than they were 2 years ago when we really started to see these food pricing increases take effect. So this is something that's, you know, the rising prices of consumers who are willing to pay more for these snacks has been
Saul, why do you hate
almost
that girl?
a tailwind for Pepsi. However, we're starting to wonder, you know, we're starting to see an increase in this slide in demand. So are consumers starting to get to a bit of a breaking point and starting
GME got
to,
weak
you
there
know,
all of a
perhaps
sudden through
consider
VWAP, which
more
is strange.
private label brand options? That's something that we're watching moving forward because it's an interesting tipping point that we're reaching in our data at least.
Yeah, Megan, when you look at PepsiCo as a company, we compare it to Coke a lot, but they're not the same, but then sometimes they are the same, right? Both of them had organic sales growth of about 15% a year ago through 2022.
Oh, I see.
Both
Okay.
companies' sales trailed off the second half of the year. The numbers were still higher, but
More like
the
the
volume,
refresh rate?
like you mentioned, the volume was down, prices were higher.
Oh, the
Where it's
animation
different
doesn't
is
sync up with the
margins, right?
frame rate of the
Coke
timeline
does
or
better
something.
on margins than Pepsi does. Now,
That's what it sounds
Pepsi
like.
says
You're
they're trying to get those
competing frame
margins up.
rates.
Coke's are 29%, Pepsi's 13%. Pepsi's said
Looks like
in
a
their last
strobe.
conference call they're working on, you know, cutting costs at Frito-Lay to keep your hands off my Eatos, PepsiCo.
What's BG?
Don't cut back on the Eatos.
Transparent background.
They're trying
Yeah,
to
it's a
get those
PNG.
margins back up, but this is like
See if
Tom
I can get
mentioned,
it.
it's more of a food company. Are you guys seeing any strength in some brands versus others?
Yeah, one thing that Pepsi has, it's got these big brands like the Eatos, like you mentioned, but it also has some smaller portfolio and up-and-coming brands. And when we look on a brand level, I know one of the brands in particular that is surging is Popcorners. I think that a lot of this is to do because it was featured in the Super Bowl, but we do see demand building in some of perhaps their healthier brands. You can see here Popcorners, Tropicana, which is juice, Bubbly, which is their sparkling water. These are consistently doing well and showing or flexing more pricing power, perhaps than some of the larger brands that you would consider down at the bottom. So I think that Quakers is probably the weakest point whenever we look at our data, and then some of these healthier brand options on Pepsi's front appear to be more resilient. However, when we look at just overall volume and mentions, the Eatos and the classic Pepsi and Mountain Dew and these sugary products and these high carb products, these are the ones that are getting the most chatter overall. So
yeah, I'll see if I can
these
find it.
brands are necessarily going anywhere. It's just we're
Send you what I got at
seeing
least
that
if I find it.
growth isn't as significant as something like these newer, smaller portfolio brands that Pepsi is really trying to build and grow.
Megan, that kind of goes into my question here, because if you look at that, as far as purchase intent mentions,
I mean, it just looks like every other bank chart basically is taking a sell off.
Is what they want probably on the
You like
top
it? You got
of
stomach
that,
for it?
that chart
Buy
that
the
you
dip.
have. But at the same time, it seems like those
Or
are the
short
ones
it.
that are wavering, where
Making
maybe
kind of a bear
the
flag, selling off,
the
consolidating
smaller
now.
volumes are actually going up.
FRC
right?
still
So,
halted, going up.
That raises concerns for me when I see that,
Yep.
when you got Pepsi, Mountain Dew, Lay's, Doritos.
Yeah, this will be a 100% move, won't it?
Negative
It goes from
territory.
close
Is
to
that
it,
a
from the
trend
bottom
that
up to
you're
here.
seeing, or is it seasonality?
72%.
Super Bowl, what is this attributed to?
I think a lot of
It's
this
a documentary.
Pepsi's kind of already touched
Nice.
on that volumes are slipping a little bit, and we're seeing just overall, I think the mention volume for Pepsi is down by about 5% year over year. This is a continued slide and dipping a little bit. And so we are a little bit concerned that maybe consumers are reaching for these things less because
Volume
the
down
pricing
BBY
is
is
really weighing on it.
significant,
However, when
though.
we look at overall
Look,
happiness
we're
levels
already
for
at
Pepsi,
2 days ago
the
volume.
happiness levels are pretty
It's
consistent.
only
It's
12:30.
about 70% positive, and it has been this way for about a couple of years now. So we're not seeing a big dip in sentiment, which I think is promising for Pepsi, but we are seeing those continued slides in volume. So I think really it comes down to how effective can Pepsi continue to pass along these price increases to consumers? How long can the consumer withstand it? But just whenever we look at this from a comparison point,
Morning,
Pepsi
Jonathan.
versus a Coke, Pepsi is a little bit more susceptible to these shifts in consumer pricing concerns
Offended.
because they do have this
Bed Bath
massive
might be double bottoming
snacking
there.
division that
Look, just
Coke
a
isn't
little 5-minute chart
necessarily
here.
playing in that game, whereas Pepsi
The volume
is.
today
So
is
just
significant
overall,
on
our
it, though.
data right now, if we were to have an earnings score, I know earnings
And the
isn't
fact
for
that we're
a
not
while, but
barcoding
we're at a negative
and the
23. So for us,
Double
this
two
is
looks
just
different. I
lifted,
think
just
I don't know.
shifted
That might be
into
good.
negative territory out of our typical neutral territory. But one thing that we don't necessarily take into consideration are those price increases. So far,
Might be a
Pepsi has
good
been able to build
sign
and
of
grow and really
a
lift
good
itself
final
based
dip.
on these increased pricing. But we'll see how long that holds up.
I don't like saying that.
I've seen that a lot, though, across the board. Home Depot and Lowe's had that. Lower volume, but higher prices. So the sales look good, but it's
Very
on lower
interesting
volume.
week.
Yeah, and I was just looking at some of the grain prices here, like corn. Those are off of highs that we saw late last year too. So maybe some of those price hikes will start to improve margins a little bit too. All right, great stuff as always, Megan. Appreciate it.
Captain Crunch.
Thanks, guys.
She's
Captain Crunch. That used to be solid.
Captain Crunch.
I loved Captain Crunch as a kid.
Oh, I was. No,
I mean, you tear the inside of your mouth up
Yeah,
with that cereal.
I was Fruit
but-
Loops. So yeah, same thing. Oh.
All right.
Tear the
So
inside of your
I
mouth.
looked at like corn, and we had the trouble with Ukraine-Russia war. Wheat prices spiked, but a lot of their products,
Especially
soybean-
Frito-Lay.
Yeah,
I mean,
Frito-Lay
think about how much
especially.
corn they go through.
Right. So you got an example trade for us here.
Yeah, how do you mean,
the
trader?
analyst basically
Not so
said
bad like
he
people
was
think.
wrong. He went to a neutral from underperformed at Bernstein.
Yeah,
The
I'd like to
analyst said he was
see
wrong. Delivered
outstanding
stronger
shares change and free float change
organic
to-
growth. It also got a price target hike.
And they have to have a
Deutsche Bank,
statement
who
that
cut
they've
all their staples
right
names
once they've issued
except
shares
for Pepsi
or converted
So how do
shares.
you want to look at this from an example
So
trade?
what I did, Tom, because
Oh, there's been no
earnings
filings
are-
for any of that
are the
stuff yet.
25th of April, so they're still a ways away. I looked at the chart, and after this big high mound.
I like you're being
that you
selective
see,
with who
this
you're
has gotten
trying to
really
snipe
range
target
bound
ace now.
for the last couple of weeks, maybe since
Specifically
almost
who
mid-January.
you want to be a
It's
member.
been very range bound. So ahead of their earnings report, Tom. I went to the April 21st, which is ahead of the earnings. And
Yeah,
I
my
looked at
little
the expected
little
move. About $8.50. Let's
smiley
round that to
on the
$8.50,
stream.
right?
I know it doesn't.
That's $17.
It doesn't have a
If you do
blank
it by
background for
two,
whatever reason.
Tom, I just went with
It is a
an iron
PNG, but
condor,
they put
much similar to what Alex Coffey did.
like
Proof
a white
that we
background
don't
on it for
talk
some
before the
reason.
show,
Gotta
'cause we
fix
came
that.
up
It's
with the
annoying.
same exact trade.
Yeah.
But what I did was, if you see, it's the 170 put, Tom. It's the 182 call. So right around that expected move, and I'm collecting about $1.67 on this, Tom. So a little bit, if you look, it's a little bit short in terms of the overall delta, but this is one that just between now and pre-earnings, this one is just wants Pepsi. And full disclosure, I traded Pepsi for 20 years on the CBOE. This is one that doesn't move a lot until it does, but normally it's a pretty range-bound strategy like you're seeing right now. This strategy fits that chart.
Yeah, and it had a choppy, later stages of 2022, but you're right, it's considered a staple.
Consumer staple.
Yeah, exactly. So let's take a look at that. I think it's a good comparison to Alex's really wide iron condor where you're collecting less credit on it, so you've got a little bit more risk. On this one, April
That's true, John
21st,
Parker. That's true.
Monthly series here, you're selling the
Like that gas
170,
might be
165 put vertical.
gonna
on the way
rally,
to the
maybe gonna
downside,
rally
and
up to
then
the UOP at
selling
least.
the 182.5, 187.5 call vertical. Collecting, we've got 160 up there. It's moved up a little bit higher.
it's much lower on the
collect
UNG.
closer to 165, 170 on that. But if you collect 160
futures, it's like
credit on it, that's
here.
what you can make on it. Your risk is about $340
extended
per
hours.
spread.
Oh.
Your break even's 168.40 on the downside, 184.10 on the upside.
Yeah,
Kevin,
since
you
I've been here
mentioned
before.
you're avoiding that earnings event, which is the 25th. So this expires before that. But you have some assignment risk on those short options. But this is a good, another good look.
I haven't added
at
into my
type of
BBY.
strategy
I've got
that
enough.
If you think the stock's going to remain range bound,
If I do decide to
over
add,
the
it'll
next
be
32 days,
after momentum has
this
shifted and
takes
we're
advantage of it. Your
fully
final
ripping.
thoughts are
So
real quick, Kev.
Yeah, and you still got, like I said, you're short the 170 put, you're short the
dip
182
bought it.
call. If you look
Plenty.
on the back on the chart,
FRC is actually trading now. Look at
that's
that.
the range that it's been in. It hasn't
So just
been really above
buying this dip
178
could have timed it pretty
It
good.
hasn't been below
It was a 27% rip.
Right around
Holding
170,
through
169
3 or 4 halts.
So, that's the range that you're playing from now to earnings.
Yeah, and on the downside, that 175 level, 174, is the 250-day moving average, which might be support, and then the 100-day moving average is near that 178 level on the upside. So,
Right color, keep the white
if
part.
you look at the technicals, then maybe you can look at it that way if you think it's going to be range bound.
Remember, the max
Yeah,
dollar you can make
I'll
is
send
the
you
credit
mine
taken
because I
in.
looked through a lot
The
of
risk
actually
is the
smileys
difference
and
between the width of the spreads,
there's
$5, and the
little
credit.
detail differences on
All right, great look at
on them and
another example on a short
I like the
iron
one I picked
condor here that's about a
best.
month in duration. All right, coming up
Can
after the
still
break, we're
find
going
it.
to take a look at Coinbase, which has rebounded over 110% so far this year. Fast Markets coming right back after this short break.
PNG. Oh, I have smiley PNGs, but I think the one I went with wasn't maybe a PNG. So I need to maybe make it also. Where I put that thing. Oh, there's a new low on BBY. Wow. 83 cents. It hit it. See if it still kind of double bottoms here. Still could. These A's, thanks, man. You're not a down day, dude. Very, very generous of you. I'm gonna have to pick you up on my yacht. Let's get nuts. Get nuts indeed. Your morale is peaking when it's most necessary. This is how you think of this price action on BBY. Oh, yeah, good one. I like this though. Great people in chat. There you go. Weeby got the gifted membership. Well done. Thanks. You guys can all thank Papa A's for Christmas. Christmas never ends in Mexico. Just keep going on into spring.
The ego on you.
Never even seen this person. Weeby Wijibanga?
Absolutely, Tom. A strong run up here to just a tick shy of 2015.
Thanks, Weeby.
And gold's been doing well, to say the least.
So you get these lurkers just coming out of the woodworks, feeling pressured to chat. It's great.
And, well, again, just a tick shy. 2014.90 was the high today. You can see we've pulled back significantly. 1981.80, but the high that we saw this morning back to March 2022 levels, the upper extreme of a range that we've been in since spring of 2020. So again, testing this upper level here. And earlier this morning on the Futures Show, we had Joe Cavatoni join us from the World Gold Council. He was talking about some of the bullish fundamentals behind the run-up we've seen, and he did reference that safe haven type tendency, flight to quality, something we haven't seen in gold for a long time, right? The dollar was the beneficiary thereof in terms of recent selling when we saw the indices selling off, but this is a little bit different. We've got geopolitical, we've got gold,
all right, Netherlands,
uncertainty
welcome.
Associated with that. So a bigger financial crisis has brought the bulls back to gold, and yeah, let's keep an eye on it. Ultimately, you've got the highs up around 2100. It was the next big hurdle for them to take out, but this is a solid run up in continuation of the pattern that we've been seeing, and again, testing an upper extreme range that we've been in gold. We're going all the way back to the spring of 2020.
Yeah, and definitely that dollar hitting
one-month
lows today also probably contributing to a little bit of that upside this month in
kind of holding up
the
up
precious
there.
metal. All right, thanks to Ben.
Buys still kind of rallying from that low, I think, from the FRC sell-off.
And gold, but now let's bring in George Tillis, senior markets correspondent here. We're talking Coinbase, George. As I mentioned, the stock's up about 110% so far this year.
BBBY,
Bitcoin's
82
up 70%
cents.
so far this year, so not too far-fetched.
20%.
As the correlation can sometimes be pretty high on those. But Coinbase, you know, they rely on transactions and fees, George, at this point. And it seems like eventually,
selling.
Maybe
I don't think supply and demand really affect the price.
You know,
what is interesting though is this lack of barcoding. The L2 is not stacked like it's been,
right?
And the volume is
I think so.
pretty significant
this
today.
is a really big challenge for Coinbase because even though Bitcoin is higher, you're seeing the correlative effects of Coinbase also commensurately move to the upside. But if you break it down, I mean, what's going on, I think, with Bitcoin and maybe Ethereum as well.
We're at yesterday's volume
already.
already,
Of folks
or
that
2
are
days
actually
ago.
moving their assets from custodial brokers like Coinbase to cold storage.
We're 48 million. 2 days ago it was 46. Day before it was 48. So
down. In fact, if you look
I think we're going to beat yesterday's volume by a long
transaction
shot.
volumes on a monthly basis were down about 74%, with top line sales down about 60%. So revenue was down 60%. And we're seeing really a challenge for Coinbase if you really consider
it's making a new low,
the
82.
aspects of 2022's sales compared
Got
to
this,
2021. It was a huge
80
turnaround.
level.
I mean, they generated about 3.1
was a
billion
pre-market
in
level.
sales in 2022.
Oh, man.
Now
They're really
compare
shaking
that
it
to
out now.
7.4 billion in 2021. That was, well, again, like I said, more than a
In the car
60%
to
decline.
put it on to
So
receive.
it's a really tough situation for investors in Coinbase.
Yeah, I think you have to
because again,
you have to
like
close
I
out
said,
a chat to
transaction
see it.
volumes are down, if you will. Transaction fees are down. They're gonna have to raise fees
Yeah,
to
here's
make
the
up for lost
pre-market
volume.
low.
That might not necessarily
Man,
work out in this
this
particular
is more bearish than I was
environment.
expecting today,
But
honestly.
if you think about the
I figured we
nature
would
of
bounce
the
out of here.
analyst, now the
This
midpoint
is crazy.
analyst or average analyst has a $63 price target.
I have no more money to donate.
Tiger Global actually increased their price target to a street high of $200 because they actually see quite a bit of sales growth on a forward basis.
MicroStrategy going,
beyond
yeah,
what
SPY's
the consensus estimates are now.
flash to the upside
consensus
there.
estimates for the forward sales growth is still a contraction, about 24%.
If GME does have a rally,
Coinbase, as well as
I don't know,
EBITDA contraction
it
of
might get shut down by all
52%.
this volatility to the
Whereas if you look
downside.
at Tiger's analysis or call, they actually see growth of about 24% in revenue in the next year. So it's a complete change relative to the consensus estimates for Coinbase versus the analyst
Might be an RSI divergence around the 5 minute.
Again, it's a tough situation to be invested in this name,
What
especially
an ugly
considering
chart.
they lost about $2.6 billion on $3.1 billion in sales last year. So that's probably going to weigh on the stock going forward. The short interest on the stock is still relatively high, around 19%, but you can't disregard the move year to date. It's up over 100%, as you mentioned, because of the fact that it seems to be correlated with Bitcoin. So if Bitcoin continues higher, the stock might actually continue to outperform as well.
Yeah, that was a hefty price target raise up to $200. Basically, non-consensus call is I like what the analyst said here on Coinbase, but we'll have to wait and see what happens with Bitcoin as it continues to surge also so far this year. All right, thanks to George Tillis, Senior Markets Correspondent here on the network.
Okay, Tom.
Yep, thanks, George. Helping us break down Coinbase. Kev, Bitcoin, the correlation there.
Right.
People are getting back into Bitcoin. It seems like, they're using it, as maybe a currency hedge, maybe a market hedge here a little bit. I'm not sure, but, it continues to surge, and it's kind of been, a silent
Coinbase
rally
rallies with
here over
Bitcoin.
the last
Bitcoin's rally, right?
3 months.
The flow into Bitcoin has been startling and a little bit, worrisome, I think. And here's the thing. Obviously, Coinbase is going to rally in correlation with Bitcoin. But there's storm clouds on the horizon. Regulation is coming for this industry. And, Tom, something as simple as Ethereum, if they make that a security,
SPY moving up,
right, that moves away from these exchanges, and that is 25% of their revenue was Ethereum. So when you think of something like this, yeah, they're doing very well. They're always going to be correlated to Bitcoin. But like I said, they've got some serious landmines coming up in the future here.
Yeah, and I know that they want to expand more globally, but the regulators overseas
have no interest.
Yeah, exactly. I mean, and as we continue to
40K today?
regulatory issues for Bitcoin,
really? Today?
there's
20%?
some semblance that, hey, it's going to be volatile. There has a potential.
They haven't set a date. They haven't even voted on it yet.
It is. So
the only date that they've set is the date to vote.
Another Iron Condor, Kevin.
No, not even the date to vote. They've only set the date that you have to hold the shares.
Just selling it out of the money.
I think it's I don't know. I don't think it's a normal reason for a reverse split.
Move that we've seen so far this year. So if you're neutral,
Both of you
slightly bearish on a name like this is a strategy that may work, and that's
you know what I mean.
So
the only date they gave us was the date to hold the shares by. Now, why did they give that date?
And just selling it out of the money call vertical.
Why did they give the date for the shareholder meeting?
Selling the 80 calls
to vote on it.
Buying the 85 strike put. So short $5 wide call vertical to the upside.
Sure, that could come next.
We've got a $1.75 credit on there. It might be a little bit lower as Coinbase has come off here a little bit. But this takes advantage, this type of strategy takes advantage of maybe
about
that
25K more today,
where you think it's maybe going to consolidate
the way,
or move lower or reverse here a little bit. If you collect 175,
I might need to see some screenshots or something of this.
Over the next month. Kevin, your
These
thoughts here
purchases,
on
this portfolio.
short call vertical to take advantage of the sensational move we've already seen.
Yeah, you've seen the move in Bitcoin. You've seen the move at the corresponding.
That's crazy. Yeah, 25,000 shares
This
is more
is
than
just
$25,000 now.
We're near the end of this move, and
Or less
you
than,
don't
rather.
need it to go down for this to be profitable.
less than,
You're safely above where the market's trading. So if it just stays here, you're profitable, Tom. But obviously you're short about almost 8
John
deltas,
believes.
about 7.8 deltas.
Yeah, and we mentioned 32 days till
You
expiration.
got your average to
on this one. We got
135.
the risk profile up there. We don't have earnings.
That's really good.
For a while, Kevin, not until the 9th of May.
9th
so
of May, right.
You don't have that event risk that comes along with sometimes with earnings, so you have to take that into consideration. And it seems like it has topped off a couple times.
Well, yeah, we've got
last
a
month
lot
and
more
half, 2
volume
months,
today for one.
Just around that $80 level.
It's
but you
not
break even
barcoding,
there.
which we've
Now,
seen
you
the
do have
last
risk
like
on this
2
trade,
months.
as we mentioned. You got
And
about
that
$325
coincided with this L2 that's
in
not
risk
stacked
per
at all.
spread.
It's
You
just
got some
very
assigned risk
light,
on that
very
short
thin.
call. Also, Kev, your final thoughts here.
There's a lot of volume traded, but there's not a lot on the L2. So some algos
and it's been
shut off,
choppy
other ones
trade
turned
all
on.
day.
Something
It doesn't seem
happened.
like there's a lot of liquidity. It maybe seems
yesterday's
like
drop.
there's some thin trading ahead of the FOMC.
This is totally
The
different.
market sold off here right as we came on the air. It's all recovered now. The Russell's back up almost 1.5%. So whatever was worrying the markets has dissipated.
We don't know if we're gonna have 10. We don't even know if there's gonna be a reverse split. If there is, we don't know what the amount's gonna be. Thanks for you guys. Thumbs up.
They're gonna move. Get used
Thanks
to
for
the
donos
movement.
again today, Ace, and your free memberships. We got 38 likes. Appreciate it. BBBY is at 81 cents today. Pre-market it hit 75 cents.
But stick around right here on the TD Ameritrade
But we're
Network.
bouncing on this
Next Gen
one
Investing's
pre-market
coming up
low.
next.
We'll see. This did set up a little divergence, but it's only in the 5 minutes, so I don't hold a whole lot of weight on that. But yeah, I have a lot of different stuff. No barcoding, more volume. L2's different, so something that triggered something. It seems like, and I think it's more than just a 20% sell-off, basically. GME didn't bounce a whole lot with that, but still holding up nicely, 1.5%. Covered calls on there. Let's see what they're doing. We're up 5%, so I'll probably close them tomorrow in case we do get a big gap up from their earnings. Three Dragonfly. I mean, I don't know. Of course, we can speculate it's because they can't be on Dragonfly and what BBY at the same time. That's, I guess, the main speculation at this point. Unless there's more to it, I'm not sure. But was there other reasons why they would get off of the board on there? I don't know. It is kind of interesting. Like, why would they all get off at the same time also if there wasn't something going on? Like, are they some kind of little pact? Like girls going to the bathroom together? Let's all get off the board at the same time. I don't know. It does lead you to believe that they're going somewhere else, right, at the same time. I don't know. What are your thoughts on it? UPS? Good luck. You're a firm believer in what? In that thesis I just shared about them leaving? That speculation is true? Guys, you're gonna give Ace a stroke if you're not a member. Yes. Well, that is awesome if that's the case. I've decided to wait for momentum to start before I put any more into it, and even then I'm not sure I will. However, I applaud anyone that has conviction and sticks with it and acts on it. So yeah, this is an awesome gift then, you know, this cheap price for sure. I mean, just me just looking at the TA and the charts, like it's definitely, today's definitely different. I mean, so different. So I don't know what exactly that means, but it seems like a good thing, because more of the same would be just more downs. I mean, today's down, but maybe bottoming maybe. Jeez, yeah, market cap's 95.7 million. I don't know. They switched. It's a different one now. There's no barcodes. The L2 is not stacked with orders on both the bid and the ask. This is super light. You know, we would have 250,000, 500,000 bids sitting on here. None of that now. But what you would think would be lower volume with less bids and asks, it's actually higher volume today. Much higher volume with less on the order book. Isn't that crazy? Look at this, we're at 50 million volume already. 2 days ago, the whole day we had 46 million. Day before, 48 million. Yesterday's volume was 59 million, but I think we're going to pass that here in the next hour probably. Going up here. Taking into account the 300. There you go, John. Or no, you already have one. who's the sore spot in our chat that's not a green member? Thanks, Ace. I appreciate it. You just gifted one of you Lucky's membership. Get it while you can. Get it while you can. What 300 million shares? Are you talking about that? The filing talking about voting on a reverse split, and then it said outstanding shares was 300 million? Is that what you're referring to? It wasn't a statement declaring that the outstanding shares has increased, that they've diluted the common shares at all. I don't know what that was about. I'm waiting. I'm not jumping to conclusions on that because we don't have any info. It doesn't. Yeah. I'm a very non-jump to conclusions kind of guy. Like to be late and right, then early and wrong. Don't be worrying about Tesla. To the moon. Tesla is rallying.
The ego on you.
Who claimed it? Substance abuser. Oh boy. No more for me. We'll see once it's at $2 and ripping. Don't anyone click the green box. Thank you, Ace. Appreciate it, man. Alright, we do have an RSI divergence here on the 5-minute. What will transpire?
Monday.
It's only 5 minutes.
Caps, but also some other familiar
Thank you guys for your likes also.
And stores. So let's
Ace
start
is
with
a one-man show holding up everything else. You guys can hit the thumbs up.
Maybe a
Thank you for your 38 likes. I appreciate it. Very, very thoughtful.
I know, I think I need
all
like a
support.
mid-afternoon Starbucks on this Monday, but we did get news today from the company that their CEO now.
You're supposed to remove the small market cap. What do you mean remove the small market cap?
2 weeks earlier than what had been expected. He will lead the company's annual shareholder meeting Thursday, which will mark his first public address as the company's CEO. Now,
yeah, maybe we'll get a double top up here, Mr. Invest.
Transition was expected
Oh,
to
394
occur on
double
April
top.
1st. 1st. And he's
That FRC
reported
definitely
taking
scared
over
it
for
midday
the
there.
beloved Howard Schultz, who's ending his 3rd stint
40
on
likes,
the job.
thanks guys.
Schultz did return
Legends.
after nearly a year
Got a couple
after
more in there.
former CEO Kevin Johnson did surprise the street
You bought a call and
by
you're losing?
announcing his
Which depends on when you
retirement.
bought it,
So
when you plan to sell it.
Schultz has been one, I would say, at the head of Starbucks. He is somewhat the face of Starbucks when you look at its really growth over the last
At least
several
wait
decades,
to see if it
and
hits
also its
this
efficiency
resistance up
we've
here,
seen
394.
under the reign of Schultz.
It
He
might,
did suspend the
very well
company's
could.
buyback program for months,
Should get an exit
as
there,
well as
close to
pushing
break even,
back
if
on
not
some
profitable.
against baristas' union plans and announcing a new
Abdullah.
overhaul strategy for the company. Now, despite stepping down earlier than expected, he is.
I mean,
still
FRC was what I literally was thinking of Credit Suisse and
on
FRC
March
on
29th
Friday,
about this company's
which
union
it's not
activity. We've
a
heard
real
from
big secret. I
employees
mean,
that
those
they
are,
want better pay
those
as
are the
well
ones
as
that
better
are
working conditions.
speculated
He will
at
still be the
going
one
down next.
addressing that
Credit
matter.
Suisse,
He also did say
that
though,
they
several
did,
months
but they're
back
getting
that he does not plan to
getting
return
bought out.
as
I'm not sure what's
CEO
going on
for
with Credit
the
Suisse,
4th
but
time. This is his final time at the helm of the company. I guess we'll have to wait and see if that's accurate.
yeah, it's down 50%.
That change in leadership
And FRC
today.
was down
And shares are
50%
up,
at one point
over
today.
1%, so it does seem like the street is enthusiastic about this leadership change, Alex.
Yeah, I think
Cash
because
out.
this isn't
Nice.
new news, it's just a timeline.
On the short side or long side?
Change. It
Short
gives
side?
investors a chance
hope.
to hear from the new leadership really soon as well. So
That gas coming down.
You know,
really?
I look at this. This may have always been the plan. They give that other date just in case the new leadership wasn't maybe ready for that conference where they would address the street, but things are up to speed. They accelerate that timeline, and I think that in the end, this isn't really a huge market-making event in terms of market-moving event, I should say. But it also illustrates that, you know, Howard thinks that it's ready to go on its own, and he can kind of sail off into the sunset once again. But, you know, he's always that phone call away, I would say. But I think investors would echo the same sentiment. Not that they don't want to see Howard back leading the show, but if they don't need to call him back for that 4th time, things are probably going well for just the company that just is the definition of scale. I mean, they're everywhere.
They really are everywhere, and yeah, let that poor man finally retire, I guess.
ripping
And I think
there.
it's well-deserved after his tenure at
There was
Starbucks.
another one,
Our next
Sultani
team
did
today
it.
is Foot Locker, and Foot Locker actually initially got
The
a pop
ego on
pre-market
you.
Got it at a
this
computer
morning
share.
on the
Well
back of
done,
their
Ace.
fourth quarter results. Now
You
shares
saw some
are
covered
lower
calls?
in reaction
That's a
on
great way to
softer
exit
than
a play,
expected
honestly.
profit forecast for the year, but management
Don't even
does
try and
still
time the top
anticipate
as
some
much and
strong
get a
long-term
high exit
growth as
price.
their new CEO, Mary Dillon, has been moving to
Not
reset
sure what
the
that little
business.
rip there was
Now,
on
they
SPY.
did post earnings that pretty sizably beat expectations at 97 cents per
FRC
share
still
versus
grinding back
the
up.
52 cents per share the street had been expecting on sales that did also beat expectations. They now expect their fiscal 2023 adjusted earnings to fall between $3.35 to $3.65 per share. This was well below what the $4.11 that had been expected by the street. However, they did say earnings they expect to grow at a percentage rate in the low to mid 20s for the period, covering
GME is
fiscal
like
years
perfectly
2024 through
grinded on that 50 moving
2026.
average.
But investors are now
Just hit it.
focused on
Moved up.
its outline for its new long-term growth strategy after Mary Dillon did take over the reins late last year.
I don't think the little rally's
This
over,
new so-called
Mr.
Love plan is
It'll
expected to be
get a little
detailed
higher.
yesterday and will focus on the
Starts to
expansion
waver
of
up
their
here, then that
sneaker
might be a nice
line, as
short.
well as the opening of new store format stores and the closing of some of their underperforming stores. An also welcomed update will be their ties to Nike after it's been pretty public that Nike was
Yes,
distancing
potentially double
themselves
top
from
forming.
Foot Locker.
This little bear
Mary
flag
Dillon
here on
has
BBY
said
in the
that she
5
sees
minute,
Foot
but
Locker's
we do still have this
partnership with Nike
divergence
as
on the
a
RSI.
multifaceted
It did
relationship
get
over
close to
many
this
years that they will continue to
pre-market
build
level,
on, and
so
it seems like that will be an ever
potentially that could be the bottom
story.
there.
But Sensing shares down now 4.5%, fueling the fact that this stock is down now over 14%
Bear flag definitely is
from
looking
its high.
more bearish than
Yeah, so
anything.
while
But
we'll upvote Starbucks, I'm going to say downvote for Foot Locker, although I think today's trading has been fascinating. The initial reaction to me didn't necessarily
we can.
jive with
I was
the
reading through
story.
some
They told us that things were going to be a little bit
BBBY
tougher
DD
the rest of the year
earlier.
in 2023. As
Just
the
talking about
earnings,
the reverse split and
outlook
stuff.
quite soft relative to what the expectations
Might pick
were.
that back up.
Kind of news blow was softened by the fact that you talked about that 24 to 26 time horizon being laid out as
non-barcoding
more of
and,
an
like,
optimistic,
realistic trading
positive
on
thing
there
for
is-
investors to look forward to.
Seems good.
That's a long ways away, and we talk about this stuff with George quite a bit. You know, the longer out in time these forecasts are going, the harder it is to predict what's going to be going on. They don't
Talk
know
about XXII?
all the
Yeah, it kind of came
factors
down
that
a
will
little
be,
bit, which
playing into it. That's the
isn't
hope, that's
as
the goal, that's what we're
repetitive as it was
shooting
doing
for.
before, which
But the farther out in
isn't
time,
good,
the harder it
but,
is to deliver on those promises and those those
Still not
goals.
bad.
And
Like
so So I think the market
Just need to hold this level,
settled in
basically.
on what to me
Right?
seems like the logical reaction. Which
As far as
is,
fundamental, I
hey,
don't.
if the
You
rest
guys
of
know
the
more
year's
about it
gonna
than I
be
do.
tougher than expected. Hard to see why this one would be
Yeah, they do
lower
talk about
today.
Foot Locker.
So
I
give
think
us
because
some
their earnings are
news
coming
that
up, so they keep
reactions
talking
to be
about Foot
had.
Locker.
But it's been both directions, so I'm interested to see where it ends up today.
Yeah, it's been a busy morning, even just for Foot Locker.
The
Our
vote
next
is
news
not
story
on the
now is
27th.
lower.
No.
Microsoft shares are down
BBBY
just
gave
over
one date
2%
out of
after
everything.
Evercore did
They could have given a
upgrade the
date
stock,
for when
raised
to
its price
vote.
target to
Couldn't have given a
295
date
from
for.
280.
I mean, if they didn't need a vote, they would have given a split date. They gave the one date, and that was when you had to have your shares recalled in order to vote.
AI technology into its core
And that's the 27th. That's
productivity
Monday.
suite. Now, Evercore said this rollout
So if you're lending your
helps
shares
illustrate
out,
why they expect Microsoft
and you want to vote,
in a
you have to
leading
recall them
position as it
by
relates
next Monday.
to AI adoption, especially
So
in the commercial
final dip before the rip,
They also said
maybe.
that Microsoft is in a unique position in terms of being able to embed AI across a dominant application franchise that uses first-party data to drive significant productivity benefits for its users. Now, separately, Microsoft did announce they're preparing to launch a new app store for iPhone and Android smartphones games as soon as next year if their acquisition of Activision Blizzard is cleared by regulators per the Financial Times. The new rules that are requiring Apple and Google to allow app stores that are owned and operated under companies are expected to come into effect under 2024. So this is seen as a positive for a name like Microsoft, although today still seeing some weakness. Although Microsoft is still up about 13% for this year, up 9% for this
yeah, and the
month.
fact that they're reverse splitting
That is still an area of relative strength really throughout this last month, given some of the
it's unusual if it was
mass
just
selling we've seen.
it's unusual to reverse split as far as I know without having been under $1, traded under $1 for at least like 30 days to or more, to where the stock, the company knows, okay, it's going to be hard to get over $1, we're probably going to stay out of compliance, we need to reverse split. They haven't even traded at all below $1 before yesterday.
Maybe some of the money's coming out of these days,
So
like
to
Microsoft
preempt
are
it
just so strong
and say
in their
reverse split, it seems like
positions
it's
in their market,
maybe for
so
this
strong
QSIP
from a capital position.
change.
Also,
We
you
have
to
seen
wonder
some
as well,
squeeze type
just when you're looking at Microsoft
movement
and
on
also
other
this will tie into our next story as well,
stocks that have reverse
we keep
split.
hearing about layoffs. We keep hearing
So,
about things in terms of cost
It is
cutting.
on the playbook of how to kill illegal naked shorts,
look to do. And so
10-step program.
For Microsoft, super peculiar though to see such an optimistic tone from analysts and from a news story standpoint. Yeah, one of the worst days that we've seen in Microsoft in quite some time. Last one on the list though is Amazon. And this is another layoff story.
This is another layoff story. So Amazon
no, I didn't sell
did
XXI. I
disclose
still
they'd
have
be
it.
laying off about
XXII.
9,000 more employees per CEO
Squeeze
Andy
coming soon.
Jassy in a company memo. Now
Maybe.
the cuts do follow an earlier round of layoffs that began in November, extended through January.
Well, yeah, I
and
mean,
affected more than
if
18,000
it was a
staffers.
true,
The
fair
latest round is
marketplace,
expected
then
to
recalling
impact
shares
Amazon,
shouldn't do anything.
including
But
their advertising,
if
HR,
they've
and Twitch
rehypothecated
units.
those shares
Per
many
this
times
company's
over and
memo,
lent it
we are
to people that are
seeing
lending
a
it to people that are
lowering
lending it,
reaction, which is a bit
then
odd
recalling it just
typically
sets up a
it's
chain
seen in the
reaction
tech
of
space, it's actually
market
been
makers and
positive,
brokerages
at
having
least
to
in terms of the stock's
buy those
reaction
shares
to a
to
restructuring
return.
or another round of layoffs. That's not
So you have
the
to
case today,
unwind this long
obviously,
chain
for
of
Amazon.
lent
Amazon,
shares,
another
just
name that's
like our
hanging on to its
fractional
momentum
banking
today,
reserve
gained up
system.
about 3%.
Fractional
And
reserve
up
banking
15%
system.
for the year, despite still being
So
off
that's kind of the theory behind that.
about 43%. Amazon, though, I do think its scale is something important to keep in mind when we discuss layoffs, Alex, and not to say that it's not significant that it's laying off 9,000 employees, but this is a company that is so massive in terms of its employee network that I do think that is something.
I kind of initially thought that my next bear, like, oh, they're just being proactive, but
massive Amazon truly.
then I thought about it, and I've never seen a stock do that, and there's really,
about this one is that these layoffs, at least from what
I mean,
was
there's
reading,
not
are gonna
a
be centered
reason
in
to do it
things
so
like AWS,
soon,
things like
because
their
you have
Twitch,
like 90 days
platform, and more in sort of those,
from when you trade under $1, and in that time, if you go above $1, it resets that time frame.
Delivery
So
workers
there's
or
so
someone
much
who's
time, and
working
even
in
and
some
then
sort
at the end of the 90
e-commerce,
days, say you trade below
factory.
$1,
So
and you never go
this is
above
seen, I
$1
think,
in
is,
that time frame,
different
so you
from
get up to
business
90 days.
that if they're
Then they
cutting
send you a
jobs at
warning or
AWS,
notice,
that's
and
the
then you have
bread
180
butter of
days
this
to fix
when
it.
it comes
So you
down
could
to
do a
it.
reverse
So,
split then.
a little bit different
And then at
story,
any
but
point in time,
all things
between either of those
considered,
time frames, if you
Amazon's
go
just kind
above
of been churning
$1,
around this
it
level of,
resets the whole
between
time frame.
90
Then you have
and
another 90 days
105
or
for
another
the better
180
part of what
days.
seems
And then
like
after all
the last
that, if
few
you
months.
actually
So we'll see
fail
where
to
it
get
goes.
above a
They're gonna stay
90
up, though.
or
They're
$1 in
Amazon.
90
Seems like
days,
it's
and
been
then
a while
fail to
since
get
we
above above it in $1.80, you can then ask them to file an extension, and they almost always give extensions. There's stocks that trade under $1 for years, so I just don't think that's what it's for.
Starbucks as well as Amazon. We'll be looking at the charts as well as some example trades in both of those names coming up next.
Yeah, I mean, my outstanding shares, my free float have not changed on any brokerages as far as I've seen. The only thing I've seen change is the market cap, which is now 96 million. I don't want to be too hypey, but it does seem like a strategy play to do the reverse split and to do it so quickly, and to say, oh, by next Monday you have to have all your shares and have to have them all recalled in order to vote. It just, but maybe they're just playing into it and it's all just means nothing. Yeah, there's risk into the play. There is. SPY creeping up still. See if we get some resistance around here. Maybe even break it a little bit. Hourly's kind of the little cup and handle being built, so might not be all bearish. Maybe bearish towards the end of day, but longer time frame, we're still like we're in a kind of a bull flag here. The inverted head and shoulders is still down here, and now there's that kind of little cup and handle. So
consumers' discretionary budgets, because both of these names, it's very easy to spend money, as Starbucks does have that beloved app where it's very, very easy to just reload frequently, which I have been victim of, and I'm sure, Alex, you can relate. But here to tell us more now on the charts and the technical levels we need to be keeping our eyes on is Rick Ducat, our chart
okay,
master.
that RSI divergence is kind of being confirmed here.
This is a name that also takes too much of your discretionary.
We're almost at yesterday's volume already, and it's only 1 o'clock.
Actually, I don't really go to Starbucks. I'm not a coffee drinker.
That's better.
Yeah, I do like iced teas and stuff from there, though. But anyway, so we starting from right about here, we were in an uptrend that took us to our yearly highs. Since then, it's been broken. We're down about 9-10% from that point here. So we're in more of a downward channel shape here, sloping downward. Two trend lines that are parallel to each other, one going across the highs, one going across the lows. So we broke below our two shorter term moving averages here, our yellow 21-day, our orange 63-day exponential moving averages. We also broke below the 103 level, which looked like an important point. That was right about here where the gap that we had there was opened up after moving upward there. The moving averages, our faster moving averages, crossing below our slower moving average. Not necessarily the greatest trading signal as an entry or exit, but still worth noting because it's reflective of the overall trend starting to worsen for the bulls. It's trending more downward here. Looking at our momentum, we can see that there's a trend line as well going across these peaks in the RSI. Now, not everyone is aware of this, but you can use trend lines and support and resistance on the RSI similar to how it works with price. So look for a break above this trend line right here. That would be a clue perhaps that we're in for more upside action in prices if it happens before price breaks out. In terms of support and resistance, a couple levels stand out here. First, the 96.50 level, this green dashed line, right here is our most recent lows. That's about where price bottomed out last time. It also happens to be roughly the point of our purple 252-day exponential moving average. So we've got two sources of support that are kind of converging right there. So it's a level that's worth watching. To the upside, we've got our two moving averages that I mentioned, our 21-day and 63-day exponential moving averages, coming together right around the 102 level. So once again, we've got two separate indicators. So there's greater weight on that price level, extra sets of eyes looking to make trading decisions based on those indicators.
And now looking at that 102 levels,
SPY waking up there. We'll see if it grinds up a little more before reverse.
So Alex,
In the danger zone. Who's Kenny Loggins? Loggins?
Leadership shakeup, even though Howard Schultz, I do think, was so loved by the street, but it's time for a change for Starbucks, and you're optimistic on this name that has had some degree of resiliency, not only really this year, but over the course of the pandemic. They handled what was a difficult situation very well. So with that mindset, walk us through an example trade leaning more neutral to bullish in nature.
This company is about $115 billion in market cap, and it effectively sells something that you can just make at home for less. Yet it's been able to build this tremendous scale.
Yeah, it might be a nice short here. I don't have margin for it. I need that gas to go up.
People enjoy. They like
Not
going
even
there.
crazy
They like
amount.
making this a
10%.
part of their day every single day. And for
crazy,
many,
but it's not really.
I truly believe that this is a consumer staple, and it will be one of the last things that they cut out of their budgets. And so with that, you can understand.
BBY is slowly grinding up here. Volume did pick up a little bit since we've been bouncing.
It will ebb and flow as stocks do, but if you're
Can you
of
show
the
me more
belief that
volume?
it can stabilize and
bars.
move higher as it is today, maybe something in the neutral to bullish camp could work for the advantage of a particular trader with that outlook. And so I looked at selling a put vertical below the market. Going out to April on this one, tons of strike selections available now that those options rolled off over the weekend. And so with this, I went through the 98, 93 put verticals, $5 wide. If we're able to collect
you're aging yourself so bad, Dennis.
Risk-reward ratio,
So
risk
bad.
at 375 to make a.
So you're also getting Golfing Candle there.
$125,
Should be more
not accounting for
confirmation
the
of a top.
transaction fees. The break even on this would be
Got 3.5 minutes for it.
96.75 to the downside.
Schwab.
So a little bit over
Aren't they trying to like bail out these
lower than
banks
where the
also?
stock
It
currently
sketches me out
trades.
many banks are
Bear
trying
in
to bail
mind,
out
this isn't the most
buying bank.
volatile of names. It's not a Tesla.
Looks
it's
like a bear
not
flag.
A meme stock, or at least it
Full
hasn't
flag.
been in
Crazy
recent
volatility
past.
there.
It only trades with about 28% implied volatility.
Below that
For
support.
context, the VIX, which is kind of a barometer of what the overall market's volatility
Yeah,
is.
if you want a good
is
deal on it,
24 right
you
now.
could
So
wait.
it's a fairly small premium over the overall market.
People buy Applebee's
That's
because they make a burger at
reflection of the
home.
business
Brilliant.
model, reflection of the scale and the size of the company.
No, he's
But
making
all
that a
things
point of
considered,
why they're so
on
good,
this one,
'cause
best
do
case
it all at
scenario
home, but
for
they've
this would
still
be this stock moves
been
higher,
good.
or at least holds on to its current stock
1993.
price. These options work towards zero over time, and you would
that's when the
hope
song
that they
came out.
expired
Oh.
worthless at expiration,
Dang.
and you keep that full credit. That's the best case scenario. Worst case goes
Too
down. It
salad.
is risk defined though, Jenny. Below 93, the risk stops, and it would go through assignment and exercise more than likely, offsetting for 375, the worst case scenario.
Okay, now to shift gears here and look at Amazon, which is lower 2% on the day. And instead of
You
getting
know the
a new
artist to
leader,
that
they're
song
just,
from the
eliminating some
90s,
positions, as
so
they
much
did
so
announce
that
they'll
you
be laying off about
liked it
9,000
enough to
more
know the
employees, which
artist.
then brings its
Probably
total
listen to that at
layoff
some
count
sort
now
of
to about
prime in your life.
27,000. They're not the only tech name
Late
that has had
teens
2
to
rounds of layoffs.
20s.
And Meta just announced the same thing last week, but we are not seeing a favorable reaction today. So Rick, tell us what you're seeing on the technical front.
Well, I may not be a big Starbucks person, but I definitely am an Amazon person. So 1 for 2 on these at least. But looking at the chart here, we can see that it's been in a persistent downtrend that's lasted much of the year. You can see this blue dashed trend line going across the highs. We're down about 43% or so since we hit those yearly highs. And it's just been kind of down and to the right, kind of a rougher time here. But more lately, ever since we had this earnings event back here in October, it's been kind of range bound, kind of stuck in the
think I
middle,
like the
just moving
non-barcoding better.
sideways, not really gaining much ground one way or the other, except for this little excursion to the upside on earnings that was quickly slapped back down, much to the dismay of the bulls, I would think here. Since then, we've been in a downward channel, trending lower, but not quite reaching our yearly lows near the 81 level. Within the past week or so, we've pushed out to the upside, though. We broke above our two shorter-term moving averages, our yellow 63-day, our orange, yellow 21-day, orange 63-day moving averages. We're retreating a bit to that 63-day EMA today. We're just a little bit above it, but that would be a place to be looking for some support as this day draws to a close. RSI, not much to say here, kind of middling.
Volume on BBBY is great. We're almost at yesterday's volume. It's only 130. So,
and in terms of support and resistance,
L2 is totally different than we've seen the last couple of months.
Is a place to watch.
And the actual price action, non-barcoding.
Where price stopped, you can see multiple times
so
right here.
I thought it had more to do with the price,
a source of support,
but apparently not, because
here and here. It was a
we're
source
lower
of
now,
resistance.
It's not doing it.
So remember the old adage, old support can become new resistance and vice versa.
I've just seen it more on like penny stocks, so I think it is an algo that's more common with penny stocks, but doesn't necessarily have to trade that way.
Averages that I mentioned, right around the 95,
493.
level.
Okay, so you didn't.
Also got
well,
our volume profile.
That song wasn't popular.
This thick red line here.
That's like when that song came out.
Gives us the level of heaviest trading during the
options or shares. I'm only selling options and buying shares.
A couple of things to be on the lookout for there to the downside.
Unless the IV has also come down dramatically for some reason.
To the downside, and Rick, I am in the same exact camp
as
you
is still
Amazon.
highly elevated.
I might as well just have them like I funnel into my bank account.
That's the next thing that we're going to see that changes is the IV.
Email that some subscribe and save orders.
We have to start adding strikes lower than half penny,
and perhaps why Amazon is as successful as they are. But we'll leave it there. Appreciate all the technical insight as always.
Yeah, when something's this cheap,
and Alex,
it makes sense just to buy shares.
Did highlight 93 the downside.
When options are this expensive, I'm trying to sell them. Maybe do spreads, but
bearish approach here. Walk us through a more neutral to bearish example trade.
Well, first off, subscribe and save is misnamed. You don't in fact save. You just end up with more of the things than you wanted. So pro tip, just don't do that. As far as the trade itself, so I think we start looking at these layoff stories, and you can spin the first one as, hey, we're moving towards eliminating roles to bolster our kind of cost situation. It's ultimately going to lead to a more efficient company. But when you get to the second, third, fourth, fifth line of layoffs, and they're all at different kind of stages, these different companies in different departments, and they're just so big. But at some point, that message becomes tougher and tougher to sell. At some point, you're cutting jobs because you have to, because you're looking to save costs aggressively. And so you can see the interpretation of this news being negative, and I think the market's doing that today with the stock under pressure. And so say you are a little bit more neutral to bearish on this one. Rick highlighted the 103 level to the upside. If we just center around
really?
that,
that's weird. Never heard of not being able to buy single shares.
We used.
Well, that's good. You should just buy in 100 lots.
We're flipping it around, the neutral to bearish version of this. So selling a call vertical above the market, going
maybe because they don't do fractional shares. If you just did one share, it'd be less than $1. I don't know.
Same prices.
Actually, $1.25,
$3.75 in risk.
Strange, but
the break even would be $104.25 on this one.
And even on the L2, we have lots of orders less than. I mean, that's just Weevil, but look, we've got a 20 order there, 85, 85.
And so now the best
I don't know what all these small orders are. We're seeing retail's orders here, I think, which we haven't been seeing because it's been so stacked.
To the upside or to the right. And it begins at 104.25 at expiration. The risk is defined, though, however, above 108, we are limited to 375. That same 3-to-1 risk-reward ratio exists here. So if these options expired worthless, $125 to be made, not accounting for the transaction fees per spread. But this is a way to not necessarily even bet against Amazon, but just kind of putting a price cap to it. The stock
trying to make an even number.
And this one can still be at max profit.
And also
for no reason whatsoever. All right, looks like we are kind of getting a little double top here.
Higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now, coming up next, it's time to talk all things NVIDIA for our FOMO segment. NVIDIA shares up 0.5% ahead of their GTC event, gaining some more bulls on the street, a name that's been a consistent outperformer so far this year.
Yeah, I didn't quite make it to 394, it looks like. So double top here. We'll see. I mean, there does a kind of like cup and handle on the hourly. On the longer time frames, it looks a little more bullish. Must be below the share price. Maybe you have to enable fractional shares or something. Be able to buy single shares for less than $1. I don't know. That's strange. Oh. Tesla's still up 1.6. Oxy at 41%. Couple of bankrupt ones are up big. EVCTQ, REVRQ. And Matt's not bankrupt. Look at this, look at this. Here's another one. Reverse split with a huge rally before it. Related? I'm not sure. Does seem awful interesting and suspicious. This is MMAT. So the other one that rallied was Cosm, and that was like a month before the split it started. The 30 days. It was like the bottom. There you go. Same sort of deal with this one. 31 trading days, and you kind of have a bottom. Cosm went up like 1100% from that price. This one up 525%. And then it did start selling off into the split, and then sold off after the split. So another reverse split with a short squeeze before the split. By Apple. Nice, Sarah. Do it. Do it. Do it.
A negative credit watch at this point in time here. Now, they are citing the fact that 11 U.S. banks obviously deposited $30 billion.
That's what GME needed to do.
As well as the company
need to reverse split and get our share price to 1,000.
That ranges between $20 billion to $109 billion.
That's the problem. This thing was trading like a penny stock, but it was
home loan bank facility as well.
It was up in the
to borrow around
$70, $80, $100 range.
I believe with all of these different factors,
it was at like $7, $8, and it could have reverse splitted.
Issues that they had was a little bit more drastic.
But they do forward split.
S&P first thought, which
added
is why
liquidity.
They are adjusting their rating on the credit worthiness of the
Correct
company.
it.
But what is also
No
interesting
new
in the last
QSIP.
20 minutes here, there is a report from the
No
Wall Street
recalling of
Journal
shares.
that,
There was a little bit.
Jamie
So we had a little bit of a
Dimon
move
from
before the
Morgan
split,
Chase
actually.
is actually
This
leading
one.
efforts with other banks to try to shore up First Republic. Now, the first action was actually the deposit that we saw last week, $30 billion.
And there's a few weeks away from BBY. Yeah, it's true. They're next month, right?
That deposit into an
At least they were last year.
injection.
Bye, hanging out up here. We'll see.
Ownership. We don't know for a fact exactly what that would
Yeah.
entail. If it would be
412
a
it was last
would be
year.
An equity offering. If it's only going to be a short-term credit extension. There's
I feel like we
a
just
lot
had
of,
earnings on
speculation
BBBY.
going on, and there has
Crazy,
not been a
it's
comment
been
from First Republic or JP
2
Morgan
months.
regarding
Gosh.
that particular report, but that was actually very interesting.
They haven't
When
announced yet, have they?
News came out. We initially saw First Republic drop significantly as the shares continued to be halted.
Yeah, what's
every
First Republic
30
even
seconds
doing?
or so here. Alex.
Halted again to the
But
downside.
shares are starting to recover
What?
a little bit. If you are a shareholder and there was some form of
Holy
an equity
smokes.
holding from JP Morgan or some of
These
these other
options.
banks, yes, it could provide a
Look
situation
at the
where
IV on
it may
those.
dilute,
That's on a
shareholder
bank. That's
value, but
crazy.
it also
500%
does
IV.
provide a little bit of strength when it comes to the company.
Halted to the downside.
Have been mixed when it comes to that type of reaction. And then over the weekend, we also had some of that news as well. New York Community Bank is actually buying Signature Bank. That stock is up on the session. New York Community Bank stock is up on the session as well. And then the FDIC is opening up SVB to splitting up their
some pretty big losses, or
trying to chop
ride
up their
this
business,
thing.
making it a little bit more easier to be able to sell off those assets, because a lot of institutions may be interested in the whole bank, but the FDIC and some of the other regulators may not be as happy with who's actually trying to buy that institution. So splitting it up makes it just a little bit more easier.
Globally, of
the
course,
inverted head and
UBS,
shoulders turned into
Suisse over the weekend as well.
Ugly
the swap
chart.
line frequency moved up to daily from every week or so. So
Still
lots of
could
things
be
moving
one,
behind
but
the scenes. In terms of the specifics, Kev, I'm not going
got,
to
like, shoulders
speculate
here.
on what JP Morgan did or what's going to happen. But I think this brings to a point that I made on Friday with Oliver on Market on Close. I'd love to get your thoughts on as well. Is when these other banks are kind of banding together to provide help, it's not without strings attached. It's not just philanthropy. It's not just a charitable donation to these banks. Yeah, they're trying to bring confidence back to the banking system, but you can both have a bank that is
kind
more
of
stable
flushing
now
through
after
VWAP
that,
a bit, still up 1%.
injection, and a stock price that doesn't recover because those earnings
BBBY
maybe are split further
hanging out
ways.
the low here.
Maybe those earnings are going to be foregone in the near term.
Not a penny stock today, though.
There's a lot
Not
of
as far as the algos are
here,
concerned.
and it doesn't necessarily correlate to stock price recovery just
The first
because
date
these
actually
other banks
is
help
in the
prevent
pennies.
from going out of business.
All right, so
Final
that's a
thoughts here
bearish
before we
candle,
say
that
goodbye.
inverted hammer.
Yeah, no, you make
SPY's
a
probably
really
gonna
good
come
point
down
here.
here.
Obviously, they do have some
Maybe hit
intention
VWAP, maybe
on
keep
trying to
going.
resolve this
We've got
matter,
391
because the federal government
area
has to
for
get
kind of a
involved, and they
support.
already are. But if they have to get more involved, obviously that would also potentially increase regulations. Another thing to also note here, Alex, we continue to talk about this consolidation into the big four banks: Bank of America, JP Morgan Chase, Citigroup, things of that nature.
You did
The
a
problem
reverse
you're
bond
going
July
to
20.
also have, if they do see a huge influx into that bank, yes, it's going to be nice for their deposit base, but guess what? It also could actually increase the cost of
GE did a
that
reverse
capital as
split.
well. So you also don't want to have the other side of the coin where you don't. These
And
banks
yeah, look at that.
really
Didn't hurt
may
their
not
share
want
price.
the money because then they have to pay up more.
But why
so
did they
there's
do a
going to be
reverse
a back and forth here. I completely agree with you.
Maybe
They're
this is
trying
for
to resolve
accounting or
it in order
something.
to try to provide confidence, because if you do lose confidence,
not showing
especially
up on
in
the
the
chart.
community
They
banks,
just want a higher share
which
price.
is actually very vital for small businesses and mid-sized businesses, then you have a
A 1
situation
for
where
8.
which is exactly what's happening in Switzerland. Switzerland only had 2 major financial institutions. Now they only have 1. You don't want to have that type of consolidation. It does hurt the consumer, especially in the structure that we have here in this economy.
Yeah, tons of development.
Why did they do a
we'll
reverse
hear
split?
from Jerome Powell and team midpoint of the week as well. That is an anxiously awaited event. So I'm sure we'll have updates before.
I know the L2 is so
time,
thin
appreciate
today.
it.
It's
As
crazy.
Always, Kevin Green, Senior
That's
Markets
GME,
correspondent for the
but
TD
yeah, it looks like
Network.
GME
Coming back in
basically.
Jen, it's time for FOMO.
Oh, new low there on
here. I guess
BBBY.
not totally though. We're talking AI, we're talking
80.50.
NVIDIA. Stuff can
Yeah,
get
we're
kind of
we're flushing here probably, man.
So, be careful what you're reading on those subjects.
Yeah, I guess later
75 cents might be on the horizon. Today might just be a big day.
Catalyst with NVIDIA
down and back up, or just down.
They do kick off their developer conference.
But we might have a big rally before end of day.
Update on generative AI, which has been a huge point of strength for this company. Their GTC conferences
maybe tomorrow. This is
today.
crazy.
Will run through Wednesday, but the keynote
And
will
no
be held
relief on this sell-off
tomorrow.
since
So lots will be lots of
I call it a
attention will
sell-off,
be
but
paid on tomorrow.
decreasing price action. Like literally, you have like this was barely, but
CFO did tell investors that AI
grinding down that moving average with
not only with the growing popularity, but
tests.
as more and more businesses look
Maybe 1 cent today. Let's
trim some of their
go.
cost pressures, this is being really marketed as an efficiency
See
tool.
what I
And
did.
we got some analyst coverage today ahead of, or I guess during this event really, but leading up to that keynote. BofA did call NVIDIA their top
Wait, was that?
pick
Oh,
out
that was
of
GE,
their
you said.
flagship GPU Tech Conference, saying they expect the event to reinforce NVIDIA's AI leadership and showcase new recurring subscription and software opportunities. However, they did note that GTC isn't a formal
Maybe just want to
investor
reduce their
day,
float
so
size.
it might lack some financial updates. But they said historically the stock has outperformed the broader market by 190 basis points on an average day following the GTC conference, but most of those also coincided with an annual investor event. event, and this one does not, which could potentially create then a pause in the stock. A stock that's been on
Yeah,
a
new low there
tear,
on
up just slightly
BBBY.
on the day, but adding to
80
its
cents
76%
basically.
rally year to date, the best performing stock in the S&P 500 so far this year.
Yeah, maybe I just
hanging
want
on to a
to
nice
decrease their float.
11%
I'm not sure.
month-to-date gain. Now, additionally, Bayer did also raise its price target on Nvidia to 275. They also, or 300, excuse me, with a neutral rating. It does seem like the analyst community is just growing more and more optimistic here.
Maybe so
as
it's
we continue to build
more
the AI
volatile,
narrative
which
in Nvidia
doesn't make
outlets,
much
and I
sense,
think
but
that was a huge benefit. The fact that their
maybe
earnings
so it's
call this past
higher
quarter,
price for
they really
different
highlighted
investors.
AI. They're moving away
Different-
from their lagging gaming business,
different
and I
attraction?
think
I'm
that
not
that
sure,
is
right?
a great way to guess get the analyst community excited, because it's worked thus far with this name being consistently that outperformer.
Yeah, if you're
Seeking
Nvidia,
Alpha
you don't
says,
really
geez,
care
reverse stock
why
split means
people
share price
are
will no longer be a
buying your
factor for
products,
investors
other
to
than
decide
that you
between
wanna
it
make
and
sure
other
that you're delivering the product that
industrials.
they need for the needs that they have. But it's just like when
Yeah, maybe
crypto
just they
really
wanted a
was,
higher stock
powerful
price.
on the scene in 2017, and these graphics cards were seen as essential for that computing power you needed to mine.
It can go to
that
zero.
Bitcoin. That led to an increase in Nvidia's stock, and so I've heard the AI race between names like Microsoft and Alphabet and Apple.
I know,
and
less
the
than
likes
100,000
is
is
like
wild.
an arms race, and if you're the key supplier
Going to 50
to
cents?
that arms race, which Nvidia has been positioned
I don't know
as,
about that.
can only benefit you with these companies just plowing all this money into this investment. So I think it's fascinating. I think the analyst takes are interesting.
Average
Now
down.
it's just going to come down to, is this conference going to deliver
Would I buy?
something that is a surprise?
No, I mean what
to
I
the
said
market?
was
And
would
is
apply.
the, event going to be a market
I'm not
moving
trying to
event?
dip by it.
Doesn't have the
I'm
financials,
I'll wait
like
for
you
the
said.
momentum. My
The
indicators to
stock's
show the
been on a
momentum.
tear.
Bullish MACD
Has it ran its course?
green over the
Now,
9
all of
on
these
a longer
questions
time frame,
hopefully
on like a
we'll have by the end of
daily.
the week. And of course, we got the Fed
some
as
volume.
well that will likely bring volatility in the overall
But I don't even know if
market.
then I'll put more
There's
into
tons
it.
of things that can move this stock.
I'm in it
but,
way too heavy
sort
already.
of a mini binary event for this one.
SPY kind of consolidating up here.
Yeah, and I think you make a really good point. It's setting your expectations for this event, because I know that it was an investor event, but recall Tesla just several weeks ago, it was not nearly enough to please the street. The street
NGO
doesn't
looking
have
good?
big
It's been a while
expectations
since
for
that
names
one.
like Tesla, but
One's-
also names like Nvidia. And I know that they
Wow,
will be giving these
looks like
financial
BNGO in a long
updates,
time.
but making sure that your expectations are set, that the street
You like
has the bar
XXII?
really
Yeah.
high for names like Nvidia.
This one,
So
look, this one is
we could see a degree of
barcoding.
disappointment. So for that reason, trading this name, thinking more neutral as we go into this event, just to prepare for the fact that we
A
could
long
see
time. This thing's at
obviously some
$1
downside
now.
risk. There could be upside risk,
Jeez.
but
I
that's
remember
a
trading when it was
huge
doing all this
unknown
crazy
still
stuff.
at this point.
Yeah, kind of taking the stance that the analysts at Bank of America had,
they not
which was
split or
maybe
anything?
to see a
No, it didn't.
pause, and maybe there isn't
Held through.
enough headlines made
Went to
one
29
way
cents.
or another to really excite
Into
this
$15.
stock. Something like selling an iron condor, which is just simply
Weird.
combines the two strategies that we looked at in Starbucks and Amazon and puts them together to create
Kirkland,
a sort of net
that one's-
cast
that
around
one had some
the stock.
volatility?
And so that's what
No.
we've done here.
Really?
In particular, we went out to April.
Yeah,
once
that's maybe a good
again,
value
selling
play.
the
35 million
215,
market
220,
cap? What
or
the heck?
220-215 put vertical, and the
Oh, they're not hardly doing any
300,
revenue.
305 call
Is this the same
vertical.
one?
And again, you'll notice $1.25 credit, 375 in risk. So all of this consistent across all three of the trades. When
this
you
is
just
different.
do one side, of course, you only take one direction
this
of
is
risk.
it. That's
but maybe
crazy.
You're a little bit closer, so it adds that or takes away some of that cushion that you have.
Crazy. I
So,
didn't realize it was so
in
small.
exchange for a little bit more cushion.
Yeah,
you can
XXII
take
has
risk
a
in
nice
both
looking
directions,
chart.
But we say this each time.
Buys
Stock
moving
can
up
only be
here.
in one place at a time. So
Kinda hoping
at
it-
expiration,
the
either
rally
these,
would continue by
options will be out of the
today,
money,
but-
or one of the sides potentially tested, but you're only taking
Yeah,
risk in one
all of them.
direction, and so that's why we're able to have that max loss of 375.
Yes.
You can see the break-even points. There's two in this case because there's risk
Dave
in
and
both
Buster's is up
directions. You have
almost
a
5%
break-even to
today.
the downside at 218.75 and a break-even to the upside at 301.25. But Jenny, I think that your call out
Jenny.
regarding the fact that just because this is an event, just because they're going to be talking about something that the market's
Jenny
liked,
told me to
and it's a
run,
company
so
that
I
the market's
ran.
liked, doesn't mean that every time they take the stage it's a bullish move. We've just seen it with Tesla. Fits all of those categories, and it just wasn't enough, and the stock moved lower.
And it's been really actually a negative catalyst for Tesla, because ever since that, I know there's been other market events that have coincided, but we've seen a completely different trend in Tesla as it's reversed a lot of that positive momentum. Not saying that'll be the case for Nvidia, but always important to be mindful that we could see things very quickly change in names that are outperforming on the year. That'll do it for our FOMO segment today, but coming up next, we'll look at Meta Platforms, also slightly higher after another upgrade for the company, another outperformer on the year with shares up over 62% so far this year.
Well done, Meta.
The shares are sinking after the company announced that approval for a reverse stock split. The company plans to hold a special meeting March 27th to determine the split at a ratio in the range of 1-for-5 or 1-for-10, with the final ratio to be decided by the board. The move comes just a few weeks after Bed Bath & Beyond completed a public equity offering to raise over $1 billion. Shares lower by about 9% right now.
I mean, what can you say about that one? It's just been a killer.
It has been. It's been crushed so far.
Been crushed. Why do they do it 1-for-5 or 1-for-10? I don't get that wording. That doesn't make any sense to me. Because they're saying anywhere between 1-for-5 or anywhere between 1-for-10. Why in the heck didn't they just say the ratio between 1 to 10? Why? What? An explanation? Why wouldn't it be 1-for-8 or 1-for-7? They say a range. They wouldn't. The reason to box themselves in, I just. And isn't it kind of, yeah, it's a lot of interesting stuff about it that seems peculiar.
Months going back to, let's call it November or so. Stock reports earnings around that time. Tons of, I don't want to say tone deaf, but to the market it was a little bit. It was, our core business is slowing essentially, but we're still just plowing this absurd amount of money into things like the metaverse and these innovations that we see. And the market just puked the stock. Like, it wanted nothing to do with it. And within the next few weeks, we saw the exact opposite tone, and we've gotten the exact opposite reaction from a price standpoint.
Yeah, and I think it's fair to say that the market does not like the metaverse.
New law on BBBY, 80 cents even.
World they don't fully understand, but what the market does
75
like
is
efficiency,
next.
which Mark Zuckerberg has promised. It's the year of efficiency for Meta, and
if there was a dip for a rip,
it seems like it's
once
also
you get into the 22%, I would say it's
shares are up 62% this year, up over 12% this month.
On the table.
Over 120%.
This is one of those on the table days.
Also up just shy of 1% today. We did get some news that Edward Jones did upgrade Meta Platforms to buy from hold, highlighting that the company is reducing expense expectations, which addresses concerns about this heavy spending on its metaverse initiative, which was a previous concern, like we just said, Alex.
They're
the analyst
fighting
also
for
did
it
say
down
that
here.
he has increased optimism in the company's earnings outlook.
I saw
due to
79
these
tick up
expense
here, but
reductions
not
and
seeing
the
it.
prospect for stabilization in advertising revenue this
Got
year.
a 10,000 on the
They think
bid
that
at
Meta's
77, another
advertising
10,000 at
revenue could stabilize and return to
77.
modest growth by the end of
77.9,
2023
77.16. But this is so
overall
much
starts to
thinner than
recover.
we've seen.
This comes after Meta did announce
Still no
last week
barcoding.
plans to cut about 10,000 jobs, building on the 11,000 layoffs they already disclosed just in the fall. Similar to what we heard from Amazon today, although the market liked this news from Meta Platforms as it set it on a nice rally for several days.
Yeah,
after
there's
we got that
$7.99.
news. They have also announced efforts
Saw it
to
flash
reduce
that
their
earlier and it
expenses
didn't
and focus,
show
like
up.
I said, on that efficiency while improving their profitability. And the analyst said Meta actually still remains a leader in the social media space despite its
Downward
competitive
channel.
challenges, highlighting this company now has a 3.7 billion users across its various platforms, and for that reason, scale is a huge benefit when looking at where advertisers will want to pour their money. And I will say that although Meta's Instagram has gotten a lot of flack over their algorithm and that they are pushing ads or targeted content pretty heavily,
Start
I
watching
don't
something
mind,
else.
Alex. I'd say targeted target me. I mean, at that point,
Just
at
let
least
that-
it's
let that
content
do
that's
all its
curated to what I
ridiculous
like.
stuff.
I'm a fan of
just go
targeted
back to
advertising, I
this.
think.
Well, I think everyone's got different opinions on
Fox
that
D's up
exact
42%.
topic, but what I will say when it comes to Instagram
I
is
just happened
the
to stumble
shift
on
from
MMAT. I didn't realize they did a reverse split,
chronological
and it
sold
paused or
content
rallied
from people you
beforehand.
follow to whatever it is now was slow and methodical, and they implemented all of the new features
The OST, did you
slowly
do that? No.
and methodically over time. So it's a completely different app than what it was, you know, half a decade ago, or when I was in college, let's say 10 years ago at this point.
Urban One's been a normal
But
stock for a while. It's
still
kind of
just
strange.
as popular, if not more popular, because the changes they made, even if they were met with grumblings when they were made, have been slow and small enough at the time that we're looking at a product that is nothing like what it originally was, but still has the user base and still mostly, I believe, has
And
happy
root.
users. And so it hasn't lost the
4%.
spirit of what it was. It just is so much more. And so it's almost like a mini shopping platform at the same time as a TikTok, as the same time
Mini
as the original
shopping
Instagram,
platform?
as the same
Oh,
time as
Meta?
a Snapchat all in one. So
Yeah, totally.
it's their premier platform now. I know the Facebook parent
The
kind of thing.
Facebook.
I think of that as a dashboard. You're using that for your credentials to save yourself some time, filling out things to log into an app for the first time. You're using that to you know, a launch pad from. You're not necessarily on Facebook the same way you were in 2009.
No, you're not. And Facebook, I think, has just become a place where at least it's like my parents talk to all their friends. It's less cool among the younger-ish generations, but still has a massive user base. So for that reason, seeing this nice lift today and over the last several sessions as Meta has been that quiet outperformer. But that'll do it for this segment. Now, coming up next, we will talk all things VF Corp, the parent company
Okay,
of
we're back.
Vans.
79, 99,
North Face,
99,
slightly lower
99.
today, but an analyst now upgrading shares to a buy. We'll dive more into that story with George Jones coming up.
Vans. Wait, Vans? Republic? Didn't know that. What? BFC? Vans Footwear Company? Someone own them? North Face, Timberland, Dickies. I know it was all the same company. Vans, North Face, Timberland, and Dickies. Supreme? Own Supreme? Jansport? Huh. Divvy? A lot of hype on Supreme.
What's interesting about the stock is it's down.
Double
I mean,
cover.
if you look
Yeah,
at the
Julian, it's
5-year
crazy.
chart, it's down from around $95 just a few years
Definitely-
ago. So
definitely a big
kind of, ask
shakeout
the
day, it
questions of
seems
what's
like.
going on with the company?
On
Why is it down significantly
more or
now
less
in the last year?
no news.
On a
Yeah.
52-week basis, it's down over 60%.
Announcing that they're going to
Today,
hold a vote
There's a couple of
to
analysts that
split.
are providing some meaningful guidance and price action.
It's not even like that's not
after
even bearish.
Friday, where the company actually had a meeting with some
Reverse
analysts
split. I mean,
to kind of gather some information to determine what's going on with the business. Now, looking at the analyst, Williams Trading actually double upgraded the stock to a buy from sell with a $27 price target. And Telsey Advisory Group was actually a fine outfit in the analyst space for retail, has a $36 price target. And I think one of the things that the company did mention, I think it's very poignant here, is that the company has spent so much money to actually grow.
It's not going to change that stuff.
While at the same time, inventories, at least in the last year, had really gotten bloated.
What changing the number basically on the screen?
Inventory glut, and we're forced to cut prices.
Share price.
I think that speaks to why the stock is down over the last year. But on a forward basis, this one is starting to look rather interesting. And what I mean by that is, if you consider the stock,
I'm going to get any more or less dilution
they're
from
expecting about $2.08 a share in earnings on a forward basis. That puts its forward multiple around 10 times earnings. And the company,
I don't know what they're going to split it. Yeah, if there is a split that goes through, sure, yeah, maybe they'll do 1 for 10.
At around 51%
gross
margins, but its net income margin the last year is only about 3.5%. So what I'm trying to say here is there seems to be some significant room for improvement. I've seen a lot of stocks like this trade on multi-year declines, but every once in a while you'll see a nice reversal, and this one is certainly interesting to keep in mind because of the fact that if you consider the forward revenue guidance, they're expecting 9% growth on a forward basis versus flat year-over-year comps on a trailing basis, but EBITDA
Steam
growth
playbook, where they built Counter-Strike Go and then leverage that into a Steam platform today.
2 times EBITDA
we
to
decided
sales
that
growth.
we would build a game that showcased the potential of Web3 for everyone. We would take the most obvious use case, one that players already loved, which was Yu-Gi-Oh! Or Magic the Gathering cards, where billions of dollars of physical cards are traded every single year. And we'd create the first ever digital version, where you could properly own your cards. And so we launched Gods Unchained, which today is one of the largest Web3 games in the world, has hundreds of thousands of players, and did $15 million of revenue in its first year. And so we knew that we had started something with promise. But today I want to talk to you about the evolution of Immutable and what we've built today.
This is an Immutable keynote event.
Number 1 market share in the world for Web3 gaming as measured by funding. Nearly $1 billion were invested into games last year alone by third-party VCs, not including our own ecosystem, on games building on Immutable. These games have yet to go live, and the job we have in front of us is how can we make the user experience for these as simple as possible and as easy as possible. We've onboarded last year, in January, there were 3 games building on our platform. Today, there are more than 150 and more than 15 marketplaces building on our global order book. Over half of all trades on our platform are filled on non-origin marketplaces. That means a player can sell something in-game and someone can buy it on a GameStop marketplace or Rarible or Token Trove or a major NFT aggregator. And a fifth of all funding for Web3 games came to Immutable ecosystem games last year. So our original vision of building this platform, we've been able to create over 5 years of hard work. And today is the next chapter in this journey, which I'm thrilled to share with you guys. So I want to dive first off into Immutable Games, or our portfolio/publishing studio. You're probably familiar with this already from such titles as Gods Unchained and Guild of Guardians. Gods Unchained has, at its peak, hundreds of thousands of monthly active players. It's one of the most popular Web3 games in the world. And what I'm proudest of is if you go to godsunchained.com, you won't see the word NFT once on the website. And that's from what we built in 2019. And that's because our vision has always been, how do we actually allow players to experience the benefit of true ownership? Not shill them the value of blockchain technology. That's for conference rooms like this, but it's not for taking this to the 3.1 billion gamers whose lives and economic prosperity we are trying to transform. We are expanding Immutable Game Studios massively, where we are jointly partnering closely with several games each year in order to provide a high level of user experience, custom Web3 economic design, community, and helping onboard some of the biggest game developers in the world onto building highly successful, robust Web3 economies. So let's jump to the first, Metalcore. It's a video, so hopefully this works. Metalcore is an open world, mechanized combat game like you've never seen before. It's the winner of the Game 3 2022 awards for the best shooter game, and there are free-to-play futuristic multiplayer where you can onboard incredibly simply. Most importantly, this is developed by essentially gaming veterans who have had massively successful free-to-play games. For us, the most successful Web3 games will be people who know how to build an experience that feels identical to the most popular games today. The vision we're going toward is a world where you don't have to add the prefix Web3 to these games. They're simply games where you get digital property rights that gamers over time will come to expect. It's very soft. It's exciting.
I was muted. That was dude, that was a mutable keynote we were listening to. Keynote event. Looked actually pretty good, those games. I bounced a bit. There's BBBY just flushed through. Oh my. I wonder if it's a big long that's getting out or something after the reverse split news. One of the institutions that were in it, I don't know. They didn't like the reverse split idea. After a drop like that pre-market, I mean, we still actually haven't hit the low. 75 was the low of that, but after that and the bounce, you would think it would recover. Same day even. Yeah, I mean, wouldn't probably be the time to sell. I think a bounce to around $1 is warranted at the very least. Back to where we started this sell-off. If you didn't want to wait for a bigger move, if you thought it was coming. But yeah, this is pretty crazy. This is not really on anything, nothing fundamental. Nothing fundamental has come out. You're doing the old scale in. I think we got fooled. If you were basing whether you were smart or a stupid investor just based on the share price, then yeah, you definitely got fooled. Unless there's something else that I don't know. All we've seen is the ticker go down. Holding some GME straddles, eh?
We saw that stock move significantly to the downside.
Bottom,
does that
another
include
nice
an
stuff.
equity share in the company? Does that dilute shareholders? Is that also maybe a debt raise as well? No one really knows what the structure is, which is why we probably saw a lot of that volatility earlier. Now there's another report that is just saying that JP Morgan is really just trying to advise them on other alternatives to raise capital that may not include them actually utilizing those deposits at the bank. So really
more difficult and expensive, but the price of the stock will be
but continuing to
the same in relation to the amount of shares as it is now. So
at this point in time.
but it shouldn't matter.
Yeah, I mean, it basically, it's constant, and we'll continue to follow it, to your point, because this was $120 just in March. I mean, this was $120 stock, then it went to $40. It hit a low of $11 and change, and right now at $15. So we will see what happens with that. That's great coverage. Thank you for that. Kevin, what about Amazon? More job cuts. Your thoughts there?
Yeah, so Amazon is reporting another 9,000 jobs that are going to be cut here. And they're trying to obviously right-size their business. They have been cutting jobs for the last 6 months at this point in time, even halting some projects, some pretty major capital expenditure projects in order to try to reduce the expenses and try to expand their margins out here a little bit. It looks like the cuts are going to be mainly focused in AWS, their advertising business, Twitch, and people experience and technology solutions.
Them to be happy, man.
That's where those cuts are going to have.
Yeah, I don't think they've said anything different than what we've heard.
This is actually a new
We're just
cut compared
seeing
to
a massive short and distort.
just recently announced that impacted around 18,000 employees.
From all I can tell,
sound very large, Nicole, but if we look at it at the end
which
of
is it is a good opportunity to buy. I mean,
they had
when
about
they do this,
1.54
it's usually
million
temporary.
employees. That includes the delivery
And the fact that the
staff
algos
as well
have
as
switched
their
and we have all this
corporate staff.
volume,
So even
something's
though
happening, I think,
9,000
here.
is a lot, or even 18,000 is a lot, it's very small compared to the overall
more than just us
employees that they
dropping
have
24%.
working for the company here. Now, Andy Jassy, he came out, the CEO, came out and stated the reason why they did not announce these layoffs earlier is because all of these other teams, their teams that are within the business, are trying to complete an analysis.
Yeah, I wonder if one of
to
those
see
institutions
which
is
staff
closing
or
out.
how
I don't
much
know.
they can actually cut. And it does appear
really-
that they actually have another
really odd.
round of analysis by some teams that don't have their reports done yet, and they do expect those reports to be done by April. So we could potentially see another round of cuts by middle of April, end of April. It sounds like he was trying to really try to tee that up and make the market aware that this is still going to be an ongoing type of situation here.
Yeah, and I'll tell you, we had Arun Sundaram on earlier from CFRA. He thought it was really significant, these cuts, but that it was being viewed by investors as a positive ultimately for Amazon. So he seemed to have a good spin on it. Foot Locker, that's the last one here.
Yep. Definitely. We are seeing Foot Locker down about 6%. Now, they did beat on the top and bottom line and actually surprised the street here when it came to the comp same-store sales. They actually had that number come in at a growth rate of 4.2% year over year, where the street was looking at a contraction of 6.7%. But they did provide guidance for the remainder of this year that came in lighter than expected. They did announce that they are closing its stores and e-commerce operations in Hong Kong and Macau. They're also easing up on their Asia Pacific exposure in general, but they did on the conference call reemphasize the relationship with Nike, and that's actually very key. That relationship has been strained here over the last couple of years. It does sound like it's going to get better, and that has been the growth driver for this company over the years. They want to continue to be able to foster that relationship. So that's why we were seeing a move to the downside in the stock in the regular session, even though we did see a nice little pop in the pre-market trading.
All right, Kevin Green, way to kick off the show. Thank you so very, very much. Good to see you, Kevin Green. Now, let's talk about the bigger picture. Scott Ladner is with us, Chief Investment Officer at Horizon Investments. Thanks for being here. Scott, your thoughts here, because we are waiting on the Fed. What are you watching most closely? So we're just going to take a moment here. I do want to. We're going to be talking with Scott Ladner of Horizon Investments in just a moment. But certainly the topics here are, we have some earnings, but really it's all about these banks and also what happens with the Fed. You have Goldman Sachs, Jan Hatzius, chief economist there from last week, was talking about
one of the best performing SPACs.
25 basis points. Just saying, listen, give it
still
a break.
Above its SPAC price.
With the financial instability that we may or may not be facing.
Birds down 10% today.
Banks, and then you could resume in May. Others, you look at Fed funds futures.
Look at this one, guys. This one's been under $1 for a long time.
Basis point hike. Here's a look at the Dow Jones Industrial Average right now. It's up 295
almost
points.
a year.
32,000.
Most years it's been under $1. Hasn't even touched above $1.
Actually finished slightly lower last week. We're going to just take
all,
a quick
and I
break.
think all I've heard is that they've gotten a notice.
Be right back.
They've gotten a notice of non-compliance. I don't think they've filed an extension. They've not done a reverse split. They've not done anything, and they're still trading fine. Reverse split on this thing might make it go crazy too. Chinese president Xi China is prepared to defend world order alongside Russia in accordance with international law. Federal government should expand its guarantee to all bank deposits regardless of size in order to slow bank runs. But it should charge customers for that insurance, hedge fund manager Nelson Pelt said. JP Morgan advising First Republic strategic alternatives, including capital raise. How is FRC doing? Is it trading? Halted? Pretty weak. Not as weak as our BBBY. S&P revises UBS Group AG outlook to negative from stable. I love Panda Express. Yeah, MSG is so good for me. Banks don't go bankrupt. Everybody knows that. Since I haven't been wrong yet. That gas might be bouncing here. About time if it does. Be a 10% rip now. defense companies. Probably a good idea to go long on right now. But depends on where they're at. They've probably been rallying a bit. Yep, NOC, Lockheed, LMT, I think. Yep, they're already rallying some, and been elevated here since what, October? Northrop, yeah. Looking at the chart, this one looks bearish, but it is kind of coming down here to the support level. Maybe it'll bounce off of here and double bottom. It's a pretty strong support from way back here, so maybe a little more down on Northrop. But macro side of it, news side of it, you know, it could rip. T actually looks more bearish, out breaking that resistance. Spreads for the chopping. Do it. Probably should have sold my GME calls today. We'll see, maybe tomorrow we'll get another rally. Buy them back in after earnings. With that little move on GME, and they're up 23%, we actually get like a couple 50% days in GME, those calls are going to be thousands, 4,000 or 5,000% probably. That would be neat. Black pepper chicken's good. MSG makes me drool. Bad as far as compared to analyst, or all relative? Expectations wise, year over year, month over month, or just your own?
You get a 3% dividend yield that was raised by 5% last year, and you have a name that really is kind of
New World
taken the
Peace
mantle as being one of the premier premier consumer and commercial banks in the United States. They've really de-risked since the global financial crisis, and just, primarily operate a simple business model. They take in deposits and they lend, and so I think that can actually give investors who are trying to get a little financial exposure a little bit of a break based on the discounted price.
Would you do any of the regionals? You wouldn't jump in on any of the regionals now. I mean, you do have news from Wall Street Journal, Dow Jones, that Jamie Dimon is working with many of the other banks, or some of the other banks. People familiar, of course, are the source of this for this story, that they are working to, one of the options considering is that these banks invest in First Republic, but these regional banks have certainly seen a lot of volatility. Would you buy any of them on a big sell-off day?
Yeah, I'd probably sit on the sidelines just for a little bit. I think, for one, investors have always benefited in the past from, you'd rather be a little bit too late to a story than necessarily try to, bottom ticket and be too early to the story. And so, we're not trying to, just perfectly bottom ticket. And likewise, that said, I mean, I think that there's not necessarily as much of a reason to, because of the fact that a lot of the global banks, like Bank of America, like a JP Morgan, or even a Morgan Stanley, they've been hit pretty hard too amid all this. And so, you can swing for the fences and make a big bet with the regional banks, or you can actually make a smaller and safer and more conservative one with some of the more global diversified banks.
Yeah. Tell me about Microsoft. Why is this one a good one?
Yeah, that's another safe one in the storm. And you've got a name that right now, it's one of the the last remaining AAA rated balance sheets out there. You have a net cash position, and as far as stability goes, they've really been positioned in all the right places in recent years. They're a leader in video games, which have done very well, and really what Microsoft has done is they've done better than anyone as far as transitioning from traditional software to software as a subscription-based service. And as a result of that, their cloud business, the Azure business, has been growing at high double-digit rates. And so you've got that. You've got the ability. They raised their dividend by 10% last year. And so again, clean balance sheet and ability to raise dividends are some of the safest places to be in this type of market.
Yeah. And last but not least, in the world of real estate, you have Alexandria Real Estate, ARE.
Yeah, and that's a little bit of a contrarian play. That said, with interest rates starting to pull back, for one, that could help some of the bond proxies and some of the REITs. But really, Alexandria Real Estate is a little bit of a unique play, given it really more than anything trades with the healthcare and the biotech space. What they are is, they own labs and they own office space that are used by the pharma companies and by the biotech companies. And so their client base is really just I like to think of as a who's who among places you'd like to see your kid get into college. Their clients are, Duke, Stanford, Harvard, as well as a lot of the big drug companies. And so you do have a lot of the stability of buying a healthcare stock, but without necessarily having to pay up for it. And again, you have a 4% dividend yield there to kind of help provide stability and pay you while you wait.
Thank you for all of that. Burns McKinney, great to see you. Thanks for being on the show. Burns McKinney, Managing Director, Senior Portfolio Manager, NFJ Investment Group. So let's continue our conversation about the market. Joining me right now is Scott Ladner, Chief Investment Officer at Horizon Investments. Scott, thanks for being here. Your thoughts about the volatility we've seen on the market. The truth of the matter is, even with all the headlines, we're still basically between 3,800 and 4,100 on the S&P 500, but it sometimes can feel pretty awful.
You're right about that, Nicole. We have seen a tremendous amount of volatility. Well, we've seen some volatility in equity markets, some volatility in commodity markets, a little bit of volatility in FX markets. But really, where the volatility resides in this market, is pretty much everybody knows, is in rates. We've seen the 2-year rate drop by over 100 basis points in 3 days. We know that interest rate volatility expectations in the option market for interest rates is predicting that the 2-year rate is going to move.
In the banks right now.
Somewhere in the order of like 12 basis points a day, every single day for the next 3 to 6 months. That's a pretty insane level of volatility for what should be the world's risk-free asset. And so, that volatility inside the rate complex, inside the Treasury complex, is really what's driving volatility everywhere else. Because until we know how to price a Treasury bond, it's really tough to price anything else, any other risky asset in the world. And so that's kind of what investors are waiting for, is like, let's figure out what this level of rate should be, and then I can figure out what my investment thesis is going forward.
SPY's moving up here.
And they could barely figure out what
At
those
close-
rates should be, because
close
they
to
keep
VWAP, and now it's like
fluctuating,
bouncing.
but you've had a steepened yield curve, right? Inverted yield curve,
BBY's
which
still
more and more
down
has
the
been telling
lows.
us
Looks like it's about to
recession,
flush again.
right?
Well, I'm not quite sure of that technical. It's it's a very popular thing to say, and inverted yield curve, therefore recession, sort of guaranteed.
Right.
But really, what the yield curve is telling us right now, it's pricing kind of a return to a disinflationary sort of Goldilocks scenario. If you look at what rate expectations are on a go-forward basis, in a recessionary type of scenario, you would expect the rate market to reprice, like cuts of like 300 basis points. Get us well below neutral on short end rates. And really, all that's being priced right now is about 125 basis points for the cuts. Really, just getting interest rates back towards their kind of neutral level. And so, while it's a very popular thing to say that, an inverted yield curve is pricing a recession, yield curve really isn't quite pricing a recession right now. It's really kind of pricing a return back towards normalcy.
So in the meantime, what do you tell investors? Have you been pushing to invest in treasuries or different sectors, or what kind of portfolio would you say?
Much like your last guess, we do think the technology space is ripe for investment. It was a space we avoided pretty much all of last year as rates rose and multiples contracted. But we think we've seen peak rates for this cycle. And if we've seen peak rates, then we've probably seen trough multiples as well. And so that construct means that the quality balance sheets have a chance to work again. And the mega cap tech names are the most quality balance sheets out there. These are cash generating machines. And so inside the US space, at least we do like that tech, we do like growth sectors again, really for the first time in almost 15 months. But we're probably a little bit more interested in Asian equities. We're probably a little bit more interested in anything tied to China and China's reopening boom that we think is ongoing right now. So it's kind of that barbell approach, like U.S. growth if we're going to be in the U.S., but if we're going to be international, we prefer the Asia and really anything tied to China.
Right. Do you think that investors should expect just less overall for their investments? Because, look, we've had quite the bull run over the last decade or so, and in some cases, tech really ran hot. Should we expect higher volatility and maybe less on a portfolio? I mean, what would be good or okay?
I'm not quite sure about that. We've already gone through 27 months of zero returns in global equities. We've been churning. We've been going sideways. Very violently going nowhere sideways. Target since December of 2020. We've had zero total returns in global equities. And so, I think we've kind of gone through some of this pain. We've gone through some of this readjustment process. And on a go-forward basis, while we can't get really aggressive until we know what interest rates are going to be, we do think that day is coming pretty quickly. And we think by the time we get to late spring, early summer, we actually have a chance to kick off a new bull market based on a Fed that is going to be easing, based on some more clarity around earnings and around what the economy is going to be looking like. Because we've already done the hard wood chopping over the last 27 months, but no returns to be found.
Yeah, understood.
Speak for yourself.
So at this point now,
Citadel
with that
made
being
record
said,
returns.
I mean, something's got to give.
Record.
Right?
All-time record.
What do you think in the next 12
Any hedge
months
fund
might be really
last year.
different? You are looking to Asia for some possibilities. You think the Fed continues to work against
Putin
inflation,
and Xi
right?
conclude informal meeting in Moscow.
We think the
with a
Fed
very
probably
formal
hikes on
conclusion.
Wednesday, although that's a very low confidence sort of prediction. It's kind of a coin flip, frankly, for us. We don't think it matters one way or the other whether they hike on Wednesday or not. But we do think they probably hike 25 and just signal, hey, listen, we're probably done. Or at least we're going to pause for an indefinite amount of time, which really means they're done. And so going forward past that, we do think that the place is going to be in credit and also in stocks. It is going to be volatile. It's going to be messy. There's always going to be problems. We do have debt ceiling to contend with probably sometime in the summer, but there's always something to worry about. It doesn't mean there's not a reason to invest somewhere, and we do think that it's going to be a much better time second half of this year.
All right. Scott Ladner, great to see you, Chief Investment Officer, Horizon Investment.
Thanks, Gilly.
Thanks so much.
Glad you're back
Thanks,
also.
Coming up next.
There's free memberships floating around if you keep an eye on chat. There might still be some if you scroll up. Check for the green box.
Okay, so let's find out.
Ace has been the Mexican Santa Claus of spring break 2023.
How the landscape has changed for college athletes since they've been able to earn some money for their name, image, and likeness. All that for the watch list. What's your bracket look like? We'll be right back.
Yeah. Still bought. I mean, as that guy said, trying to bottom tick is kind of a fool's errand. So, scaling in or waiting for the momentum to go in the right direction and then jumping on. What's 20% when it's up 1,000%, right? Because that's kind of what we're looking for, is a big play at this point, 1,000% or more. Well, 20% of that's, yeah. I say 20% because that's what it's down today. Think AMC's gonna have a rip around GME earnings. 430 area. Is melting back up here. GME climbing back up to VWAP. Rips back to 6. Yeah, maybe one siding with GME. Bed Bath looks like it's bouncing a little bit. Good news is the only gaps now on Bed Bath are to the upside.
It was an incredible time, an incredible opportunity, and I really learned a lot that translated into the business world. Management, so you know, it's
Glad
not
you never
just
bought
the
calls
game,
also.
there's practices, there's spell.
Oh, I know. I
So
fully
it's
understand.
a lot, and here we are.
Yeah, it's hard work. It's very hard work to be a college athlete, and kudos to you. This says something about your personality, which gets to the investing part. You walked on. You were a walk-on. You had the nerve to go and say, hey, I should be on this team. So how is investing in the market similar or different to making your bracket for the NCAA? Of course, everybody's brackets are totally ruined right now, but go ahead, tell us.
Yeah, I'm one for sure that has a busted bracket, but I thought we would have a little bit of fun here and see how investing is similar to picking your bracket. So there's some things you want to stay away from. Obviously, you want to be diversified. You don't want to have all your eggs in one basket. So for me, I'm an ACC guy. I picked all the ACC teams, and as we saw, only one is advancing to the Sweet 16. So first things first is you want to stay away from the familiarity bias. And that would be my number one. My number one tip when filling out a bracket is don't be biased. Don't fall for recency biases, familiarity. Stay diversified, and hey, those are some investment tips as
The
well.
failure of the reverse split idea.
Look, those are all great tips. I mean, I was pretty much screaming at the TV for the last 19 minutes of the Michigan State game last night. I was happy they won.
She's got a little crush on him.
You know, I'm sorry for the other teams.
What do you mean the failure of a reverse split idea?
For UVA, I was hoping for, you know, they were knocked out early. Thought maybe they would go further. Purdue, number one, gone early. How about Princeton? Totally, you know, getting ahead unexpectedly. So there's a lot that's going on. So what's left in your bracket? I mean, based on the Sweet 16 now, who are you picking? I mean, if you redid it now.
I mean, I do have a couple teams left, and one of them that you didn't give a shout out to is the Florida Atlantic University Owls. So I'm born and raised in Boca Raton, Florida. It's a crazy season. Coach Dusty May's got Florida Atlantic Owls in the Sweet 16.
back to 80 cents.
Incredible.
What a milestone.
Okay, that is pretty incredible. It's almost like Fairleigh Dickinson here. But anyhow, so let's get back to what goes on here. I mean, you have these players that they get to put out
Buys
their,
coming
they're
down
making
a
money
little
on
bit.
you know,
VWAP's
their
all the
image,
way up
their
here, though.
likeness, their name. Very different than when I was a college athlete, when you were a college athlete. Completely different at this point now.
Trying to
Tell
act
me
like they're the
about
same age.
in the strategy of investing. I mean, what is it that you're working on the daily as a financial planner? I mean, it's like circuit training. You got to get in there. You got to, you know, pound on these markets every single day. What are you doing every day? What are you looking for?
It's a good question. So, I mean, I don't work with any of the college athletes. I do work with some professional athletes and some coaches. We're more focused on long-term planning, obviously. We create custom portfolios based on each client's goals. Athletes, that's something I wanted to talk about. NIL, name, image, and likeness rules have totally...
Yeah.
And now kids can make money while in college, which changes the game completely.
Right, and you know, how about some advice for a young person who you'd like for them to have a compounded dollar? Tell me some advice for younger folks that are investing.
Absolutely. I mean, number one is you got to think long term, of course. You got to invest for the next 10, 20, 30, and so on years, not try to be a day trader and make a quick buck. But I think it gets even more basic than that. I think we have student athletes who are not used to seeing this type of money, and we really need to make sure that they are protected from a tax standpoint, from a legal standpoint, and of course, investing with a financial planner term.
Right, and now wealth management is your game. I won't call it a game because it's a very serious thing, and I know you're working very hard on it. Best of luck to you, Justin, and your teams that you're supporting. Justin R. Heller, thanks for being with us. Heller Private Wealth, thank you. What does your bracket look like? Okay, anyway, joining the show still ahead. Stay with us because we're going to be talking
She didn't say she was a college athlete, did she?
Market. What do we
She
need
was
to
just
know from
saying
car
that they're a
gurus?
similar age.
That's who our guest is. We're going to be talking about the used car prices, what the market really looks like.
He's probably
what buyers are
20
truly
years older than
interested
him.
in. And as we had to break, take a look at winners and losers in the S&P 500.
Can't BBBY go bankrupt? A little bit about Beyond Near Me are shutting down and having Blot store close the sales. Yeah, they can go bankrupt, yeah, but them closing does not mean they're going bankrupt or necessarily a sign of it. They're closing a bunch of stores, trimming a bunch of fat. They're trying to get their balance sheet right, trying to get cash flow positive. So getting rid of the dead stores. Double bottom. Did it make it all the way back down there? Yeah. Yeah. Not quite, but divergence and everything is still there. MACD's still bullish. It's good as long as if it breaks kind of this level down here, I'd maybe cut losses on it. But as long as it holds this level, I'm keen on an upside. It's about to get pretty close. Not terrible. Be nice, Jonathan. Two left in Miami? I don't know. I mean, everybody's kind of trimming fat and closing stores and reducing expenses. You know, a lot of retail is doing the same thing. Even Amazon's closing warehouses, and so you could look at it however you want. Look at it bearish or bullish. Yeah, those stores are going to not generate any more revenue, but their costs are probably exceeding their revenue anyways. Let's see, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 Bed Bath & Beyonds in Miami area still. Let's see how many say temporarily closed. 1, 2, 3, 4, 5, 6. 6 say they're temporarily closed. So that temporarily closed might just be a Google thing. Maybe they're probably going to be permanently closed. But yeah. There's a little pop up to the upside on BBBY. Got a bullish MACD, got green over the 9. For momentum on a day trade, this is what I'm looking for on a longer time frame. Something like this. So if you imagine this, we're like daily candles or 4-hour candles. Mr. Shell. No, it's a good point. It's valid. Good question. Buys coming down there, getting a little inverse beta maybe on BBBY. Let's see. You think it's profitable just because of that? I mean, you can see if they're profitable. Just look at their balance sheet. Look at their financial statements. Mother of all bear traps.
$39.40 for the most part, just kind of in the middle of that range again. Not a lot of conviction to begin the week, to say the least. Now, I did notice the Russell also range bound, unable to take out Friday's highs or lows, while again, kind of speaking to the just mixed activity we're seeing. The NASDAQ took out Friday's lows, while the Russell took out Friday's highs. Small caps have been strong. So
Dollars volume and that, and
an
then
interesting dynamic here playing out again as investors just interpret some of the data that's available to them as we begin this Monday. But a lot of concern out there,
BBBY.
a lot of uncertainty, and
up to $1.03.
as I mentioned here, the market, I think, at these levels, when you consider that we're still in the middle of the range that we've been in since May, waiting for more information, faring pretty well considering.
Yeah, you know, something that we've been talking about, gold, right? And so we saw all the glitters as gold above $2,000. Now, I don't know how we're going to do comparisons in this inflationary environment to some of the prior highs, but 2,000 a troy ounce is 2,000 a troy ounce. So what are you thinking here?
Yeah, big time, Nicole. Sharp move higher, to say the least. The bulls are looking for this to continue. Here you can see we're only up about 0.75% right now at 1987, but overnight we saw a trade up to 2014.90, so just a tick shy of 2015. Now this month, March alone, we've seen a strong run up. It wasn't just today. 1810 was the low this month, up to 2015 in just a few weeks. Back to the March 2022 highs. The upper extreme of range that we've been in since spring of 2020. A big part of this, I think, some of the weakness we've seen in the US dollar, back down to 102.90 today. You've got some geopolitical tensions playing out still, right? With China meeting with Russia today, some of the uncertainty tied to that, and everything else
don't worry, it's
that's been
informal,
going on between the US and China ultimately, as well as Russia, Ukraine. And then lastly, I wanted to point out, we had Joe Cavatoni join us this morning.
What do I think about in what regards?
Council, and he was talking
Manuel, I saw your
post,
your comment earlier. I didn't understand it. Might be the chance to trap some shorts.
Tendencies that we haven't really
the
seen
failure of the RS. What do you mean the
The
failure
dollar's
of the
been
reverse
recipient
split?
of that, but now kind of that traditional
How does a
move
reverse
towards
split
treasuries,
fail?
towards gold, and we're seeing that again amidst some of these concerns I mentioned earlier, tied to the banks and just unease about financial conditions in general, Nicole.
Yeah, understood. All right, Ben Lichtenstein, thank you
Lichtenstein.
for that. It's good to see you. Thanks, Ben Lichtenstein. Now let's take a look at the used car market. Kevin Roberts is with us, Director of Industry Insights and
Why does it seem like this keeps getting quieter?
What do we need to know? I mean, I'm well aware that people were keeping cars longer as prices were soaring and there weren't enough supply. Now what's this trend? What is our lingo for 2023?
Baby.
So it's more disruption, but it's a little bit different than what we've seen the last couple of years. So coming out of COVID, it was really a supply chain shortage.
The fake
and
background you had to pick was
now
a
we're seeing
cafeteria.
tighter supply for used vehicles. We're starting to see more new vehicles come into the marketplace, which is great for consumers. Around summer of last year, we started to see used vehicle prices start to decline. That was great. However, we're getting into the seasonally strong sales demand season right now. And so in February, we started to see that narrative start to shift, and we saw used prices start to increase again.
Look at this volume here, increasing
used
on
prices
bad
are on
since
the way up.
130.
What about new cars?
Used
You
prices
said there's
coming up.
more
Shut
new
up.
cars
Come
that
get
are
me.
coming
Get
onto
real.
the lots. I just am trying to understand the
Look at the
landscape before
volume
we get
today.
into some of the details and other
Yeah,
trends.
we've already broken yesterday's volume by a long shot.
So,
Yesterday was 59 million,
new
today
car
it's
prices
73
are still
already.
are around historic highs. We haven't seen those start to come down yet.
A lot of
but we're
volume
seeing
today.
more and more new inventory come onto lots. And as we see that start to happen, the thought is that we will start to see some relief on new prices.
You're going to see that
as the
tank.
inventory starts to get built up a little bit more.
Our prices.
And what about, I mean, I have to ask about EVs and the penetration and the interest. I mean, I actually read an article today about how
3%
folks
market
were
share.
abandoning EVs when the battery, something happens
It's
with
like
that
talking
because
about
it's so
three-wheelers.
expensive to repair. And we
Not
know
quite,
that
but-
the EVs decrease in value at almost double the rate per year. So if your car went down $2,500 per year in value, an EV might go down $5,000 a year.
Yeah, EVs are still kind of a growing part of the market right now. So if you look at it as percentage of sales or percentage of the number of vehicles available, it's still a pretty small number at this point. So you will start to see some of those kind of fluctuations with regards to the prices. But we are starting to see, more and more kind of interest in EVs as become more available. And as we start to see more price points become available for EVs. Historically, so far, they've really been focused on more kind of luxury price points. And as you start to see more mainstream price points become available, we're expecting more kind of interest in EVs to grow along with that.
Yeah. How about what's going on in interest rates? As we've seen rates go up, and I've heard there's been more auto loan delinquencies. Tell me how the rate environment is affecting your world.
So consumers tend to view automotive loans more as what the payment is going to be, rather than what they're actually paying. So rising interest rates is going to have an upward impact on monthly payments. And so we're starting to see consumers look for more cost-efficient vehicles. And we're expecting that to, be a continued trend throughout this year, particularly as interest rates remain high. The issue now that we're starting to see is that
Lucid, I think it's going to be another
looking for, a more cost-efficient vehicle out there, it's getting harder and harder to find a good quality used vehicle at a good price that will let you hit that monthly payment that you're looking for.
Yeah, I saw Vermont had the lowest average listing prices for new vehicles. Virginia has the lowest average listing prices for used vehicles. So I thought that was a really interesting fun fact. I mean, what's the final here, the takeaway for some of the demand when it comes to trucks, pickup trucks, and even EV trucks? Because we know the F-150 Lightning already had a ton of orders. The Cybertruck had a lot of orders. There's still a lot of talk about Rivian's truck. What's going on in the world of trucks? That seems to be where demand really still lies as gas prices have stopped soaring.
Yeah, so a couple things there. One, as more kind of pickup truck EVs come into the marketplace, I think we're going to see, continued demand on that front. A lot of automakers still haven't even launched theirs yet. And then, it is still pretty highly correlated to what's going on with overall gas prices.
Someone
and that will
tickling his
impact
neck
what
or
goes
something?
on with overall EV
Walking behind him,
and
just
pickup
tickling
truck
him.
demand as well. So high correlation there.
Yeah, it's great to see you, Kevin. I'm sure
Hey,
we'll
great
have
to see
plenty
you
of
again.
updates throughout this year. I'm sure we're going to have lots of updates throughout this year. So I look forward to speaking to you next time. Kevin Roberts, Car Gurus. Thank you.
Oh, Car Gurus.
All right, coming up next, our panel is ready to
There you go.
discuss what is extremely hot, and that is Bitcoin.
Been having some issues.
Run. We'll see.
Nothing substantial, but Bed Bath did get a little relief rally. Back up to the lows where we were before, but slowing down now. Good news for memes? Really? Think so? Maybe? John, are you on our Discord? White House's Kirby says they still don't believe China has taken lethal aid for Russia off the table. Those either. Hey, Jan. I mean, if the shareholders reject the first split proposal, might be a chance to trap the shorts in the area. Oh, that's what you mean by trap. I don't think the purpose of it was to trap shorts. Because I don't think there'll be any shorts closing until it's been approved anyways. And even then, it's not a certainty if they will close before it actually splits. I mean, you probably have some, but you know, they'll fight it. I don't think you'll get ones necessarily trying to close before they even vote, and I imagine it probably will get passed. I don't think it'll get denied. Yeah, GME and the crypto, that's right. Hey, Jan. Should, I'm curious if you screenshot your position, throw it in media. Your bed path position. GME's coming down here a bit. It's almost back to break even. Covered calls that opened today are up 11%. Charts looking like it's repeating last year, so GME is looking pretty bullish for the next 20 days or so. Very bullish. Too embarrassing? The heck? Just DM it to me then. What the heck? Embarrassing. I'm out here streaming to you, showing you guys how much the 6 figs I'm down. Come on. Spy ripping there. Something come out? Stopped. That was a big candle though. Our calendar looking like we have existing home sales tomorrow and PAL on Wednesday. Initial jobless claims on Thursday. But Wednesday, Thursday could be movers, and Bullard speaking on Friday to squash whatever happened to these 2 days. Services PMI, manufacturing PMI. Okay.
Against itself. It's an absurd situation, and an increasing number of market participants are realizing that and looking for alternatives. And it really highlights the appeal of these bearer assets that can be self-custodied and whose monetary policy is independent of these central bank pick the winners policymakers, which has had just an atrocious track record in recent years. So you know, we think the money base is going to start expanding again. That has a very high correlation with financial assets, especially Bitcoin. And we're seeing some of the anti-fragility that was promised out of this asset kind of show its colors right now.
Yeah, I actually heard some of that today about the money base and that, and some money printing. So we'll see what happens there. Ben, tell me about when you look at what happened with SVB, you look at what's been going on with this volatility. What else are you watching when it comes to crypto? You mentioned blockchain, for example, and how does that help to protect investors or customers?
Yeah, I think the thing about blockchain is it's open, it's transparent. I mean, it's basically a transparent ledger out there in the public for everyone to see. And I think part of what happened with SVB is there wasn't certain transparencies. For instance, a lot of their assets were going down, but they weren't marked to market. So their balance sheet still looked strong until it didn't. So I think blockchain does have a lot of transparency that perhaps banks and other institutions could incorporate to give consumers more confidence. 100%.
Yeah, and in the meantime, Matt, you were talking about these different central banks and some of the concern or credibility of these central banks, and that when people look at decentralized finance, they really think that this is at least something they can believe in somehow, and seems to have this global footprint. So what do you see going forward as the volatility in banks may continue, Matthew?
Yeah, it was really interesting last weekend when the banks were closed and USDC, the stablecoin, had to halt its convertibility. What we saw was an explosion of trading on decentralized exchanges. So platforms like Uniswap and Curve, they recorded their highest ever daily trading volumes last week, and more than $20 billion traded as market participants just looked to the platforms where they could actually transact. And that type of liquidity was very valuable. So, these banks are levered at, 10 to 1, 15 to 1. In the case of Europe, sometimes 20 to 30 to 1. You mentioned FTX and a lot of the leverage that came out of the system late last year. Those entities were not 10 to 20 times levered. And yes, it was painful, but that leverage has come out. And what we're seeing is folks pull their coins off of exchange, hold them in their own cold wallets where they cannot be seized. And there's just higher demand for that given the struggles in the fractional banking system right now.
Yeah. Well said.
Inverted head and shoulders maybe
Ben,
here
what
on
do
the
you
hourly.
tell folks that are interested in getting into this a little more than they have been? There's so many ways to do that. You give them ideas or warnings, Ben?
Well, I think everyone has to do their research and make their own decision. But I do think Matthew's spot on, whether it's with FTX or what we're seeing in the fractional reserve system. I think self-custody is more important than ever. So if you are getting into Bitcoin, I do recommend self-custody and making sure that you understand how to set up your wallets and you understand how to set up your keys. But whether it's fractional reserve banking or whether it's what happened with FTX and some other exchanges, I think self-custody is incredibly important and attractive right now.
Understood. And Matthew, one thing that is so different now in this day and age is the world of what goes on the internet and social media, and how you could say one thing. I know you were talking about Binance, and it just made me think about how also with FRC, for example, or any of these names, SVB, all you need is one person, one influential person to say something that may cause a little chaos.
Yeah, I think it's always been that way. Maybe the pace is a little faster because of the internet, but that's the unique thing about these digital assets is that they're native to the internet. It's a new way of capital formation that can bring people together from all over the world to communicate and set rules that are governed by code and not governed by 10 people in Washington D.C. who change their minds every 6 months and have set us off into pretty uncomfortable situations. So I saw last week that the Swedish central bank said that they need a bailout from the Swedish Treasury. A major Swedish pension fund was a top 6 shareholder in all signature SVB, First Republic. We think this is there's gonna be more central banks that need bailouts from the Treasury. It's fiscal dominance. It's the Treasury departments taking more explicit control of the central bankers. Regular people are not going to be into that, and Bitcoin should be well positioned if further bank share weakness prompts news flow like that.
Right, understood. Thank you both very much. Ben Weiss of CoinFlip, Matthew Siegel of Van Eck. An important conversation, especially as we've seen it running up the way it has. Thanks so much. Chat again soon. And thank you, friends, for being with me here on the watch list. I'm taking a look at FRC, which right now is down 41% here at $13.
Yeah, it just melted down after those halts.
We said we'll continue to watch
Back to where it
that
was halting
story
down
as
to.
there's this report that JP Morgan's Jamie Dimon is working on some strategic alternatives, a capital injection, working with the other banks on some sort of rescue plan. Thank you for being with me. I'm Nicole Petalides. I'll see you tomorrow, but keep it right here because Oliver Rennick and Market on Close next.
Oh my goodness, it's almost power hour? What the heck? Look at it, people. 3 minutes to power hour, that's crazy. GME is now red. Wow. Yeah, no, it's crazy. Really relative strength this morning on it, and then now it's just been pretty bad since, I don't even know. Europe close? Classic. Classic GME. You're waiting for it to hit your work? So you can get fired, or what do you mean? Yeah, I still have my my calls. Got tons of time on those. 414. I'll probably might close them tomorrow if we get a rally, or I'll just hold through earnings, because even if we sell off, I think if we hold that level, I think we're gonna pump. I have 4-6, but less time. I have 17 strike. You're all sorts of safe. That's dope. Just to see if you get to keep your job. Yeah, I think we'll rally after. Just based on TA wise, I don't know what the earnings are gonna have, but could sell off and then rally. But yeah, I think it's looking like it. BBBY coming back down.
Expectations of a dovish pivot by the Fed than what the market is expecting. The market's pretty locked in right now, about 25 bips. It's been that way for a couple days. You also see bonds selling off today. The 10-year future down there, down about 60 bips. But there's a lot of chatter that is much more dovish than what the market is saying right now, with some analysts, most recently in the last couple hours here from Nomura, expecting a rate cut of 25 basis points on Wednesday. Suffice to say, that would be a shock, as would a 50 basis point hike. But the 25 hike, or not doing anything at this point, would fit a lot of different theses and would probably give you the most expected range of outcomes. I think most people are looking for either no move or 25, but the market's telling you 25, and Powell has a history here of doing whatever the market tells him. So this could, of course, be an opportunity to do something different. We'll talk about that throughout the show here today. But back to the point about what's happening in the specific session here throughout the afternoon. With the NASDAQ a little sluggish today, a little changed. The Russell doing better.
Free cash flow positive last earnings.
A little bit of a shift where some of the optimism is creeping into the banks.
I don't think they're going to give guidance.
Some of the more cyclical economic
just not his style, I don't think.
That were beaten down the past week. Don't forget, it wasn't
Ace
just
Ventura,
financials.
I appreciate it, man.
Energy broke really
Leave
hard
no man
last
left
week.
behind. Jeremy, that's for
So
you, that
could
membership.
arguably connect the two as both cyclical trades and
Thank
the market
you, Ace.
becoming very fearful about recession or broader fallout in the economy from the bank situation. But what's interesting today is that even while the regional banks
Sorry,
are
I can't do
actually
it very loud
higher
right
and
now.
doing pretty well, Credit Suisse is down big, First Republic is down big, and so you do have a little bit
Like the
of
green box,
dispersion
Jeremy.
within the group. And I think that's
Like
actually
enable
pretty
gifting
interesting.
or something
It's only a
along those
day.
lines.
And it's not that much of a dispersion. If you look at the chart between KRE and FRC, the KRE does mirror
It's
the
a
overall
Yeah, they could do a share buyback.
Of First Republic, which of course is
I don't know
not
if this would be
good,
the right time to do it, though.
But First Republic breaking down to new lows on the 20-day chart today,
Given the macroeconomics,
is a distinctly different event than what's happening in the regional banks as a whole, which are trying to stabilize. Granted, they're stabilizing at
Jeremy,
the low
that
price
sub
of the
gift is
last
for
2
you
weeks.
if you
And
click the
granted,
green box.
they're making lower
Click enable
highs on the
or
chart
accept
as well
gift.
as a group.
Enable
At least
gifting.
the broad
Do
group
it.
is not
There
breaking
you
down
go.
the way
Well done. A
FRC is.
successful gift.
The market has basically
They
given
sniped
up, it
him.
seems, on First Republic Bank at
Bought
this
that
point.
moth out of thin air.
I am not the banking
Squashed
expert
him into
or
the
the paid Wall
membership
Street
plan.
analyst to tell you if that is the correct move.
Happy money crew.
What I can tell you is what the market is doing. And it looks like the market is basically giving up on First Republic Bank. Now, there's a lot of efforts being made right now to try and tourniquet the bleeding at that particular institution, but we've seen now several instances over the past week when the broad sector is firm, that stock is not. Today you have PacWest doing very well.
Nice
the
one,
company
Ace.
comes out and talks
Hold
about
my hand.
their
It's the
own
world of pure
access to
imagination.
liquidity
Is
and the
that like
amount
a
of
Disney
cash
line?
they have. That stock's having a very good day. So to see these distinctions being made, unfortunate if you're a First Republic bull or shareholder, but this is kind of the process we've been going through now for better part of a year and a half since the Fed started getting more aggressive and tightening policy. We've gone sector by sector, taking out the trash, separating the strong from the weak. And I think that's probably still the best description of what's happening here. The 10-year chart for Credit Suisse, I think, tells the whole story for that one. You can't even notice any of the macro occurrences or major events of the last decade on the Credit Suisse chart because it only goes one direction, down. Where's COVID on here? Where's anything? You can't see anything on this chart but a downward spiral. These are decisions that were made along the way that were poor by management. It was the market preferring to put its money into other financial institutions around the world. And so Credit Suisse now has to essentially get bailed out, taken over, whatever term you want to use. It's going bye-bye. UBS is going to buy them for literal pennies here, as it is now a penny stock. But you could have extrapolated that chart at any point the last decade and you would have ended up in the same spot. So I do think that's very important here. You want to watch to see if the broad banking sector follows Credit Suisse and First Republic, but some early signs of trying to get very specific right now and punish companies that perhaps deserve the punishment, but keep the other ones to the side until we get more information is arguably a healthy development here over the last couple weeks. And it's got the Russell up more than the NASDAQ. And I think maybe it's also showing up in the bond in the energy trade. Bonds are selling off. Yields are higher. Energy stocks are actually the best performer on the day. So a little bit of reversal from some of the economic fear that was very obvious in the price action the past 10 days. And that's how we're starting this week with the Fed on Wednesday. If you get another day like this tomorrow, Fed is going to be going 25. That would be my prediction. Because the bonds selling off, the market stabilizing, kind of looks like, dare I say, investors are trying to start to look past this a little bit. Let's bring in Kevin Hicks with me, the Fast Market host. Kev, what do you think? I mean, shreds of some optimism here in today's session, given the dynamic of what's leading and what's getting left behind?
Yeah, I think a calming, a uncertainty becoming less uncertain is folding. Now, you made a good point, Oliver. The banking sector, as defined by the Russell 2000 financial sector, is not indicative of what FRC is going through right now. And they've got a little different story, but the overall banking sector is calming slightly today. I mean, the financials, it was more green earlier in the day, Oliver, than it is now. It's gotten a little bit more mixed, but all things considered, you've got a Russell up over 1%. It was up more than that, as you know. Things are still a little dicey, but Oliver, if you have a white knight or a knight in shining armor coming to save or talk about your company, who better What more high-profile person to do it than Jamie Dimon from J.P. Morgan? Because the odds of some resolution other than bankruptcy for this bank just got a lot better. Not guaranteed, but it sounds like this $30 billion that they put up is going to turn into a cash infusion to get them through. Now, that doesn't necessarily bullish for the overall stock. They may have to dilute the stock. They may have to do several things. That's why maybe the stock is not acting that way, but the company might be, the overall bank might be more healthy, right, with this infusion. Jamie Dimon, clearly, they had their people look through the books here at FRC, and it's not as bad. It's worth saving is probably what they're coming to the determination as. So, yeah, this is getting interesting, but, boy, Jamie Dimon to the rescue. If you want to pick one person in banking to rescue, it's probably Jamie Dimon, Oliver.
Yeah, well, there were reports over the weekend that some of the planes landing in Omaha were looking for another bigwig to help them out, but haven't really seen any development on that front so far. What about the logic? Some would argue, though, Kevin, that Dimon and crew at the big banks are coming to help out because they're worried that maybe they'll catch some of the blowback in their own assets or their own clientele if they don't help some of the smaller banks.
Well, Oliver, you know that they will be under the microscope and heavily scrutinized no matter what they do. If they get involved or they don't get involved. Remember, Jamie Dimon got a lot of grief from how he acted in the banking crisis in 2008, even though he did a great job. He was one of the shining stars, and they still scrutinized everything he did. So that comes with the territory. If you're in a high-profile position like this, they're going to second guess and question, and they're going to assume if they're coming in with capital, they're doing it for pennies on the dollar, and there's money to be made. Of course there is, Oliver. That's capitalism. But I think this is certainly interesting, going to play out. It doesn't look like that FRC is going to go down the same path as SVB, even though if the further we get along here in SVB, their assets are even getting a little more popular as people start to look through the books. So, yeah, I think this is, playing out. I mean, we're in the early stages. I'm sorry, it's baseball season. We're in the early innings of this story, Oliver.
Okay. All right. Hey, also, we don't want to forget some of the other news flow as we're very focused on this. We don't want to be myopic, though. We've got Amazon with layoffs, and the shares are down 2%.
Maybe it doesn't matter. Maybe it'll rally anyways.
Kind of interesting today because
there weren't like many options expired in money, though.
Consumer or tech-oriented business over the last year and a half.
Maybe FTDs are due or something.
You've announced cuts. The market has rewarded you for it, but it's not doing that today for Amazon.
Yes.
Right,
18,000 jobs a while ago, now 9,000 pretty quickly after. But here's maybe why it's not as popular for the stock. Look where the cuts are coming from, Oliver. They're making layoffs in AWS. They're making layoffs in PXT and advertising and Twitch. If Amazon was laying off people from e-commerce and retail,
He's 92.
People would think that's probably just the evolution of the business away from e-commerce back towards brick and mortar. But they're laying off AWS employees, Oliver, and advertising. What is that saying about digital ad spend and the strength of AWS? That's maybe a little bit more alarming. As you know, AWS has been the lion's share of their growth the last couple of years.
Everybody's young when you're 96.
What they're laying off in what areas that might be concerning to investors, Oliver.
Okay. All right. Thanks, Kevin, for the thoughts. Important story, I think, that could otherwise go overlooked today. So good contribution here. There's also other big moves, too, throughout the day. We'll get to some of that throughout the show here. But let's keep talking banks and macro. Mark Madsen joins us as CEO and founder at Madsen Money. Mark, welcome to the show.
Great to be here.
Appreciate that. So should we be starting to kind of think about the light at the end of the tunnel, or is this crisis just starting to unfold?
Well, it's hard to tell. I mean, the markets are extremely efficient at taking all the knowable, predictable information and putting it into the price today. So largely only unknowable and unpredictable information moves prices going forward. But the lesson here is for investors. The lesson is you have to understand your risk. The banks, if they did it in 2008 and 9, they're doing it right now, some of them today, which is they don't understand the risk characteristics of their own portfolio. And what they've done is they've loaded up on a lot of long-term, high-yield type bonds.
You're to the moon
as
on-
inflation kicked
on
in, as
Discord.
interest rates kicked in, the prices have come down
Holy
on
crap.
those assets, so their balance sheets have gotten hurt. Then they start to sell and unload some of that stuff. And in Silicon Valley Bank, you had the depositors, who are largely tech companies, needed the cash because tech
Wow.
got hurt for a
That's
while
dope.
last year. And you had Amazon, you just mentioned, down over 20% last year. And so it was a perfect storm. And so now you see, and then you have the moral hazard of the government coming to bail them out. And this is the exact same thing that happened in 2008, 2009. It was a moral hazard then. It was a moral hazard now.
You have a pretty
And
good
if
cost
you're an
basis,
individual
honestly, for
investor,
that size of a
the
position.
government's not coming to bail you
Takes
out.
time to
so
build
if you
that
have
size.
long bonds, if you have high yield
It doesn't have
bonds,
to, but
if interest rates continue to
usually it's
go
not just
up,
on a
you're going
whim.
to continue to get hurt. So for investors, they need to have high quality, short-term bonds. And then they need to offset that risk by owning long-term equities. And most investors are panicking, they're selling equities, they're trying to buy long-term bonds, and they're doing the exact wrong thing at the wrong time.
It is kind of interesting that there were two real parts to this story, right? First, it was the pain in the tech-centric market that caused the clients to need the cash because all their tech and crypto got killed the last year. And then it was the interest rates lighting the bonds on fire and the unrealized losses, and then people's response to it is to buy tech in the long bonds. Like, what?
Buying all the dips.
How does that make sense?
They're doubling down on the thing that's getting people in trouble.
Brokerages is.
And for so long, I think Oliver, part of the problem is for 30 years, interest rates did nothing but just go straight down. But I can remember 73 and 74 when real interest rates were 14%. So they can't stay at zero forever. And you're seeing the result of them creeping back up. And as inflation goes up and interest rates go up, the Fed doesn't really have an option. As those things go up, they have to go up with them. And Powell has very little overall control of real interest rates. Those are driven by supply and demand. And you're seeing globally the same effect. You're seeing interest rates go up. You're seeing long-term yields go down. You're seeing prices go down. And investors have to sit on their hands and own equities, be globally diversified, don't double down on tech, don't own Bitcoin at all. That's the worst game in town.
Hey, they'd argue the opposite right now, Mark. They are loudest as I've heard them in years.
I know, for sure. Yeah, and
do they have credibility in this? Some people couldn't get their money out of their traditional bank?
If it was me, I wouldn't leave more than the FDIC guarantee of $250,000 in the bank. Okay. Personally, the banks are terrible investments, anyways. I mean, what is kind of they charge you 24% on your credit cards, and then they give you a savings account or a CD at 4%. Boy, talk about highway robbery. Having money in the bank long term has never been a good idea.
Okay. Mark, so it seems like there is a couple of really interesting points here I want to home in on. One, which is people doubling down on the stuff that kind of caused the problem, which you're saying, look, don't do that, Bitcoin included, tech concentration in stocks included. The other part here about the financial institutions doesn't sound like you're a big believer of them as an investment case for the long term anyway, but do they have the type of systemic risk like they did in 08? Are we gonna, because then we found out, well, everybody had exposure to essentially stuff that was really bad and mislabeled. What's the key difference between now and then? To me, it kind of seems like it's the labeling. Everybody thought those assets were good, they weren't. Today, nobody thinks that all these bonds are particularly great, do they?
I don't know. I mean, I think some people actually do, but they'll find out if interest rates keep going up and their values keep getting hit, they're in for a bad surprise. The difference in 2008 and 9, and remember, for investors, guys, even at the end of 2009, after the crash, stocks went up. The S&P before the pandemic hit went up 450%. So if this thing goes, don't try to predict this thing how bad it's going to get. If it goes down, rebalance your fixed income, buy it as it goes down, and then eventually, long term, the thing goes up. How bad it gets, I don't know. But how it's different this time is a little different, because before it was systemic and the mortgages were so toxic, and then we're packaging these things up for investors to own. They would repackage them. They knew they were dog investments. They put them together into mortgages, securities that then they issued to investors. And so the investors got killed on their mortgages. People couldn't pay their mortgages because they were giving 100% with short-term arms. You didn't have to have any assets to buy real estate back then. And it was a contagion in real estate and mortgage-backed securities and banks all at the same time. I don't know where this thing goes from here, but I haven't seen anything like that yet.
Okay, well, a couple important pieces of advice. For now, we'll continue the conversation. Again, Mark, thanks for the thoughts.
Pleasure, Oliver.
Okay, likewise. Good combo. Mark Madsen, CEO and founder at Madsen Money. All right, well, if you want to take Mark's advice and avoid the banks, our next guest has got a product for you. That's the way it works out. Coming back, we'll talk with the team at Van Eck with an ETF that is sans banks.
I'm gonna read some stuff about some of the stuff I was mentioning though. It's on it right up here. The QSIP change, kind of already talked about that. But yeah, per this post, PitchBook states that the BBBY is in talks with Sycamore Partners to sell BBBY Baby. As explained, this post involves spinning off BBBY Baby into a publicly traded company. Nasdaq has a listing requirement of at least $4 a share price, and this RS will help with that. So that was one of the reasons I was thinking they could be doing the reverse split. Like I was saying, for like a carve out or spin off, you have to have the share price. It has to be at a certain price. If this deal goes through, is extremely bullish, in my opinion, as it will provide the company with $1 billion plus in liquidity. Is easily sufficient to last more than a year. And if you did get that, I think we would probably, I'm assuming BBY shareholders would get BBBY Baby shares as well. I explained this post in this comment. Increase the number of outstanding shares reported in the preliminary proxy statement SEC filing is just to account for all the underlying common shares for the issued convertible preferred shares and common stock warrants, irrespective of whether they have been converted, exercised, and since we have not seen an 8K SEC filing reporting their conversion exercise, those common shares have not yet entered the float yet, and hence are causing no dilution. Yeah, this is what I'm saying. People are thinking, oh, it all diluted. We have no evidence of dilution. We just saw the filing that talked about reverse split, and it showed the outstanding shares is more. So yeah, maybe it's combining all that, like he's saying. I'm not sure, but to me it wasn't like, oh, that means they've diluted. So yeah, a lot of FUD came with that quickly the reverse split FUD, and then the dilution, and then they backed it up with the sell-off. So that's all you need to scare people. Since we as shareholders need to hold real shares in the record date of 3/27 before the special shareholders meeting, we need to confirm with our broker that we are in fact holding real shares. Any synthetic shares held in our account need to be replaced with real shares after the corresponding FTDs are closed out. I called my broker and confirm this. The broker cannot or will not confirm this. The alternative available to us is to initiate a DRS transfer, and after transfer completes, the shares can begin be transferred back to the broker via an asset transfer request to retain capability to limit sell shares. So just move it out and back in to confirm they have real shares. I'm not going to do that. I know my shares are probably being lent out on my one account because they're on margin, so I won't get all the votes on there. So yeah, there you go. That's one of the reasons for the higher outstanding shares and potential for the reverse split. I haven't messed with my mind. I'm talking a little quieter. Is it too quiet? A little quieter, a little closer maybe.
Market, while leaving the banking, insurance, and other financials out of the mix.
So the genesis of this was sort of post GFC. Do you have this formula for every sector? Do you have like a market without sector 1 through 10 and the other 10?
No. This is a very focused strategy in our lineup. You know, we we think it fits very well within the broader preferred securities market, because that is an area of the market that investors have flooded assets into for the better part of the last 10 years, as they sought investments that provided some sort of yield in excess of what they could get through treasuries, et cetera. And now that conversation has changed a bit in recent periods. But you know, the banking sector, insurance sector dominate the preferred securities market. Banks can issue preferred securities, and they count toward their capital requirements. So it's an attractive security for banks to issue to raise capital. And so they tend to dominate that market. So investors have looked to that space in the mutual fund and ETF wrapper at length over the last decade, and we've seen money flow into that space. And frankly, I don't think a lot of investors are aware that financials are so prevalent in that specific asset, preferred securities. So you see these multi-billion-dollar funds, and investors aren't quite aware that they're getting about 70% financial securities in these preferred aggregate indexed products. Banks specifically accounting for close to 35% of the total market. So there was very much a place and demand, as we found.
You hear an echo just when I'm
to
talking?
exclude financials and provide some of that yield characteristic that comes with a preferred security structure, while avoiding exposure to many of those areas of the market.
Interesting. So that's an important distinction. This is not like the S&P 500 minus banks. This is preferred securities, a universe that has a lot of financial representation. And so you're saying we take that out for folks who specifically want this asset class exposure without it being overwhelmed by banks. What are you seeing here the last couple of weeks in terms of flows?
Yeah, so it's definitely come up quite a bit in a lot of our conversations. We're discussing with investors of all types bank exposure portfolios. They want to know where they're seeing exposure, and that's come up very much specifically in this space because banks are so prevalent in the market. So we've seen some inflow into the preferred securities financials, PF.
Just been talking about the news. I just unplugged it and plugged it back in. Maybe it's better. I'm not sure.
Play out as you would expect over the last week.
There's like a fan running behind me now, which maybe is the static. I don't know why you get an echo though.
Preferred securities market was down 3 to 4%, depending on the slice and dicing that you do to look at that market. So, you know, we launched the ETF back in 2012. It has its own merits, you know, beyond diversification, the yield characteristics, the duration profile of preferred securities outside of the financial system are very attractive. And ironically, the banking sector has been pretty stable, you know, all things considered, since the global financial crisis. So we haven't really run into one of these systemic issues where there's fear.
No, yeah, I like to hear it. I appreciate the feedback.
System until now,
it's maybe since the air turned on.
It's come to
turned on like
so we
an hour and a half ago.
Investors to
maybe you're probably hearing the static from that little background fan. I don't know why I'd give you an echo though. That's strange.
Understand what you own in all of your products, and many investors have found over the years that, you know, financials tend to find their way in every slice of their investment portfolio, whether that's their equity portfolio, you know, bond portfolio, and then if they do look to preferred securities, they should be aware that if they're getting a broad aggregate exposure.
I mean, the fan dry out my tears.
Going to get quite a
blasting
bit
in my face right now. It's actually dehumidifier.
Brandon, just real quick, the kind of sliver of the portfolio in which this fits, is it bonds, is it stocks, like from an allocation perspective, preferred equities, are they somewhere in the middle?
Yeah, it's not somewhere in the middle. I mean, we think
maybe it's when I'm talking quieter.
Fits in the bond side of the portfolio.
I don't have the gain on auto though. It should
exhibit
manual, so it shouldn't be trying to
features.
Pop the gain up on quiet.
You know, on the whole, they tend to be interest rate sensitive. They have you know, these preferred securities pay off a coupon. There is some equity market volatility involved because they are exchange listed. The preferreds that find their way into these types of portfolios, like PFXF, tend to be, you know, lower par values, $25, $50, $100 par value. So there is some equity volatility.
Have to cut off before end of day today.
But you often are being compensated
through
the
video,
capital structure with a higher yield than a company's equity or their traditional debt securities.
Very helpful discussion. Thanks for the details, Brandon.
But I shared a bunch of stuff on Discord.
Sure thing, Brandon Rakshosky.
Joining us from last couple days. We ran over some of it today.
XF.
But if you didn't catch it, just check out the Discord and Happy DD.
XF.
A lot of interesting information there.
I've got two bullish commodity trades for us today. And a bearish chip maker trade. All right, I gave some of it away. Still the thunder a little bit from Tom. We're going to talk some options when we get back.
I'm just going to try and separate noise from your voice. Yeah, I don't have any noise. I don't have any noise canceling stuff going on. Not sure. I know the background noise doesn't help. Regardless. Cheap SPY options. Yeah, have you noticed IV being pumped? But when you had cheap SPY options, you probably had small returns, so it's all relative. They got more expensive, but you're also getting bigger returns on it. Here's a little lesson in covered calls. Sold these this morning. I actually got a really good timing on my sell. But just weeklies at 18 strike, they're up 10% just on the day. So this is just with, if you had that in shares, you'd have to have 1,200 shares and you could sell 12 covered calls. Could have made 114 bucks. Just today, farming theta. And I sold them literally like right here, so got a good sell on it. But it hasn't come down a whole lot. You know, even just trading sideways, I would have come up some in value, or would have made money on it, basically. SPY coming up here. GME maybe bouncing. BBBY not getting a big move today, except for the downside. Has stayed green. 0.5% up. Green is green. Jeez, Ace, you bought 25k more? How many more purchases are you gonna make? Is this your last pickup? We're gonna do a couple more. Probably one more. Dang, dude. Maybe the next 25k purchase, you'll get 50,000 shares. Don't wanna be too bearish, but yeah, I mean, a lot of stuff's changed today, so maybe that's the good sign. I don't know. Us breaking through the all-time lows is not great, but more volume, no bar coding, very interesting. B2. Making me want to average down. Ugh.
Is it's up pretty significantly and outperforming this name.
Okay. It's a good reminder that Marvell's been pretty soft, pretty weak, as others like NVIDIA have really taken back off. So there has been some, again, distinction even within the tech sector of what's been working, what hasn't. That's your only bearish trade today, though. You got two bullish trades in commodity-centric names.
Lots going on there in the commodity space. Levels that we haven't seen for a year, 15 months, and stuff. So yeah, lots to cover there.
How about we start with Oxy?
Oxy.
Warren Buffett's favorite, rough 4 or 5 months now, almost 6 months.
Yeah.
We haven't seen a high in Oxy basically since November. It got pretty close. The technical high is in August last year. We're almost coming up on a year.
Yeah, that was one of the big winners last year as Buffett accumulated. He's up to just over 22% of the outstanding shares in there. He continues to buy it on dips, but you've got crude oil back below $70 a barrel. So that correlation trade that a lot of people relied on through 2022 isn't playing out at this time. Now, oil did reverse because overnight, in the overnight session before the open, crude oil did hit 15-month lows below $65 a barrel. So, yeah, there's demand questions out of China. It's not ramping up as much as a lot of people expected. Price target hike just on Friday and from Barclays in this one, up to 78 from 70. And you always have that in the back of your mind that Buffett owns a big chunk of this one. But if we do get that rebound in crude, a lot of people expect, I don't know if it's going to come true, but you would expect Oxy to probably outperform there. Still down about 5% on the year due to the fact that crude's fallen. But somebody taking a bullish stance in here, thinking they're going to catch maybe that dip that we've seen so far this month. They bought 20,000 of the March 24th weeklies. These expire in just 4 days, so really short-term positioning here. The 60 strike calls. They paid 85-cent debit on average for about 20,000 of those. So the break even of just under $61 a share over the next 4 days. It's only about 3% above the current share price in there. But I think a big turnaround here in crude oil. We hit that 64.36 a barrel level in crude. Now trading, just under $68 a barrel. So pretty good rebound in the commodity space. And we talked about that correlation to Oxy.
Yeah, the crude move last week sort of got overshadowed, but it was a big one. Now we're in the reserves region. We should be hearing something about the government buying up oil. I mean, this is the level.
It's at its lowest level since, in 4 decades, the SPR. So.
And they said between like 60 and 70-ish or something. Don't quote me on that. That's roughly.
That's basically what they stated a couple months ago, that they would start buying it when it gets down to about $70 a barrel.
Yep.
And it's been below $70 almost for a week.
Yeah. All right. I mean, it doesn't look like that's happening right now.
No.
Okay. You've got a trade in Barrick Gold, GOLD.
Yeah, shares are up 13% this month. Gold's been rallying in the overnight session. Also for gold, hitting 1 month highs above $2,014 an ounce there. So.
Gold's doing a lot better than Barrick.
Yeah, a lot of yeah, it is, and I think that's what somebody's setting up for. But this is another one of those names that's tightly connected and correlated to an asset class. In this case, being gold. A lot of people are using this for safety. We've seen the dollar today hit 1 month lows. Lower dollar typically equates to a bid in gold. So we've seen that. It did break through its 50 and 200-day moving averages over the last week, so it's got some momentum to the upside. I mentioned up 13% this month, 6% so far this year. So it's underperformed the actual gold contract, but at the same time, if you think that we're going to see some more funds and more money pouring into safety plays like gold, Bitcoin, we've already seen that thing rally nearly 70% so far this year. But gold's one of those that's on a lot of people's radar. And a trader in there, I think, taking a medium-term outlook here as far as unusual option activity. They bought over 20,000 of the June 21 strike calls in there. Average debit of only 60 cents. They're not paying a hefty option premium because these are far out of the money to the upside. The break even for this trader, 21.60 over the next 88 days. That's 18% above the current share price of Barrick Gold. Over 100,000 or nearly 100,000 calls have traded on the day, only about 11,500 puts. So a lot of skew there as far as volume flows into the call side there, expecting that maybe gold does continue to move higher and get above those 1 year highs again and continue moving to the upside. And Barrick Gold looking to piggyback on that. And this trader thinks so over the next 3 months or so.
Okay. Yeah, it's a pretty interesting trade. If you think that the gold move here is going to hold, Barrick looks like a pretty good way to express that because the miners are definitely behind. We'll see if gold can hold above 1950 because it's had this big U shape from the high that it was at in February, sprints right back up to 2000, makes that 1 year high. If it comes back down, it holds 1970, 1950, that'd be hugely bullish, it seems, technically.
And watch the dollar. Dollar continues to weaken here. That's going to lend support, but then also you have to.
Rates are going up again today, though.
Rates are going up today. That's kind of put a cap into those gains that we saw overnight in gold. But this is one of those. Yeah, this is one of those asset classes that if the market is still continues to be volatile and we see some more downside for equities, that's also a boost for gold.
Okay. Thanks, Tom. Nice trades. Interesting ones. When we come back, let's talk some games. Jenny Horn is going to run us through a few stories, one from Microsoft, one from Netflix, both about the gaming world, getting away from the cheesy shows, whatever these are, and into some more nerdy stuff here.
Watchlist can help you keep track of securities you're interested in. To add a watchlist to the left sidebar, select the plus sign, then Watchlist. When the default list appears, select the name box, then Create Watchlist. Enter a watchlist name. To begin adding securities, enter a ticker symbol in the symbol box, then select Enter. Continue adding all the symbols you want in your watchlist, then select Save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to
BBBY is flushing. Look at that. Look at that. Thanks, Ace. I appreciate it, man. Blue Owl. That membership's for you, dude. Click on the box. Dude, look at the flush on it. It's gonna hit that 75 cents. It's going for it. It's going for it. Smith or the Blue Owl. Blue Owl, you're an OG. You should definitely become a member. Ace Ventura just gifted you a membership. Do it. That's crazy. This definitely feels like a shakeout. You would have thought like the CEO resigned or something. Is there news I'm not knowing about? No. No news. Ace, what'd you get your average to now with that last purchase? One of you great named dudes. Robert, Smith, Blue Owl. Click on the free membership, enable gifting, receive the gift, green box. Do it. Ace he can't go on with you non-member chatters.
The ego on you.
There you go, Blue Owl. Blue Owl's been around for ages. Well deserved. You can thank Papa Ace, Blue Owl. Look at that flush through that low, though. Holy smokes. That's just increasing the volume, though, which in a sick way kind of makes me more bullish, even though it's red. This volume increasing today. 59 million. A lot more than yesterday. Sorry, 59 was yesterday. Today's 81. Woo. Touched it. Well done, Blue. My boy. This is setting up for the most epic RSI divergence. Just need some green. Need a green day. About 15 minutes to close here. Bed Bath green candling out of this range. Now it's looking like a double bottom off of that 77. With just a wick down to 76. Gotta be less than 2. I'd imagine. I mean, I don't know how many shares you held before, but green like this, chat.
You know, Sony, Microsoft, but I don't think it's necessarily like, you know, that trivial where it's like, you know, choose your own adventure Netflix.
Do you see these great people where we are right now?
They did
Are they in the room with us?
We'll see. I'm a little bit more excited for the additions with the own app store from Microsoft, and that's going to be cool because we're going to get a bunch of sort of mobilized versions of some of their high quality gaming titles. That should be pretty sweet. All right, thanks, Jenny Horn. For the video game update, Chris Robinson has got the crude oil and the commodity update. He's the managing director at TGM Institutional Services. Chris, when are they buying crude for the reserves? Aren't we supposed to be doing that right now?
That's above my pay grade, brother. Yeah.
They said like $70. We're below it.
It was 67 to 72. Now we traded just last week. I think a gentleman there said, you know, we're going to hold off. So, so far they're getting paid to wait, right? My only fear is that they wait too long, and you know, at some point, you know, they're short from $95. So lucky for them, 180 million barrels. Then they sold a little bit more, but their average sales at $95. We'll see. You know, we hit 64 today. We're back to basically where we were at Christmas, you know, 15 months ago. So tremendous sell-off. You know, at the end of the day, why are we doing that? Well, it's not because of, you know, probably good news. The whole world's betting that we're going to have a recession. That's really what's going on. And you know, we really saw a big run when we couldn't get through 80. Then we started having the banking issues, et cetera, et cetera. And I think a lot of people thought that China's reopening was going to be a lot more vigorous for all commodities, and it really hasn't. It's kind of betrayed quite a few rallies from cotton to corn. Corn hit 8-month lows, and finally, China hadn't bought corn from us in ever. They've been waiting to buy it from Brazil. They came in but they bought around 16,000 contracts, around 80 million bushels of corn, which sounds like a lot, but they need to do about a half dozen more of those to catch up to where they were supposed to be. So silver lining there, you know, we have a little bit of a bid there from China on the dip. But yeah, crude oil it's funny. Crude oil is the canary in the coal mine. I know that's a trite expression, but it really has been for all commodities. It seems to be, you know, as crude goes, people will adjust all their other positions based on their crude bet.
WTI then, if it does start moving higher, regardless whether it is a U.S. government buyer, I guess then we should take that as a sign maybe the economic fallout from this bank situation could potentially be somewhat limited. I mean, is crude that powerful of a macro tell?
Yeah, I think it is. I mean, you have to remember, this time last year we were at $130 a barrel, and certain experts who shall remain nameless were talking about how we could go to 200. It's just, this goes to show you, you could have all the brain power on the planet, and if the market wants to do something else and the way things rolled out, you know, here we are, you know, sub 65. So it's very dangerous to trade the headline just because somebody has an article, you know, and has some PhDs after their name. That's why trading is so difficult. There's no, it's not a math formula. It's everything came together. And yeah, what's the big fear? Well, just take a look at the 2-year note in the past 3 weeks, right? Went from over 5% to 3.8%. There's your flight to quality. When that happens, everybody de-risks and runs away from anything. And you've seen it impact a lot of commodities. The funds had made a lot of money in the last 15 months. This is going to sound strange, but they were long cattle.
Got 10
they made
minutes.
a boatload of money in cattle. Now cattle's starting to
10
roll
minutes
over.
to go.
So it's all interconnected. But yeah, at the end of the day, it comes back to what's going on with crude. If they can't sell enough crude, then it goes down kind of like dominoes.
The bull flag on the daily is looking
other commodities. So you've had
pretty solid.
No one's selling gasoline. That looks strong. What's up with that?
How about natty gas? Natty gas is back down.
Yeah, natty gas.
Step in and be a hero and try and buy the bottom. We've been talking about natty gas forever.
Yeah.
And yeah, so all those related, related to crude, excuse me, they really do key off that, and that's the way it's been here for the next time. So we'll see. If 65 holds, maybe a week from now we'll be talking about when are we going to see 80 again? But that was a big turnaround. A lot of people were not properly positioned when we were dancing around 80 there, and you've had everybody this cleanse. And the thing that spooked everybody, for better or for worse, was the banking issue, especially over that weekend. People were, really, you felt a lot of fear then. And when that happens, people don't want to own anything. They want to own cash. And you saw that rip to the commodity markets.
Okay. All right. Something to think about, the commodity domino and what it tells us. Thanks, Chris Robinson, Managing Director, PJM Institutional Services. When we come back, let's get our Schwab panel in here to set up this week and talk not just about the Fed, but global central banks as well. We'll be right back. 10 minutes until the bell. Stocks right now are looking firm across the board.
Hitting that double top again. Actually, this time. See if it blows through it. BBBY looks like it double bottomed again. Looks like that back here, but then it flushed, but this might be a legit one. It's a pretty solid looking candle out of there. He's up 1%. Okay, well, we went over some of the DD on stream today. If you guys missed it though, check out, I got a happy DD on my Discord server. Thanks, Quint Tarantino. Want Tarantino. I get it. Ace Ventura is the GOAT. 100%. I miss my childhood. Doesn't like Natty Ice. Van Wilder, my college beer thesis. A northern thing? Natty Ice? I don't think so. Ace is down in Mexico. I've got to cut off here, guys. You guys have been awesome with your support. 50 likes today. Give yourself a like on the back for all those likes. Ace Ventura, much appreciated, man. The support is well received and not unlost on me. I really appreciate it. Very, very generous of you. Again, not letting a single non-member get by the threshold. Thank you for your dono today and all your guys' support. Still holding today. I'm not gonna do a recap, but basically I just sold covered calls in GME. That's all I did today, and watched nat gas go down and go flat, and watched BBBY. Quite the sell-off. However, the price action today on Bed Bath is so different. I'm kind of excited for that. Wasn't barcoding at all today. Volume was picked up, but then the L2, the order book, is very light. Much fewer orders on the bid and the ask. So something happened, new algo, or something is going on. But maybe that's the sign of the final bottom. I'm not sure. Volume is up though, and it's looking good. Any bit of a green day gap fill tomorrow or the next day, and we'll be on a significant RSI divergence. This one back here, remember I was like, it is one, but it's not great. And then as it started to flush, I'm like, no, not looking good. But again, today's was on news in quotes, not really because the news was bearish, but they used news to move the price one way or the other. Tomorrow I'll be streaming, same sort of deal. So sub up, like up, comment down, happy money sticks around, and hit the notification bell. We'll be live tomorrow, and then about 3 o'clock I'll end that stream and start a new GME earnings stream. So it'll just to kind of organize it so it's a little more clear. And then we'll stream the earnings call and look over all the financials on GME. And yeah, it'll be fun. It'll be good. No more grays. Members only. Thanks Eli, thanks Christopher, thanks Grumpian. Thanks again Ace. Ace Perez. Members only stream. We're almost there, that's true. Thanks Jan, thanks my next pair. You guys have a good one. Hang in tight. Nice little double bottom here. Down 20%, but yeah, we'll see. Some big dip buyers. See you guys on Discord, see you guys on Twitter. Thanks so much again. Good afternoon. Peace out.